throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show, Tasty Live. Good morning.
The original millennial takeover. We're putting the band back together.
It's been a while.
It's been a while.
It has.
It's been a while.
Wow. Throwing it
Been a
way
while.
back.
Throwing it way back.
I mean, that's a millennial classic.
I know.
Yeah.
It's a good song.
Yeah.
Where have you been, Mikey? Miguel?
I have been astray in Montana.
Doing a little spring
One of my
break
favorite
action.
states.
You love Montana.
I really do. I think it's my favorite state.
You know what? Utah's my favorite state.
Yeah.
Yeah.
Similar
the
story.
vibes. The
Yeah.
Vibes, man. Yeah.
It really is. It's just the energy.
The energy.
I do love
You know
Montana,
some
but
stuff went down about 200 years ago. Some stuff went down.
it's like some dinosaurs and some mountains and just a bunch of other stuff. The coldest I've ever been has been in Bozeman, Montana.
It's very volatile. So if you don't understand implied volatility or volatility, just go to Montana. Because it'll be 60 and sunny, and then 3 hours later it'll be a blizzard and 20 degrees.
You go the like American primeval.
Yeah.
That's where your
Yeah.
brain goes
Uh-huh.
for the mountains. I go to like the air is so crisp.
Oh yeah.
He goes to Aspen. He's got a taste of the good life. He's been to Vail.
That's true. That's
He's
true.
been to
Place
Breck.
called Aspen.
He's been to Brecky.
Yeah, I did go, straight to the upper echelon.
You did.
But no, there
activity.
is actually scientifically more pure than even Colorado. There's
Really?
a specific moss that grows on these trees in Montana, and it can only grow
And it emits
under
extra
the-
oxygen.
Yeah. It can only grow under the most pristine air conditions. So there you go.
There you go.
It's actually
Okay. I gotta get out to Montana, get some of that Montana
So where
air.
were you in Montana this time?
Big Sky.
Big Sky.
Yep.
And there's a resort there, the Big Sky Resort.
Yep.
And that's your favorite. How many how many acre? Like how many runs? Like how big of a resort is it? Do you know? Like
It is very big
okay.
and vast. The main,
Is it the biggest in the state?
yeah.
Yeah. Okay.
It's the main attraction is this. They've actually done a really good job of like getting rid of all the stuff that everyone is upset about in Colorado or elsewhere. So like
Like what?
they've got multiple 8-person chairlifts.
Oh, high speed.
And
Like
high speed 8-person chairlifts.
Great.
Like all the pinch points where there's normally lines, they have 8-person chairlifts. So like there's no line.
that's
Why
nice.
would people not like that?
No, people do like that.
Oh.
I'm just saying.
Oh.
the
other
long
places-
lift lines in
yeah.
Colorado.
Other
got
places,
it,
if
got
you have
it.
a 4-person or a 6-person, like you're waiting for 20 minutes just
Yeah.
to get on the thing.
Yes, I don't like to wait in,
Yeah, no.
in
Why would I
Aspen
wanna
with
wait?
the peasants and the line.
Yeah, you have ski in, ski out privileges.
Yes.
But yeah, they've added a couple more gondolas too.
Okay.
So it's just very efficient now. And yeah, it's my favorite place.
That is nice. And then, so you did get some fresh pow for one day, but because snow conditions over the west of the U.S. not great overall for lots of places. Like they were skiing in bikinis in Colorado. Nikki perks up because it was 60. It was like 60 degrees on the slope. So
Yeah, it was crazy. I was literally like taking my gloves and helmet off every single run at the bottom, and then just like
because you're hot.
suntan,
Yeah.
because you will get the half and half. If
Yeah.
You don't have the goggles, and it doesn't look like.
But yeah, it was very warm, and spring skiing was alive and well out there.
Was it busy overall?
Yeah, it was pretty busy.
Yeah.
Yeah.
I've heard that, like, because there hasn't been a lot of snow in Colorado,
In the west, everywhere.
that the season has been a disaster.
Yeah.
So, but that wasn't the case there.
No, it was still busy. I mean, you can do other things too. Like at the base, if there's no snow, you can do a bunch of other stuff.
What's your shooter of choice?
My shooter of choice.
Yes.
In terms of like a shot ski.
Well, yeah, on the lift. Are you a fireball guy?
Yeah.
Or you go,
Fireballs. Yeah.
Ugh.
Yeah.
Ugh. Make better choices, Mikey.
If I'm gonna do that, it's gonna be a fireball, or you just get a beer at But actually, I've learned that I don't like to drink while I'm snowboarding.
Okay.
Because then you're just like, you get lethargic, and then
It's already the altitude too. Like it's your body's doing too much.
That's the whole point. A couple shooters in you, all loosened up.
But they did implement this thing called the igloo, which is really cool. I don't know if you saw it on my Instagram story, but I can pull it up and show you. But it's literally an igloo that they built that's like twice the size of this room.
Huh.
And outside of this, they have an outdoor bar, a DJ, and then you go inside and there's like lights like this, like purple lights, green lights. And then you can walk through, there's like 4 tables and then a bar in the back. So they built this like literal indoor
Hangout.
temporary club.
Oh, that's cool.
It was wild. But yeah. But yeah, they have après-ski up there. Like you go up the gondola at the base of the open bowl. And there's like an après-ski area there where the igloo is. And then at the base, they do another one. So it's like all day. There's just music playing. And
See, that's a vibe. That's fun.
Yeah.
And you said you had the best Thai food you've ever had
yeah, I don't know how that happened. But
in Montana.
Well, Mikey,
Girl, what?
That's the first thing he does. Is he, like on his way on a trip is Thai food, pho, sushi.
Yeah.
Those are usually
Ramen.
He'll have a full like diagram of where the best spots are.
Look at you knowing your work wife.
Yeah. But no, this place called Thai Basil. I don't know how, but
You get a Thai basil.
I went there
chicken?
multiple times.
Like
Yeah,
Thai
I
basil
had it all.
chicken.
It's still shocking to this day.
Shout out Thai basil.
Shout out Thai Basil. Yeah.
In Montana.
In Big Sky,
Sky.
Big Sky, Montana. There you go. All right, that's cool.
Yeah.
How about you, Nikki? Was it league last night?
No, we've had a disaster of a winter season.
Oh no.
Did not make the playoffs.
I thought this was the spring season. I'm so confused.
Spring season. But I don't know. I get confused because like it's still winter out for me.
It's gonna be warm today.
Yeah, today. All right, whatever.
The sun is staying out longer, which is very.
That is nice.
It's pleasing to my soul.
Yeah, but it's still freezing.
How about this, boys? Literally opening day for our Cubbies. Go Cubbies. Up north tomorrow, there.
Hell
It's
yeah.
opening day tomorrow.
Yeah,
Tomorrow,
yeah.
there. Yeah, hey there.
There's a game
Go
tonight.
Cubs, go.
Yeah.
Yeah.
It's the Yankees versus San Francisco tonight.
Okay.
Kicks it
So
off.
it's opening day today.
Well, tomorrow's like opening day, but I guess tonight's opening night. We'll call it.
Okay.
Because it's just one game.
Yeah.
Yeah, it's wild that we now have so many sports. This is the Goldilocks zone, right?
Yeah.
We got the Masters in
We
2
need
weeks.
football. We need
True,
football.
football.
back.
Yeah.
But Masters, yeah, that is positive. It's good. We're already talking about, are we going to play some golf on Saturday? Like we're getting.
I'm playing golf on Saturday. I don't care what the
It's
temperature is.
gonna be cold.
Mike goes, it's gonna be 50, and I look at my app and it says like a high of 47.
Yeah.
But the feels like temperature's
That's what I'm
gonna be
talking about.
37, my guy.
Yes, exactly. He's like, no, but look at 10 a.m. or like 11 a.m. I'm like, it's like 38 degrees.
Yeah, it's 40 degrees with the sun out, so the real feel is 52
No.
degrees.
No,
I'm like,
you're going the other way.
He's going the other way.
No.
There's wind, my guy.
Yeah, I'm trying to say that. We're like, if it's 50 degrees outside, like temperature wise, and sunny, so it feels like it's like 55, 60, I say, okay, fine. If it's 40 degrees outside and the sun is out, so like maybe it feels 45 degrees, I don't know if that plays.
You just gotta do it for just go to the dome. You guys love the dome.
It is really nice.
Yeah,
But I need a full round.
Yeah.
I'm just at that point where I just don't care. Like it could be freezing and I'm just gonna go through it.
bundle
It's gonna be
up.
great.
Yeah.
Bundle up, wear a beanie, and as long as the sun is out, like that's really what matters.
There's nothing like that sting when you take a little extra dirt on an iron.
Your hands are numb.
Your hands are numb, and you get that kind of like
it reverberates up your arm.
you
I can't
feel
wait.
that.
I can't wait.
Yeah.
Can't wait.
Yeah.
It's gonna be great.
Yeah.
Oh boys. All right. Well, good times all around. Mikey will be holding it down for the rest of the week. Nikki, have you checked in on your dad? Does he have any comments about the markets and the massive swings?
Yeah, I'm at his service.
Okay.
As his
Concierge.
as his concierge son. He will text me and be like, "What the hell just happened?" That was kind of the text yesterday. So yeah, he's watching the markets. He's watching the markets, but he likes to have his time off. He does his thing. He gets on the boat.
Oh, that's good.
Yeah, so he's relaxing. Much needed time off for him.
Well, if you are relaxing and you still have us on, maybe rethink your priorities. But we're glad that you're here, and thank you for watching.
Yeah.
We have a great show for you today on this wonderful Wednesday here on Tasty Live. It's Assume the Position Wednesday at the top of the 8 o'clock hour. We have an options jive, why IV overstates reality, and how traders profit. Nikki, break it down.
It's a pretty good one. So we're looking at implied volatility pre and post COVID. And just kind of measuring how many times it came in, the realized volatility was less than the implied volatility. It's a question we get all the time, like how is volatility constantly overstated? And so we're going to show different 2 periods of time where you had pretty high volatility and big moves over the last 6 years, and then a period of time, the 15 years prior to COVID, where there was a lot less happening. And just showing implied volatility and that, how often it is realized with less volatility than what is implied.
Perfect.
It's a good one.
And then we have What's Your Assumption at around 8:40. This is where viewers submit their trade ideas, but they have a directional bias. And Mike and Nick are going to do some viewer-submitted trades. The market is all over the place. It'll be interesting to see what the viewers came up with. And then 9 o'clock, we have a little tasty extra airline stocks.
With TP.
Yes.
It's going to be
It
interesting.
says airline sticks on my schedule, but I'm taking a leap of faith.
Stone.
I am taking a leap of faith and guessing that it's stocks. So.
Yeah, no, nothing to do with sticks. But
okay.
We'll have TP on. Fan favorite TP.
He is doing it. He is become an influencer. He's making YouTube videos for us now on the reg.
Fans coming soon.
Yes, he's been hosting with Liz.
Yes.
He's doing cherry picks.
Beautiful.
I love this for him. It's very exciting. And then at around 9:20, we have live from the trade desk, Quentin in the house, counting down all the top trending tickers over at Tasty Trade, and Glenn G Money with the FX side of things. Check out our Tasty FX products, which are pretty good. And because it is Wednesday, Liz and Jenny are live from the floor of the SIBO, and it's always electric when the ladies are live.
Ooh.
Sorry, Mikey, I don't do this for you and Jamal.
I figured
For some reason, it gets under my dad's skin. He doesn't like the electric.
I just think it's funny. So
I
then I
love
just
the
do it. I do it harder.
Yeah.
Do it even more. But Liz and Jenny are live from the floor of the SIBO, which is always great. And today could be a crazy day. So tune in for that. I do always like the comments when we post clips from Liz and Jenny on the SIBO, and people sometimes in the comments were like, "Can you turn down the background noise?"
sometimes that's a real thing.
Yeah, I know. And your videos too. They're like, "Do you not understand that?" No, okay.
Yeah, it is live and it is real.
Right, yeah.
It's not
we have really good, microphones, but still, that's why it's electric. Yeah. Anyway, we got a great show, but hey, in the meantime and in between time, you're stuck with me. And do you want your daily dose?
Sure.
Let's go.
Our leading story, breaking news,
Across
the wire, leading story, top story, just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is March the 25th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news? I think Chewy came out with earnings this morning, so I don't have anything about it. But and GME was last night. I don't have anything about that
Chewy
either. So
maybe up $1. I don't know if anybody really
good job, Chewy.
participated in that one. GME is completely unchanged.
Hooray!
So
thank you for playing.
Yeah, I don't think with the way the markets are moving, I don't think anybody's messing around with it.
Right. Yeah, I don't even have them. Right. I had so many other news. I was like, I don't even have time for these.
Yeah.
Well, hey, oil prices fell and stock futures climb on reports that U.S. has proposed a ceasefire to Iran. It's funny. The Iranian government was like, are you guys talking to yourselves? Because we're not talking to you. But there are some back channel efforts happening. Pakistan has offered to be sort of an intermediary. There are things that are trying to move this process forward. But on the other hand, we are mobilizing troops into the region. We are activating the 82nd Airborne, an elite force. They're trying to put more Marines in there. So two things can be true at the same time, and that's what seems to be the case. What are you guys taking away from this pre-market action?
Well, we've seen this move before. We had this on Monday where, there was some tweets and then the market jumped 250 points. I think the right tail risk, which is the upside tail risk, is certainly there if like things were to just completely taco. I think there's probably some big upside squeeze to be had with just the sentiment and everything that's out there. I mean, in terms of like, is this real or not? Frankly, I have no clue because it's gotten so blurry. I think the overall tone is that Trump is trying to look for ways out, which I think is a positive overall. And I think that's good for markets. And one day isn't going to make the move, but I think if you see a little bit of a continuation to this, I think that's probably a positive thing.
How about you, Mikey?
Yeah, I mean, I'm a permabull, but that 250-point move was the first time I think ever I was like, this is so
ugly.
This is not sustainable. Like we're not staying here, and we're not just going higher. Like this is not done yet.
Yeah,
but
it was an ugly day.
At the same time, if you zoom out and you're looking for opportunities to invest long term or get short put positions on, like the S&Ps are still down 500-600 points from the highs. NASDAQ, same story. Microsoft's at like 360 now, 370.
Yeah.
So there's plenty of opportunities to get some long delta if you believe that eventually this will go away and eventually we will get back to highs. I mean, I just did a YouTube clip yesterday, the math check on the S&P 500 and some calls from JP Morgan and Goldman. And it's like, we might get down to 5,400, but we still have our year-end target at 7,500.
That covers a whole lot of range.
Yeah, of course.
Got a whole lot of wiggle room there.
Yeah, but the fact that targets have been lowered and they're talking about the possibility of us going lower, it makes all the sense in the world. There's still plenty of issues in our economic numbers and just the volatility in general. So
my next question for both of you is, I know, Nikki, you and Jamal had been playing oil, buying it when it did hit those lows. What are you guys doing in oil today?
So I scalped out of that, which was good timing, and I have into the up move, and I've been talking about this a ton of just selling out of the money upside skew in oil because there's just so much skew on the upside. So I've been using MCL, I've been using USO as ways to get smaller because the crude oil futures are a very big product. So that's how I've been trading this, and it's I'm working in order to close those calls, which is great. I obviously had no idea we would have this sort of situation today. It was good timing. I think that is kind of the way you have to approach markets.
Can lightning strike twice?
For what?
For oil, like it being a little bit down today. Like, do you get back in?
Sure. If it's up $4 tomorrow and it's unchanged for the 2 days, that is not out of the to promo our option drive. That's implied volatility. The implied volatility in oil right now is 90%.
Right.
Like $4 moves are nothing. That's what it is. But I think you have to be nimble in this market. I think you have to trade it, and when stuff's moving, you take advantage of it. And if you get in quick profits, you take the money and run too. How
about for you in oil?
I've got a bunch of I have an iron condor in the big CLK contract. 79.80 upside strikes and then 60.59. So I put that on a while ago. But I also I've been selling upside calls or call spreads, I should say, into that rally as well. So I've got a 98.99 call spread as well. So same kind of story. When we get the rips and we get the infusion of implied volatility and the skew kind of gets more apparent, I'll sell a call spread. Or to Nick's point, if you have a long MCL contract that you bought at the low and then you get the rip higher, selling a call against that contract is a great way to take advantage of that pure implied volatility without having undefined upside risk.
This is a fun headline. Oh, what'd you do there?
Sorry.
No, it's okay.
I've been long NASDAQ and I've been scalping NASDAQ long the micro NASDAQs. I've been scalping call spreads in the big boy NASDAQ which I just put on another one into this up move. I sold the 36-day, the 25,750, and then bought the 26,000 as a way to be short volatility, long delta.
Okay.
So I'm just kind of scalping around this long NASDAQ position that I've been scalping in and out of. A couple contracts so you can kind of leg in, leg out. That's what I did here. Just reducing a little bit of delta into this move.
Here's a fun headline. The U.S. government is insolvent. And that's not hyperbole. No one's talking about this. It comes from the Treasury Department's own consolidated financial statements for fiscal year 2025. Basically, too long, didn't read the numbers. $6 trillion in total assets against $47 trillion in total liabilities. Importantly, that liabilities number does not include the unfunded obligations of social insurance programs like Social Security and Medicare. And so the numbers are even worse than we think. And cool.
Yeah.
Let's talk about bonds. When the government's insolvent.
Yeah, well, we'll just kick the can down to to the next generation. The one before us kicked it to us. We kick it to the next one.
Sure.
Yeah,
That's how it works.
Bonds at 113.16 right now. Bond volatility has been off the charts. There's been just some craziness in the bond market. Yesterday,
the Treasury auction was terrible.
It was horrible.
Yesterday. It was one of the worst because again, the fears of Iran. Go ahead.
yeah, I mean, they were in the 111 handle was kind of the lower end. 111.20-ish was 23 was the low yesterday, but bonds have been crazy. I'm long bonds here by default because I sold puts, but it's been a dog trade.
How about for you, Mikey? What's your play in bonds?
I haven't traded them directly, but I think this is a market where, regardless of IV rank, you can do whatever you want. Like if you're trying to pick up static delta, selling a put makes sense. If you're trying to play these whipsaw moves, like IV rank of 35 in TLT, but a 16% implied volatility is not reflective of the moves we've seen over the last 3 weeks. So, and if you're trading TLT, it's an $86 product. So the world is your oyster if you are trading bonds with TLT or the futures products.
Real fast, wanting to check in on the dollar and currencies this morning and see what they are doing, sort of tied to that whole Treasury bonds thing.
Well,
no, go back to the other slide. We're still on this story. No, go back.
Are your TCFX positions decent? I have
almost.
I'm down to like 2 or 3 of them.
Yeah, I have 4 positions left.
Okay.
And my biggest loser was the long dollar short the franc.
Aussie? Oh.
And that was like $1,000 loser at a one point, but it's a $200 loser now. I'm almost out of the woods.
Okay.
I'm close.
Yeah.
And then, I have some other positions, the Euro franc, the Aussie dollar, the Aussie dollar euro. And those are losers right now, but they're not, these are small positions. So I'm just holding these until they are eventually green.
Sure.
That's my strategy.
Yeah.
And I love that for you.
Yeah, thank you.
Dollar's been strong, but kind of off the highs that we saw in the middle of last week.
ARM is announcing that they are releasing their first in-house chip. They are going to have a line of new customers, including OpenAI, Meta, Cloudflare, and SAP. AMD, for more than 35 years, they've licensed its instruction sets to the world's biggest chip makers, and then they collect royalties on every processor. Now the company is making physical silicone for the first time, and it feels so good. What are you doing in ARM?
I do not have a position. Maybe we'll look at that today. It's trading at 150 here, up about $16 in the pre-market.
Oh, that's strong.
Yeah, big move, about 10%, 15%-ish up move here on the news. Be interesting to see if it stays up here. It's kind of trading in the middle of its range over the last 6 to 8 months. So we'll check it out. See if there's some juice to squeeze there.
Earnings in the beginning of May too. So that will be interesting to hear more about this news.
Yeah. But I've got positions AVGO, AMD, NVIDIA.
I was going to ask SMH or anything like that.
SMH, yes. So I am in the chippy space, no doubt.
Nice.
Yes.
In other news, I was surprised to read this. SpaceX is aiming to file their IPO prospectus with regulators later this week or next week. That escalated quickly. That's according to the information. Advisors involved with the preparation predict the company could try to raise more than $75 billion in the IPO. The individual investor portion might exceed 20%, but the percentages have yet to be finalized. What are your thoughts on SpaceX's rush to the public markets?
I'm just wondering what the ticker symbol is going to be because
He wants it to be SEX.
Spice is already taken.
I know.
SPX?
No, SEX, because Elon is a 12-year-old boy.
Yeah.
Oh,
Probably.
Classic. Yeah, I think it'll be interesting. I mean, it'll be interesting to see what happens with Tesla on this news because I think Tesla was always the proxy.
The synthetic way to do this.
Yeah, it was never about the cars. It was always about what else can be produced from this. So kind of similar to like AMC and Ape.
Yeah.
That's like the closest thing I can think of where like AMC used to be the GME until they created this Ape product and then AMC has.
And then Ape got added to AMC and it was just like,
it was just this whole
all
thing.
just a.
And now AMC is under $1 and they need to reverse split again.
Yeah.
So it could take away from the implied and realized volatility of Tesla.
That's an interesting take.
That's an interesting take, yeah.
I think I like that thought. I like that thought. That
So what do you do in Tesla now?
I've got some long delta, small.
Okay.
Yeah. I mean, Tesla's still, by itself, it's still at lows. So, yeah. I think, and it actually has a pretty low IV rank as it stands, 47% implied volatility. But, I think it'll be interesting to see how it shakes out. But really, SpaceX should have more implied volatility than Tesla if Tesla takes a hit in terms of the chop that would normally be traded there.
Yeah.
I think the biggest potential factor here that people don't really think about because they're like, oh, I don't know, like SpaceX, it doesn't directly affect me. But if you look at how drastically the prices have come down for Starlink and its products, you can get a Starlink Mini now, like I saw an Instagram ad, for $199. And you can have service for $50. So I was like, that's kind of crazy. It's literally bringing internet to people everywhere in a pretty affordable way for a $200. Because I remember when they first came out, they were really expensive and they were big and bulky. But that's what's I think interesting to me.
Totally. Yeah. No, I think it's amazing.
Got to look at that for Minocqua.
You should get you should it's $199, Mikey.
Yeah.
It's cheaper than Comcast.
Got to check it out.
In other news, speaking of IPOs, OpenAI, a bunch of headlines from them. They are raising additional money to bring their record funding round to $120 billion. These numbers are crazy. They're raising an additional $10 billion from investors as part of a historic funding round. I don't even know what series this round is. But after the completion of this round, they will have raised $120 billion. The main reason they're trending this morning is out of nowhere, they canceled their Sora. It's their AI video generation program. And they had a partnership with Disney. So Disney gave them $1 billion back in December because they're like, hey, you can license our characters. It was a cool synergistic partnership. And then just overnight, OpenAI was like, no, we're pulling the plug on this. And Disney's like, excuse me?
Yeah. OpenAI, they've kind of muddied the water. I mean, Anthropic, everything that Anthropic puts out is wow and awe-inspiring.
Sure.
And destroys a different industry. OpenAI just seems to fumble.
Yeah, but it seems like they're kind of playing off of their back foot here. They're scrambling and,
Yeah, I mean, I don't know. Zuck does the same thing. If something doesn't work, he just cuts it.
Yeah.
And I think that's good in general, but I just think that they have their messaging and the speed at which they're getting stuff out there is just way behind their competitors, which is problematic.
Two tickers to look at here. Mikey mentioned it one earlier, and that's Microsoft, and then the other would be Disney.
Microsoft near lows, 376. I mean, this is all the way back. This is essentially the lows that we saw in April of last year when we were having the tariff tantrum. So I have long Delta. I have long Delta at 400. I have long Delta at 375.
I need to get more long delta. I don't have enough.
There you go.
Yeah, I actually have a Super Bowl in there, the 380, 370 put spread all the way out in May, though. So I feel good about that one because we're at lows now and a lot can happen from now to May. But I think it might be time to nibble on some more bullish delta there.
Yeah.
Okay. And what about Disney? House of Mouse.
Oh, it's probably
Disney's-
trading at 100.
It's
been 100
flat,
for
actually.
like 15 years.
But yeah, 96.
Yeah.
This one's interesting. They have earnings May 6th or around there. And implied volatility is pretty low right now. 32% for an equity is low. So that could be another interesting one if you're looking for in time a recovery up to 100 or 120 or whatever. That's a 25% rally from where it's at now.
Yeah.
Hey. I don't know what was going on yesterday, but some of America's favorite airlines said, we have time today, honey. Delta Airlines suspended its airport escorts and red coat services for Congress members and their staff, citing the partial shutdown. They said, you know what? You were effing up our business all the way. You were messing with my bag. And we are not going to play favorites with you anymore. So Congress members could, like the day of, they'd be like, hey, I need a 1 o'clock flight, 2 o'clock flight. And Delta would be like, okay, we can accommodate you. They get escorted right through. They never had to wait, it was very easy, frictionless process for members of Congress. And then yesterday, Delta said, no more. And to that, I applaud you, Delta.
Kind of love that.
Well, we have only till this week, and then Congress goes on a 2-week break. So they need to figure something out to fund the TSA.
Does Congress go on spring break?
Yes, they are. They're going on spring break, yeah.
Wow.
But not sure what Delta Airlines stock is doing.
They go to like Panama City.
Sure.
They go to Miami.
I mean, they're getting paid, so yeah, they don't care.
Hey, you can't go to Mexico anymore.
Tracy just got back from her trip, and she said that the TSA line was like 3 hours long, but she has clear, so she was able to go through very quickly. But like, that's insane.
Yeah.
And these people are working, not getting paid, and a lot of people are working paycheck to paycheck. So I don't know how that's.
Yeah, like they're quitting because, and especially in more expensive, cities, like they're like, we literally just can't afford to miss all these paychecks because like daycare is not going to be like, oh, here, take an IOU.
Yeah.
And so, yeah, we
nuts.
the craziest thing was they were investigators who were on the ground in Houston, and they needed to get to LaGuardia to investigate the tragedy that happened on the runway there. And they couldn't even get the investigators out of the Houston airport. They had to call the Houston airport and be like, we need to send these investigators to LaGuardia. They were stuck in the line for 5 hours.
Yeah, it's nuts.
Yeah. But what's Delta stock doing?
It's been relatively strong despite the move in a lot of these the other names like UAL is down probably.
I'll get to that.
15% from the highs, but I've been trading both of them. I mean, there's high volatility in both Delta.
Oh, good.
And UAL. I mean, they're caught up in the oil news. Like
Yeah. And because they're not hedging it.
Yeah, they're not hedging it. Obviously, the price of oil is going to go into the ticket prices, which are already sky high. So,
I have to say, I think I got lucky with a little bug. So I was tracking a price to Hawaii, and it was like $1,200. And then one day I clicked refresh, and it was like $650. I was like, is this real? So I booked it immediately. And then the next day, it went back up to $1,200.
Oh, I believe you. That's great. Sometimes you just got to find a little.
yeah, I've never had that
Cost
happen.
basis reduction, baby.
Cost basis reduction.
Usually it's always like $1,200, $1,250, $1,300, and I'm like, okay, I see what you're doing to me. I see what you're doing. It's going up.
And then the next day after you book,
Yeah.
plummets.
No.
Well, hopefully on your flight to Hawaii, you might have this option. Speaking of airlines having time, United Airlines dropped a surprise relax row feature where passengers can make a bed out of an entire row in economy. Watch this video. So then they give you the mattress pads and the blankets and pillows. And so like, what are like your family? All right, thank you, Laura. So the new feature is going to be available on 200 of United 787s and 777s. You get the mattress pad, blanket, and 2 pillows. If you're traveling with kids, you also get a plushie. I want a plushie.
Interesting. Okay. Yeah.
What are your thoughts on this? New Zealand Airlines, I think, pioneered this feature, but this would be the first time it'd be available in America.
I saw a tweet basically with the cost breakdown of like the actual space in the plane of like a row versus like a business class seat where
Pod.
Yeah, where the pod is a better bang for your buck versus the seats if you don't have kids. Like if it was just like 2 people,
right,
it would make more sense to just do the pods.
Yeah. I think it'll be good for families. Like the most practical use case is just like you have a family with a couple of kids and it's just impossible to keep everyone, not screaming. So yeah, I think it's interesting. We'll see how long it sticks. Definitely a unique.
Yeah, because it's not changing the infrastructure of the plane. They're just like it's an additional thing, so then they can
that leg
get all that
room,
money.
Though, it's going away by the second. Okay, every plane I get into, every time I fly, I'm like, this is smaller than the last one. Either I'm getting taller, or the space is getting.
You're not in premium economy.
Ooh. Sometimes I did fly first class from Vegas.
Oh, there you go. Okay, girl.
It's kind of a fun experience.
Are you doing anything in UAL?
Yes, I have a strangle on.
Okay.
UAL 40 IV rank. The liquidity isn't the greatest, like 10, 15 points wide on the bid-ask spread, but I am short the 80, 105 stocks trading at 95.
I've been trading it to the upside, but I exited about a week ago. I had the 80 short put into the sell-off and then bought it back for like almost 50% profit, but I think this one's interesting now because they have earnings coming up at the end of April. So I think long May, short April monthly diagonal spread is what I'm looking at, like a 95, 105. But I think airlines are always interesting when they sell off hard because they're just one of those. They're one of those industries that's protected in a way.
Yeah, we've bailed them out like 7 different times.
So if they get to lows, it's like if you have the ability and you're willing to take the risk in getting long your favorite airline, like it's a hot odds for me. You like that?
Yes.
Throwback?
Yes.
Finally today, oh no, Microsoft Update Assistant error. Okay, thank you. McDonald's is partnering with K-pop demon hunters, and the fast food giant will begin offering a pair of meals inspired by the Oscar-nominated Netflix film starting March 31st. Each meal includes a collectible card pack featuring a photo card of art featuring characters from the K-pop demon hunters. Is it enough for the Golden Arches?
Yes.
This does something for you?
I think it's
You're K-pop. Have you seen K-pop?
I haven't seen it actually, but I do recognize the popularity of K-pop.
Yes,
K-pop, and
it's a juggernaut of pop culture.
100%. So it's the same thing with like they're pretty good at knowing when to strike. Like remember they had the mini series with the plush toys and that.
Oh yeah,
like
and they have Crocs and stuff too.
Like that kind of thing. So they know what they're doing.
I don't know. I had the big arch and I enjoyed it.
You enjoyed the product?
I enjoyed the product. Our product is a fantastic product. It was good, so I enjoyed that. So
What's McDonald's stock doing?
If I had to guess, it's probably at 325.
A little lower.
Oh, 308.
Discount.
Got a scoopy.
All right, it was at 3. It was near the highs. It's back down to 300-ish. That's kind of the spot it's bounced off. So maybe I look at that too, McDonald's. All right. You done did
maybe I did something there.
You done did some.
Finally today for my viral video of the day, you guys hopefully soon in your lives maybe will experience the joy of bringing a little one into your house. But if you have furry friends, you got to also prep the furry friends for the arrival of the pitter patter of little feet. Yeah. So this guy was trying to condition his dogs for the new baby, and I'll just let you see what happens.
Understand that it's not a toy. Good. I should be able to bring the
let me
baby down.
fetch it.
And the baby doesn't need I might want to stay for a part 2.
Oh no.
This wasn't supposed to happen.
See, my money was on the Malinois to be the crazy one, not the lab.
Understand that it's not a toy.
Yeah, that's.
But people in the comments were like, "No, bring the actual blanket with the smell of the bait."
Yeah, you can't just be tossing a toy baby in the air.
Yeah.
It looks like a
Yeah, it's a toy.
Okay, I'm sorry. How many babies have you brought home?
0 that I know of. So that's good. Yes.
It is good. Love that for you.
Thank you. Good job out of you. We're going to take a quick little 90-second break, come back with a little daily recap, and then we got Confirm and Send, and we got an awesome option drive coming up after that. So we're going to take a quick little 90-second break. You're listening to Taste Live.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want, with Tasty Trade.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mikey, my friend, we are back. Quick little market update because we haven't done one yet. I'm going to use my spiffy new control pad that I have here on the side. Gives me one click and I get my platform up there. We've got E-mini S&P 500 futures up 46. We're pinned around that 66.50 mark. We had about a 30-point higher print in the overnight session. Got up to 66.81 and change here. after yesterday's ceasefire news, fake news, who really knows. NASDAQ up 200. You got the Dow up 310 and the Russell up 18. So the Russell and the NASDAQ strongest of the group, but market looking like we're getting a little bit of a bounce today. Oil selling off a bit, down $3.73. We're at 88.62. Got as low as 86.46. So a little bit of a bounce from the lows in the overnight session. Had about a $3.5, $4 move throughout the session here. Volatility futures only down 30 ticks here, about 1.25%, 24.63. Got as low as 23.62, so about another full point lower here. I think that was right around kind of the news breaking. Had a little bit of a volatility contraction. Bonds up almost a full point here. They were higher in the overnight session. We got up to 113.25. We're at 113.12. So a little bit of a bid in bonds, which is nice to see for my positions. Gold and silver both rallying pretty hard here. Gold up $139. It got as high as 46.34, so another 50 or so handles from here in the overnight session. Silver up $3.32. I've been long both of them, and this is a nice day for those positions. 72.91 on silver futures. And then Bitcoin having a nice little bounce here. It's trading at 71 and change here on the futures spot as well at 71 and change, and hovering in that 70 range. A little bit of a bounce today. I need more though. It doesn't, just like Monday, and I had this conversation with Jamal, that it didn't feel great on Monday. And you felt the same kind of thing. Like Monday's bounce, it was in. Did you catch it, or were you on this? You probably weren't on.
I was traveling back.
Yeah,
but no, I saw it in the morning, and I was like, no, it was weird. I was like, we're up 2% everywhere, and
but we were down 80.
Yeah,
I woke up. To take my shower. We were down 80. I was like, shoot, this is going to be a rough day. It's going to be a rough week. I get in the shower, get out my shower. We're up 160 handles, 180 from not from 80 to up 100, down 80 to up 180. It was 250 points.
Yeah,
and I was like, I thought the platform was broken. I was like about to start texting Quinn and Pete and be like, danger. It wasn't broken. It was a move, but from that point, we did not have an uptick. It sold off pretty much the entire day through that entire move. And at the end of the day, me and Jamal were like, you have oil getting bid, volatility getting bid, and the market, that felt like it was just the taco isn't spicy anymore.
Yeah.
The taco is minced meat. Didn't feel good. And that's what kind of this is feeling like here. Even though we're having a nice rally, 50 points to the upside, volatility is kind of hanging in there. Oil is off the lows. I would have liked to see like a real flush in oil, a real flush in volatility. We're not really getting that here.
No. And I actually wouldn't be surprised to see us go red today.
No, don't say it. Don't speak it.
Am I a bear now?
You are a bear now.
Perma-bear?
You and Vecchio. Jamal was teetering on the edge. But yeah.
But to your point, it's like the market wants to go higher if there's good news. But there's just not any good news right now.
Yeah.
I was just filled. I just sold a put in MCL.
Oh, there you go.
The premium here is so crazy to me. And this is kind of like, I sold the 8-day. The 85 strike, 8 days to go for 370.
The 8-day.
379.
I kind of like doing
MCL. Because
what did you do? The 80 strike?
The 85 for 379.
Oh, I'm looking 22 days out.
Yeah. But that's the nice thing is like if crude oil drops, implied volatility is so high in here that
it won't even matter.
It won't matter. And even if it moves down to 85 and I wanted to defend myself, I could just buy back the 8-day, roll it to the 22-day, and move it down almost like 6-7 points for the same premium. So
I kind of like that.
You just sell the really near-term stuff with the inflated IV. Like even the 2-day is crazy. The 2-day 85 is trading for $2.
I kind of like that because I have those. I am trying to close out the upside calls that I sold on Monday for 80 cents. I sold them at like $1.30, so I'm trying to take like 50 cents out of those. But I like that into this downside move. I think I think that's an interesting play. So I'm in. I sold the 85s at 371. What'd you get filled at?
379.
Damn, move it.
But I mean, they're flying around. So.
Yeah, they are flying around.
But yeah, if you think that this rally might shift to the downside, then crude oil would probably go higher. But yeah, you can get in and out of these things pretty quickly with the near-term cycles, and you're really taking advantage of the IV if you're selling the 8-day or even the 2-day.
I like it, Mikey.
Thank you.
Let's get into our little recap of yesterday, which was not a great day, I would say. E-mini S&P 500 futures were down the entire session. We got 0.34%. Pretty much, it seems like it was a nothing day, but it felt a lot worse here. The Russell actually ending the day in the green. On the next slide here, in terms of the movers to the upside, you actually had Tesla and Apple to the upside towards the end of the session here. Microsoft and Google, the weakest of the group. Microsoft looked horrific yesterday. I mean, Microsoft was just down only. Google, first time we've been below 300 in quite some time. That was a pretty big move to the downside there. It's trading at $293 right now, so up about $2-3 here pre-market. When we look at the sector breakdown here, so metals and mining had a nice day despite gold and silver both being super weak. Maybe they were front running this move today, which getting a little bit of a bid back in some of those stocks. Energy stocks were through the roof. You look at like XOM and CVX, they've been participating in the upside, but have kind of been choppy over the last couple of weeks here. They moved kind of pre-war from basically the end of last year into the current situation that we have. They had most of their rally the last couple of weeks kind of been choppy there. Materials moving again. Semiconductors were relatively strong compared to the rest of the market there. And just tech in general kind of leading the way to the downside. I know we have biotech there at the way bottom, but not one that we typically trade all that often.
Yeah. I think Microsoft is obviously very interesting at these levels.
Microsoft Meta is at 600.
Mm-hmm.
Those have been like the dogs.
Yeah. And yeah, I think that the energy and the mining sector is going to be interesting, especially with the announcement a couple weeks ago. If you look at XOP, like it tells the whole story of the multi-billion-dollar plan to get more of our U.S. oil out of the ground amid all this. So the miners, the exploratory products, XOP I think is a perfect vehicle for that, but it's had a massive move to the upside already.
Yes. Biggest movers in the market here. So on the upside, you have a couple of the kind of semiconductor adjacent stocks, Dell, GLW, HPE is in there. Teradyne, Ciena, STX, which is in the memory space to the upside. You have CF bouncing a little bit. That's another part of the kind of Iran war trade here is some of those chemicals that go into fertilizer stocks. So Dow is on there as well, which is Dow Inc. Another part there. You have Albemarle, which is another one of like the metals and mining stocks that's in kind of the rare earth sector. So a little bit of a mixed bag there on the upside. On the downside, some big moves across the board. If we get to the downside list here. So biggest moves to the downside, Estee Lauder has been moving huge to the downside. I think there was some sort of merger / acquisition that is going on in that space that is affecting EL. You have Coinbase, which had a massive move to the downside. I mean, that stock was getting killed. There was some news on Circle and some of the stable coin stuff. Hopefully Ryan will be able to give some more clarity there, but Circle Group, CRCL, was down about 10-15% yesterday too, going from 120 to 100. Not in the S&P 500, so it's not on this list, but that space has certainly seen some pain. You got some of the software stocks like CRM in there, Fair Isaac, which is FICO. It's a little bit of a mixed bag there on the downside. And just to give you a big heat map here, our beautiful heat map, wasn't the greatest day. A little bit of all over the place, but the big name stocks, the big boys, not a good day.
No. But again, plenty of opportunity when you see a handful of the Mag 7 stocks moving to the downside.
Seems like there's some opportunity.
Yeah. Especially like just getting into long-term stuff. Like I would just pulled up randomly the Microsoft 500 strike calendar spread, long January, short September. It's like $500. And if you get the reversal, it's...
If not now, when?
Yeah, exactly. Seriously.
Oh, ultimate question.
But yeah, wild day. And I think you'll just continue to see these big sector moves as the markets shift around and find footing.
Good stuff. Well, we're going to take a quick little 90-second break. I'm going to fill up on some coffee, and then we're going to come back with some confirm and send questions from you, the viewer. We'll take those, and then we'll go to Option Jive. And that's the opening bell. Turn on the machines already. So we're going to take a quick little 90-second break. You're listening to Tasty Live. We'll see you in a second.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
My friend, we are back. We've got E-minis up 57 here, catching a little bit of a bid here into the open. Volatility coming in a tiny bit. Oil down 391. Hope this continues into the open. But first, a couple confirm and send questions. You want to get to them?
Please, let's do it.
Let's do it. Wednesday, March 25th. My God, time is flying. What percentage of your trades are defined versus undefined risk, Mikey? What would you say?
I would say I've got about 70% defined risk and 30% undefined risk. I think that has a lot to do with account size too.
Yep. Because I was going to say mine is about flipped of that.
Yeah. Ideally, I mean, it's the larger account, the more money you have, the more you can sell undefined risk, and you have the ability to have a lot of flexibility with that. But if you have a limited account size, defined risk you can still take advantage of high implied volatility. You can manage your risk effectively and take your shots where you want them. But yeah, I would also bucketize them in like the equity space. I'm almost all defined risk, and the ETF space or the index space, I'm undefined risk there if I can afford to do it, just because it's much easier to manage like the micro E-mini position or IBIT. Like it's a lot easier to manage with these moves because the moves are a lot less drastic. Even now where the market's flying around, the moves are a lot less drastic than any equity, really.
Yeah. Yeah, I would say I totally agree. I think the account size situation is the main factor here. Larger size accounts, you have the flexibility, especially if you're in like a portfolio margin account where naked positions might even use less buying power than defined risk positions. So, yeah, I'm probably 70-30 in terms of undefined versus defined risk trades in my short premium positions. Like we're talking like iron condors versus strangles. I'm 70-30. I do a lot of defined risk trades like the diagonal spreads, even like a crab trade, I guess, is if you're buying the wing, it's defined risk. If you're doing just the 1x2, which is what I do a little bit more, you have naked risk, but it's naked tail risk. And so a lot of my trading is defined risk, even though I am in a larger sized account.
Love it. Do you think strangles are safe in a stock that's been knocked down 50%? Or am I better off just selling the put?
Do I think they're safe? If I had a crystal ball, I would be more confident in this. I mean, I like to lean into directional moves. So something like Microsoft, I'm not selling a strangle. I'm just selling the puts. That has not worked for the last 2, 3, 4 weeks because the stock has just gone down. And so, was that a safe play? I mean, I'm at the 350 strike in May. It seems safe to me, but that can certainly change. So safe is a tough word to put in here. I would just say, I tend to like to lean into directional moves in both directions. I like to get short on things that are going higher. I get long things that are going lower. That's how I trade around positions. If you feel better with a long delta skewed strangle, go for it. If you feel better with the neutral strangle, I think that's in play too. As long as implied volatility is high, you can justify doing any sort of short premium position that you feel comfortable with.
Yeah, and I think even if you do a strangle that's neutral, you can shift it up. Like if you get tested on the upside, you can move the thing higher to offset some of that risk. It's just harder to do if there's a violent move higher. And I think also, if you're selling a strangle in an earnings cycle, I'm usually just going to sell the put because that implied volatility usually waits to go away and the premium waits to go away until the earnings announcements actually happens. Yeah. But also it's a matter of premium as well. Like if you're collecting $5 in a put and you're selling a call for 50 cents, just get rid of the call and move your put up a half strike or one strike and you'll get the same premium and you'll have no upside risk. So I think that's another thing to consider too, the value of each side.
Very good. Next one, please. You guys were discussing the silver and gold ratio yesterday morning. So this was Jamal and I. So you're going to have to catch up here. Did you mean to imply you only trade those products when the ratio is out of its normal range? I guess I'm trying to understand why one might care about the ratio unless they rely on it as a trading signal.
Yeah, I don't think you need to trade the ratio by itself. I think you can get long or short gold or silver at any point in time if you wanted to just trade that isolation. But the nice thing about these products, specifically gold and silver, is that there's plenty of historical data. Yeah. And when you trade a pair that is out of whack, it also softens the implied risk of each of those parts.
Yes.
So like if you're getting long gold and short silver at extremes in their relationship, just because you're long gold and short silver, like if the relationship gets more out of whack, your implied risk is less than if you just took one side.
Yes.
So
and the implied reward too is
Yeah.
going to be lesser too.
Yeah.
It's a good call out because the volatility of silver is typically higher than the volatility of gold, and the products themselves typically have a high correlation. They don't have the same sort of magnitude. Like today, you have gold up 3.64% and silver up 5.4%. And so that ratio, the ratio of gold to silver, is moving about 2%, assuming you got in right at midnight last night. That's what it's measuring off of, just the start of today. That ratio has moved 2%. The ratio itself tells you a lot about the move in the two products. So gold and silver, currently the ratio is about 62 ounces of silver to 1 ounce of gold. That's how many ounces of to equal each other in terms of notional value. And that ratio trades, right? So it moves. It got as low as 48.50 ounces of silver to 1 ounce of gold. That tells you that gold is coming down or silver is going up. One of the two has happened over that period of time. Historically, I know when that happened, I was like, oh, this has to be an extreme. And people were like, the 100-year average is around 40 or like 45, 50. Like the 40 to 50 is the 100-year average. And I was like, 100 years, come on, guys. We can't go back to the Hunt brothers here, like spoofing markets. But that is something to keep in mind. In the more recent history, meaning like the last, 7-8 years, it's traded more towards like 100. Like that's 90 to 100 ounces of silver to every 1 ounce of gold. And so obviously that ratio can change, but that's why you're trading it. You're trading the two products that typically have a very high correlation, that have different betas. They move in different magnitudes, but are tied together. So it's a way, as Mikey said, to hedge volatility, to hedge the position in general. You're not just long one of the assets, you're long or short the relationship of those two assets.
Love it. Do you have a preference between trading futures or individual stocks?
I would say for a scalp, I'm using futures. I would say in general, prior to the morning session takeover that I've experienced over the last couple months, futures were not a big part of my trading. They've gotten to be a bigger part of my trading just as an engagement tool, and just sometimes you just want to kind of trade what's happening in the market, and that's an account size thing. That's a time in markets kind of thing. So I would say from a static delta perspective, certainly futures over stock trading. I would say from an option perspective, I much prefer straight up stock options.
Yeah, I would agree. I think there's a time and place for futures. And just like we say this all the time, but like when implied volatility spikes, we're going to be trading the E-minis, the NASDAQ, SPY, QQQ a lot more than when implied volatility is in the teens, because when implied volatility is really low, to get high implied volatility environments, you have to go to the equities, or you're more inclined to go to the equities because you can fabricate those high IV environments because equities just have higher implied volatility.
For sure. Good stuff. We're going to take a quick little 90-second break, come back with an option jive. We're talking about implied volatility versus realized volatility. It's a good one. You don't want to miss this, so stay tuned for that. We'll be right back with an option jive. You're listening to Tasty Live. Stay tuned.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option. Jive.
Mikey, we are back, my friend. E-minis up 56 here. We'll get to the open shortly, but first, a quick little option jive. Let's do it. Why IV overstates reality and how traders profit from it. Let's do it.
Let's do it.
So implied volatility quantifies and captures the expected future movement of an underlying. What is observed as time passes is called the realized volatility. So you have two volatilities that come into play. You have implied, which is what is projected to happen, and realized, what actually happened. So one is a measure of risk. The other is a measure of return. So the first one, implied volatility, is what the risk or return is projected into the future. Realized is the risk or return that actually happens. How often does one overstate the other? And is going to be our topic for today. We're breaking it into two buckets, pre and post COVID. What do you think had more IV overstatement, pre or post COVID? Post COVID, pre-COVID, do you think had more IV overstatement?
Yes.
Okay. Let's take a look. I understand where your thinking is because, post-COVID has been crazy, lots of moves, but you've also had higher implied volatility. So that's a big question.
And we're just looking at SPY.
Just looking at SPY.
I'll think about it. I'll let you know when the results come out.
So the study that we're looking at here is in SPY. We're looking at 2006. My God, that was a long time ago.
I graduated high school in that year.
Did you?
Yeah.
I was 08.
Fun fact.
Good year. It's a good year. I was getting my license.
Ooh, hell yeah.
2006 to present, 20 years. So first we calculated the average 30-day implied volatility. So we did this as like a rolling calculation. Next, we averaged the daily 30-day realized volatility. So just trying to kind of put these on even footing here. We then measured the percent of time overstatement is observed. So the percentage of the time, the 30-day implied volatility was higher than the 30-day realized volatility. And we measured the overstatement and varying volatility environments. We're going to break this up into pre and post COVID as our two little metrics. You're going to like this one, Mikey.
I think you're right.
So what we found is, on average, implied volatility has overstated realized volatility by about 3.75 points in the past 20 years, and even 4.23 points in the last 6 years. So it's been more overstated in the past 6 years, considering just after the COVID-19 pandemic. So so you can look at this as like kind of what your quote unquote edge is as a premium seller. So the average IV of our whole data set was around 18.25%. That's our implied volatility. The average realized volatility over the 20-year period with 30-day rolling implied volatility was about 14.5 points. So the average difference is about 3.75 points. So you have that a pretty decent amount of difference there. You're talking about 10, 15, almost 20% overstatement of implied volatility versus realized volatility. That doesn't mean the move is 20% less than what is expected, but the expectation of a 10% move over a 30-day period has averaged at 8%, is essentially at a 8% move versus a 10% move. It's come in about 15 to 20%. In the last 6 years, you've had an average IV of about 16.15 points, average realized volatility only coming in about 1.17%. The implied volatility on this next slide, so this is kind of the interesting part. We examined how often implied volatility exceeded realized volatility over the past 20 years. Implied volatility was higher than realized volatility about 50% of the time compared to 41% for the realized volatility. So in the full data set, you have implied volatility coming in higher than realized volatility about 59% of the time. In the post-COVID era, this dynamic shifted significantly with implied volatility exceeding realized volatility roughly 85% of the time. What that means is that implied volatility has been relatively higher and has come in more so, the realized volatility coming in less than the implied volatility, which is helped by higher volatility. When you have high volatility, there's a lot more room for the market to stay within, versus when you have lower implied volatility, there's a lot more things that can happen. So when you're looking at the last 6 years versus the 20-year average, we've actually overstated volatility more in the last 6 years than we have in the last 20 years.
Fair. So I was technically wrong. But
I thought we broke it up into those two pieces.
Yeah.
I didn't realize it was the 20-year together versus the 6 year.
Well, I think there's a couple things to be said about this. I mean, we've had, over the last 6 years, we've had way more craziness.
And swings
even
in
after,
volatility.
even after COVID. Like, COVID was the beginning of all the craziness. Prior to COVID, we had the VIX at 9 or 8 or 7, and we would come to work and the market would be up 7 points, and then we'd go home and we'd come back to work and the market would be up 7 points. And that was
no movement overnight.
Yeah.
No nothing.
So the lack of implied volatility gives way for realized volatility to exceed that in an easier way.
Yeah.
Where with all the craziness we've had since COVID to now, you can list 100 different things that have created market shocks across many different sectors, and that increases implied volatility. And really, the current situation, it can be seen in crude oil. You can sell upside premium in crude oil at 150 for a couple dollars, and if
crude oil moves $10,
it doesn't matter.
It's still, that's the thing that I think people get caught up in, the idea that the market is moving a lot, and so that should be bad for premium selling.
Yeah.
And that's not the case, because the market moving a lot where volatility is low would be bad, because that's realized volatility greater than implied. If implied volatility is at a 25 handle like we're seeing now, what that means is that 30-day implied volatility is pricing the market to move 25% in either direction over the next year. So the 1 or 2% swings are totally reasonable on a day-to-day basis. It's a VIX of 16 is a 1% move in the market day to day.
Yeah.
So, VIX of 25 is almost 2%.
Yeah.
So that is within the bounds of implied volatility, and that's been the big difference the last 6 years.
Yeah, and I think to put it in one sentence, like if you have a high implied volatility and one standard deviation is a 10, 20-point move, 3 standard deviations would be a 60-point move from an equity, which is like in your mind, it's like, how is that really going to happen? But on the flip side, if an implied volatility is really low and your 1 standard deviation move is only 2 points, a 3 standard deviation move being 6 points on like a $100 product, it's like that happens every day.
Yes.
So that's another way to think about it too, is like what is the multiple of the standard deviation and how does that happen in real life? And more often than not, it does not.
I don't know this for the fact, but it feels like, or at least from my memory, there might have been a handful of times that we had a VIX above 20 prior to COVID.
Yeah.
In the tasty, like what was it, 5 years, 6 years that we were doing content prior to that. Mm-hmm. It was the VIX 20 was like a mythical, was a mythical animal. Like it felt like that was just not possible because every day it was VIX of 10, you get a 10-cent move in volatility, and that was like a gift, So
now we live and breathe in the 20
junkies, volatility junkies. So finally, we compared we're going back to the last slide. I didn't get into that one. Just to go through the IVR below 50 and above 50. So we compared the different volatility environments. What we find is when IVR is high, we see a 2 times overstatement compared to when it is low. So we've kind of benchmarked really 30 IVR in something like SPY being the higher end. And the reason for that is because typically you see spikes in volatility, once or twice a year. And so those kind of skew your implied volatility. You have a spike, and then it comes down, it clusters for a pretty long period of time, and you have a spike, and then it comes down and it clusters. And that's kind of how volatility reacts. So you kind of have a skewed IVR because it is skewed by that 1 or 2 occurrences where the volatility is super, super high. When you do get that pop, that's the absolute best time to start being in short premium trades. And just for context, market today, on March 25th, 2026, you got SPY at a 37 IV rank. So you are in that nirvana spot.
Yeah.
Sell some premium.
And I think that the other thing to call out is the fact that when you have big moves like crude oil again, or like gold, silver, you don't always get these opportunities to sell the tail premium for a good amount of value.
Yeah.
And that doesn't necessarily mean you have to take undefined risk in that direction. Like you could buy a micro crude contract while it's down 5% today. And if you get a reversal of that move and then you sell the 120 strike or 130 strike, like you're just chipping away at your cost basis. And even if you get there, you're going to be in an amazing trade.
Yes.
So another thing to call out there. But yeah, the tail premium is alive and well in many markets these days.
For sure. Couple takeaways, and we'll get to the opening bell here. So implied volatility is a measure of future risk. What we find is over time, what is implied overstates what is realized. The fear is usually overstated to what actually happens. Of course, there are periods where volatility understates what happens into the future. So over the past 20 years, implied volatility exceeded realized volatility by about 3.75 points on average, but only slightly more than half the time, so 59% of the time. When volatility was high, it was significantly overstated. When volatility was low, it was not significantly overstated. Since 2020, however, that edge has become far more consistent, occurring roughly 85% of the time, though with smaller average differences of about 1.2 points. What that's telling you is you've had sustained higher volatility. It's still come in, realized volatility coming in less than implied, just on a lesser magnitude. you might have a VIX of 25 and the realized VIX in hindsight being 22. Whereas in the 20-year average, when you had VIX at 20, you had volatility coming in at 15, like realized volatility at 15. So there's a bigger overstatement, fewer percentage of the time versus now where the overstatement is lesser, but way more consistent. It happens basically 89% of the time. It's a huge percentage. The overstatement can be thought of as a premium seller's edge. Therefore, the discrepancy between anticipated and realized volatility allows option sellers to profit from selling premium. Ultimately, overstated. Volatility is generally overstated.
Yeah, love it.
That's it for us. E-mini S&P 500 futures up 54. You got oil, as you were saying, down 5% near the low of the session here. Volatility futures still only down 64 ticks, 2.5%. A nice fall contraction, but doesn't seem like we're out of the woods here. Bonds rallying, which is nice to see. Gold and silver both having strong performances this morning. We're going to take a quick little 90-second break and come back, though, with the opening bell. We're going to turn these machines on and get started here in just a moment, so stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Mikey, my friend, we are back for the opening bell here, coming in about a minute and a half here. We've got E-mini S&P 500 futures up 55, a little under 1%. We're at 6660. Wow. NASDAQ up 220. You got the Dow up 450 and the Russell up 28. The Russell the strongest of the group here. Oil on the lows of the session here, 87.81, down $4.54. Volatility futures in by 74 cents, a little under 3%. You have bonds up 28 ticks. Gold and silver both rallying. Gold's up 160, about 3 2/3%. Silver up $3.40, a little under 5%. And Bitcoin futures up $2,300. Spot up 800. ETH as well, having a little bit of a bounce. What you think? What's your feel?
I don't think we'll be
skeptical.
Higher. Yeah, I don't think we'll be higher than where we're at right now by the end of the day. But that's also
700 in range.
Yeah. I just sold a put in micro crude also, so I kind of want that to work out.
Oh, so you're talking your book a little bit.
Yeah.
Trying to put the kibosh on them.
Yeah. But no, I mean, we'll see if it holds, but we haven't had a day yet where the green rally ended near the high.
Yes. That has been a big change.
Yeah.
That has certainly been a huge change.
Yeah. So we've sold all rallies recently. Chewy had earnings.
Ooh, Chewy.
It's actually popping off quite a bit.
Oh.
Up 10%.
That's What, $2?
Yeah.
All right.
But still.
Take it.
Yeah, they posted good numbers. That used to be one of our favorite vehicles to trade.
Yes.
When you had boots on the ground info from your apartment building.
Oh, yeah, when I could measure the package room. Yeah, that was good.
But yeah, interesting to see that popping off. But yeah, markets ticking up a little bit here. But like you said, volatility is still not moving, not crashing.
No.
At all. Still staying very elevated in the mid-20s, we'll call it.
E-minis at the high of the session here, up 65 and change, going through some of my positions to see what I can leg out of here. We were talking about it yesterday a little bit, Jamal and I. And on Monday as well. Monday really more so. But the bounce, you got back basically the day that you lost on Friday. It wasn't like there was anything, but there wasn't any big winners to take off the board because anything that you put on in the morning session on Friday, the market was significantly lower by the end of the day. So it's kind of like, you just got back kind of the day, not really, anything positive. That's what it's kind of feeling like right now here.
I did just close my Intel position.
Ooh.
So I had an Intel call diagonal spread.
Okay.
Long the 40 May, short the 50 April. And I just closed that for $175 profit.
There you go. I like that.
So yeah, taking some risk off. We're still in that mode of like, when we're down 100, if you throw on a bullish strategy, the next day, if you're up 100, like there's no reason to hold it for 50% profit. Just take the money and run.
For sure. I am totally with you on that. I actually probably need to do that in SPX. I did another one. Been doing these super wide butterflies on the downside. I might just maybe I buy in this risk here.
Yeah, SPX has been a great vehicle.
Been great.
Same with micro and minis. Like that's my best position this year. And I'm leaning bullish there, but it's and even into the sell-off, it still worked. So like it's a testament to selling premium in an index is just so much easier than anywhere else. Because like your worst days are 5%, 4%, 3%, where in equity you get 5% moves every day.
Yeah. I am going to close out of some of the. So I've been scalping USO calls as well as MCL calls, which I'm trying to get out of here. I want to get that even $50 out of those. But I just closed the 135 strike calls in USO. I've been trading those at like $4, and I've sold some at $6. I've sold some at $3.50. I bought some back at $2.60. I bought some back today at $3. I sold them at $4 yesterday. So just trying to play the game a little bit here.
Speaking of playing the game, I just got filled in Microsoft.
Okay. What'd you do there?
The long-term calendar spread.
How long?
I bought January, 500 strike call.
January, like leap calls?
2027.
Oh my God, he's a long-term investor now.
Yeah.
Look at you.
I bought the Jan 2027 500 strike call, and I sold the September 500 strike call against it. So 300 days versus 177 days, just doing that, half the time frame. But that was a $5.80 debit. $5.80. So $500 to play for a rally here. And if you look at the analysis tab, it is a pretty healthy win, regardless of what happens with IV, if you get that rally, just because your Jan option's obviously going to be way more expensive than your September option is. But yeah, just playing for a return to 500. Or even like 400, 420, 430, 440, like that'll still be a nice winner.
Yeah.
But I just feel we're in this territory where it's getting a little too egregious here. And I'm willing to take a $500 shot for the rest of the year.
A lot of duration. I think that's a perfect way to play it. I don't know. Should I do something like that?
Maybe.
I mean,
probably.
I would think just buy the January leap calls and just play it.
Yeah, you could do that too.
Oh my God, I'm turning into.
At a certain point, when these equities get to multi-year lows,
It's a leveraged way to play a long
that's
position. Like if
100%.
you might not, if you were to buy the 450 call in January, you're not playing for the stock to be 450 in the next month.
No.
Like if we grind higher, this option has a lot of gamma to it. It's going to get bigger as the stock price gets bigger, and you don't even have to hold it to 450. Like you're playing for 20 points up from here, and this option moves. All right, I'm gonna play your game, Mikey.
Thank you.
I'm gonna play your game. So I'm in. I did the 450 calls, which is about a 30 delta, out in January. I mean, who knows
what could go wrong?
Who knows if we're even here in January? I mean, my God, we got war, we got famine.
Aliens are watching.
I mean, shoot, a lot of time. Quick little market update. We got E-minis up 68 here. They're the higher end of the session here, 66.75. You got the NASDAQ up 273, the Dow up 538, and the Russell up 36. You have oil at down 442 here at 87.94. Volatility futures now in by 95 cents, 24 on the dot. You have bonds rallying up 27 ticks. Gold and silver both looking strong here. Gold's just below 4,600. Silver up $3.42. Bitcoin actually rallying a little bit. Futures up 2,500, 1,100 on the spot. I did want to look at OVX, which is our oil volatility. It's basically unchanged here at 89. That might play into your idea that maybe we're not out of the woods just yet. Oil volatility staying relatively bid here.
Yeah, I mean, I was shocked to see the MCL premium here. This sell-off is certainly helping the downside value.
Yeah.
But like just the fact that you can get $4 for an 85 strike put, which is still 2.5 points out of the money for 8 days, you're basically getting a 5% cost basis reduction for 8 days of risk.
Yeah. It tells you that volatility is through the roof.
Yeah. And the nice thing about like selling a 2-day option or an 8-day option is that you're going to get a massive theta decay number because the extrinsic value goes to 0 in a week. But even if you're tested and you want to hedge it, like you can move the 2-day into the 22-day or the 8-day into the 22-day and move it another 7-8 points out of the money, and then end up with a 22-day short put that's well below the current market price. So yeah, I like the near term selling, just because that's another way to take advantage of this pure implied volatility. The less time you have associated with your option, the more implied volatility you're selling, which is the opposite story of what we just did in Microsoft. Microsoft, we're inventorying long-term delta at these low prices at a lower implied volatility because the far out option cycles have a lower implied volatility, as you can see in crude oil as well.
I sold a call against my in the money GLD put, so reducing a little bit of exposure in gold here. Still leaning very long by default, basically because it's fallen so far here. I'm also like kind of taking off some of these short premium positions that have as part of strangles, like in Intel. I just liked out of the put side. That was part of a strangle that we had on, and just kind of playing into the two-sided action we've seen here. Sell the option at $1.50. It's marked at 70 cents. I kind of take the money and run, lean a little bit directional into the up move that we have here in a small way with out of the money calls. It's not like I'm short the stock here. I'm short volatility, no doubt. I'm gonna try and put an order in to close these love puts. Oh, that was easy. Okay. So I closed out. I had some laddered puts in love. So I'm taking that off the table here. UAL is another one that is kind of on my radar here.
Oh yeah, UAL, especially with that triple seat deal they got going on.
Yeah, you like that? You're a buyer of that?
Imagine all the people sleeping with their huge dogs now, taking up the whole row. Yeah, I think, like I said earlier, when Vanetta was on, like these airlines at lows, it feels like a nice way to get long if you're willing to take the risk. But yeah, I like getting long United. I was just filled on a gold calendar spread too. Long May, short April at the 450 strike for $500. So just taking these $500 calendar spreads and throwing them everywhere at lows here. UIL is interesting because it's got earnings coming up. So long May, short April with a diagonal spread, I think is a great way to play it if you intend to roll that April cycle into the earnings cycle, which right now is being projected into that April 24th weekly. So you have that kind of out where if you don't get the move that you need, you can roll 1 week out, pick up a lot more premium, and you can see that reflected. Like the 105 strike in April is trading for $3. The 105 strike for the next week is trading for $4.
I just got long diagonal spread in McDonald's in May. I was going to sell some puts, but volatility is just, IV rank of 26 is not low, but monthly implied volatility 25%. Bought the at the money 310 call, sold the 320 in April. I did it at $8.80, I believe, $8.85. So that was one that I wanted to look at. And then ARM was another one that I was thinking about, maybe doing like a call ratio spread or something like that.
Yeah.
Playing into the kind of move, the 20-point move that we've had here. Let's see. What's our high? So we'll call the high like 175-ish. I'm thinking I'd do a little shorter duration.
Yeah. Lots of call skew there.
Yeah.
$8 option, 20 points out of the money compared to a $6 option, 20 points out of the money to the downside. Yeah, call ratio into this rally plays into the extrinsic value increase on the upside and the call skew infusion. So I like that.
Yeah, markets are a little bit wider than I would like. I'm going to put this down at $1 and I'm going to let it sit. They're probably going to take it right here. Yes. 165, 175. I did it in the April monthly. So kind of playing a little bit short term here with that. So tightening up some positions here, putting on a couple new ones, but we can take a quick little break and get to our what's your assumption trades, because those have been bangers across the board for months and months, years, dare I say.
Yeah.
So we'll take a quick little 90-second break, come back with what's your assumption. That's viewer submitted trades, tastylive.com/assumption. If you'd like to put yours in for next week, you might want to wait until then. But we're going to take a quick little 90-second break, come back with trade ideas from you, the viewer. You're listening to Tasty Live. Stay tuned.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day. It's only the rest of your life.
Mikey, my friend, we are back. E-minis only up 54 here. Volatility at 24.25, perking up a little bit. You got the oil futures only down $4.20 here, so they've rallied a little bit here. Ooh. Just give you an icky, no.
I mean, I just
It's not inspiring.
No. Nothing says everything's in the clear where all systems go for rocket ship to the upside.
Yeah.
I think you're just going to see these relief rallies that get sold off until things change.
Damn.
But
we were
that always brings opportunity.
Yes, it does.
That's all that matters, really.
Speaking of opportunity, we have the opportunity for some new trade ideas. Play that little music that we have.
Conjunction junction. What's your assumption?
He doesn't know this. He doesn't know the.
I know. I need to get on board with what the hip kids are doing these days.
We're not hip. We're dorks.
It's gonna be okay. What's your assumption?
Let's do it.
Let's dive in. INFY. Who ain't got no alibi? You.
Oh my God.
I gotta stop. INFY bullish in May. More of a speculative trade here. Cheap stock with solid IV. Selling at the money puts from Luke in Orlando, Florida.
Do we know what the stock does or is?
Infosys?
Infosys.
Yeah. I assume they give info via systems.
Yeah.
So one of the things here is that, first of all, it's trading for 1337. Largest number at Elite was yesterday.
Wow.
So here we are. Lack of weekly options is always going to be a red flag for me.
Yeah.
Just because if they can't give us weekly options, there's not enough activity in this stock to give us weekly options. And you're seeing that in the options market.
Yeah,
You've got 0 bid, 75 ask from 9 strikes below. Even at the money, you have a 60-cent wide bid-ask spread from 60 to $1.20. So I think this one's tough. With that said, if you want to sell a put, just be really careful with your pricing. I would not do any multi-leg spreads in these kind of markets. Like one option only, I think is fine if you want to do it.
And start way above.
Yeah. start way above.
Let the market come to you. You never know. You might be making bids and offers here, depending on what you're doing.
Yeah. But it's going to be hard to get in. It's going to be hard to get out. So it's kind of I might just buy the shares if you're bullish, because that's a liquid market.
I agree. Should I just buy 100 shares just to be in solidarity?
Put it at 1337.
Oh, shoot. Okay.
Yeah. That way, well, you're going to get filled now below.
No. I'm going to put it in at 13. Oh, yeah. Well, duh. Why would I put it at 1337? I got prices to 1334. I was not paying attention. I thought you were saying it was higher than that.
Sorry.
And that you were going to let it come to me. Okay. Yeah. I bought 100 shares of stock. I think to Mike's point, I think that's probably the right thing to do with markets, with bid-ask spreads just not looking good here. So I'm with you, Luke in Orlando. Appreciate the new stock, not one that I've looked at recently. And I did not know it was an ADR. So I don't know if it's somewhere besides China, but a lot of those China stocks are ADRs as well. So that doesn't give me warm fuzzy feelings either.
All right.
Next, so we're 1 for 1.
1 for 1. EWZ neutral May timeframe, 32.42 strangle, brings in close to $1 credit. Decent return on capital for a Johnny trade from Sean in Hong Kong. Wow. From underneath us.
So we're looking at underneath us. I like that. Yeah. So we're looking at, a 50-cent-ish option on either side, trades at $1. It's a pretty low buying power requirement. It's kind of a meh for me in terms of the total premium. What about doing?
Yeah, I mean, it's a low credit for one contract, but it's a high return on capital. At the end of the day, it's $1 credit for $370 in buying power. So 30% return on capital is really good. I think if you do a trade like this, for you, maybe you do 2 contracts.
I was thinking maybe just do one straddle.
Or one straddle, yeah.
That's what I was thinking. I'm just kind of...
Yeah, similar. That's the nice thing about short premium is you can kind of manipulate it in this way where your break-evens are going to be similar, but you pick up a lot more premium. You put up a little bit more buying power, but the ratio of premium to buying power is still very high. $4 for the straddle for $700 in buying power is pretty good.
They didn't give me any pennies in that trade. I did the 37-38 strangle / straddle. It's really a straddle. Right at the money, I just went to the out of the money. If you want to go to the 38 strike, it would lean you slightly bullish. If you want to go to the 37 strike, you'd be leaning slightly bearish with a in the money short call. I'm going right at each point. They're basically the same option, 0 delta-ish.
There you go.
And I did it at 354.
Cool.
So I'm in.
Love it. What else we got here? SPX. Okay. 0 day. Okay, I can get on with this. Expecting SPX to stay in a wide range this week with the VIX around 26. Neutral iron condor or even a slightly bullish lean from Gavin in St. Louis, Missouri.
St. Louis.
You can find me in St. Louis. Up 40 points right now.
Sold off a little bit.
Yep, as foretold. The 0 day options, though, I like to do this cookie cutter setup. So I'll get in this one with you guys.
What do you do? I'm going to tell you what I did. What do you do?
So I like to do the $5 wide spread for $2. That's like the cookie cutter setup.
Put spread?
Just the iron condor.
Oh,
yeah.
Okay.
So I just
got like a chicken iron condor.
Chicken iron condor. Yeah. So I got filled at the 65.50 short, 66.40 short to the upside, and then just defined risk 5 points wide. Got filled at exactly $2 for the 0 day. I like this setup because if I'm going to get blown out on this thing, the $1 premium, $4 risk is probably going to get blown out too.
Yeah, it's all the same.
So I'd rather collect more, risk less, and then play for this chop in between here. Versus risking more, getting like 15 more points out of the money. And in this market, 15 points is nothing. We just saw the market sell off 30 points in 10 seconds. So I'm in. about 100-point range. We'll see what happens through the end of the day.
Me and you, Mike, I did the same short strikes.
Okay.
I went 15 points wide, little meteor, because we've done all the SPX studies, 20-ish delta for the short options. $20 wide is our usual study parameters. I'm doing it a little bit tighter here. I like to take like 75 cents to $1 out of it, so I'm putting a GTC to close it at 75 cents. Thank you, Gavin. I like it.
Love it. Next one, please. CRM, neutral, 50-day expiration. Not trying to step in front of the sell-off, but IV is elevated enough to sell premium. A wider iron condor might fit that thesis. From Mark in Dallas.
This one. Been a dog with fleas. 50 days out, you're neutral. Oof.
Yeah.
I
think we've always been Salesforce perma bulls, or sorry, perma bears. Perma bears. It's at the lows. This might be one where you just sell the put spread if you're bullish. I mean, the issue here is like if you go to the 50-day option May, it's still a 43% IV, which isn't too bad. But if I'm selling this iron condor 50 days out, going right at the expected move, you're collecting 225, risking 775. If you just get rid of the call spread, for example, and move the put spread up, you can basically get the same premium for the same risk. If you did like the 175, 165 at these lows, something like that.
I think that's probably where you go. I consider it a little more conservative, but you are naked on the downside. I did a put ratio spread. Long the 175, short the 165, and then short one of the 160s. I did this for basically a scratch, 70-cent credit. The idea here is if you get a little bit of a bounce, you can buy in that risk on the downside. You got a kind of a butterfly on the downside here if something crazy happens.
Yeah. And your break even at 150 is 2023 price point.
Yeah.
So I like it.
Playing the game.
Yes.
The CRM.
Yeah.
Yeah. Mark, I'm with you though. Neutral-ish.
Yeah.
I've risk on the downside.
For now.
If
it pops, you can buy that, the 155 option? No, the 150 option?
150.
Yeah.
150 at 70 cents. It's marked at $2 right now.
There you go. Next one, please. Carvana. Bullish. Car vending machines. May. Short-term bullish, but keeping risk defined. Shares are too expensive for naked positions. From Ken in LA.
Ken, I think we've tried to do iron condors in here before. I mean, if you look at these options, you got $2 or $3 wide bid-ask spreads out in May. I just think putting out, let's just see. If we went to the 20 delta and did like a 20-point wide spread on each side, let's just see how wide these spreads would be. You're priced at $1.75 credit on the natural to $12.50 on the ask right there.
Yeah.
How do you price that one? It should be 1/3 the width of the strikes around there, so it should probably trade somewhere around $6, $7, $8. But this is just way too wide of a spread to trade. You're gonna get bad prices going in, bad prices going out. I think you gotta abstain from this one, unfortunately, Ken.
Yeah,
or I have to.
I didn't have this on my bingo card though. The 2-year 10x in price, Carvana. Crazy.
I mean, this is
I think you wait for earnings if you want to trade it. It's a couple months out, but that will at least give more liquidity to this name. And if you're defined risk, it'll still be okay. Yeah. But yeah, I think the markets are just a little too wide.
Just watch your pricing there.
Yeah. Next one, please. Circle, neutral in May. If the markets keep sliding on Wednesday, not happening yet. Ooh, only up 34.
No.
I'll look to sell some premium. Feels like today was an overreaction, but staying cautious and neutral for now. From Seth in Lexington, Kentucky.
So the stock has bounced a little bit. It's up about $6 today. It was down about 20 yesterday, 25. I did get stuck into this into earnings, and then it bounced, which helped me very significantly. You like the 85 puts?
Yeah.
20 delta-ish short put? Does that sound crazy to you, Mikey? Do I
Not
do like
really.
a Jade Lizard?
Do a Jade Lizard. Yeah, the 85 short put, and then the 125, 130 call spread, or the 130, 135 call spread. Any of those call spreads you're still collecting more than $5.
I was thinking maybe I would do like the 125, 135 call spread. It leans you with risk to the upside, but if you were to have that sort of move,
yeah,
you're still going to make money on the trade because the spread isn't going to move all that much. I can show this here.
Yeah.
Real quickly. Hold on.
Yeah. That's the nice thing about the Jade Lizards.
Yeah.
Because the 10-point wide call spread, worst case scenario, if it goes up, is going to be trading for $5. And your short put is going to lose a lot of value. Still, you'll still have some theoretical profit, even if it goes in the money.
Yeah. Your real risk is up at like 160-ish.
Yeah.
You had some 60% move to the upside here.
Yeah.
Just to show that. I'm going to try 720. Let's see if I can get filled here. Nope. I mean, your defined risk on the upside. That's really the...
While you get filled, I'm going to go to the next one here.
Okay.
Oracle, neutral in May. Oracle doesn't look ready to bounce back anytime soon, drifting with the broader market and AI names. So a neutral strangle or slightly bullish Jade Lizard makes sense from Cody in Wichita. And
695 on the Circle Jade Lizard. Cody, okay, Oracle.
Oracle in May, Jade Lizard or strangle?
I think you probably do the Jade Lizard. I think just like we just did in Circle.
Yeah, Circle is same story. Like you can literally do the exact same thing, pick up $7 for a 10-point wide call spread. Or if you want to just ensure you have no risk, you can sell a 5-point wide call spread and you'll collect just over $5. There you go.
All right, I did the 130 put, the 165, 175 call spread, same exact mechanics as we looked at in the Circle position. Thank you, Cody. We will take that. I think the only thing we've passed on was Carvana. We even bought the shares in Info Systems or whatever how that stock was.
Yeah. Hey, when the bid-ask spreads are too wide, it's tough.
Be careful.
Next one, please. EEM, bullish trade, 30 to 60 days out. Bullish over the medium to long term. It's tracking the U.S. market recently, but still a good way to diversify. IV rank looks attractive from Owen in Reno, Nevada.
30 to 60 days.
Yeah. Bullish, I like. I also like it's a $57 product, so you can do anything you want, really. And IV rank's a little bit elevated. IV's at 35%, but for an ETF, that's pretty good in terms of high implied volatility. So yeah, I think if you wanted to sell a put here, do something like that, there's decent premium. What'd you do?
Okay. I did a little Johnny diagonal / calendar spread. I think this is a little bit better use of capital, especially if you're in a smaller size account. I bought the June 60s. I sold the May 62 strikes. I did it at 132.
There you go.
You can do it a couple of times if you don't mind a little bit extra debit, but
yeah,
like that's a pretty conservative way to play the upside here. You have markets fall out of bed. This is no problem.
Yep.
So I am in. Thank you, Owen in Reno.
Sweet.
Let's get to the next one here.
Silver.
Oh.
Bullish, short term. Back in silver and gold here. Aren't we all?
Yes.
Feels like they're due for a rebound. Happening right now. Yeah, decent move to the upside in both of them. From Ellie in Asheville. Yeah, we are both. So I'm naturally long in SLV because I have the 87-100 strangle, and then I just got filled on the 450 calendar spread, long May, short April, for $520. You can get a slightly better price now. What'd you just get filled?
I did the 65-70, or I'm sorry, the 60-75 strangle, so lean slightly bullish in April in SLV. I have long delta across the board in the metals, so I did this relatively small. But I like it. I'm with you.
Yeah. I have the 87-100 strangle. I'm going to look to roll that out today into this 4% rally out to May. But I'll update you on that when I get filled.
Cool.
Last one. FCX. Bullish in May. FCX could reclaim its highs faster than SPY.
Ooh.
What's the best setup here? From Pat in Cleveland, Ohio.
Okay, so I have some 60 strike May calls left over from a diagonal spread. I legged out of the 65 calls at like 40 cents. They're marked at 80 now. I'm thinking I might sell the 63 strikes. Again, some will lean a little bit bullish here and sell into this rally. Let's see if I can get filled here.
Yeah, this is another one where earnings are projected to be late April. You could buy May and sell April if you're doing a diagonal spread.
Oh, I just got filled on the SPX trade.
Look at that.
70 cents.
I'm going to buy the May 60 and sell the April 65 for $2.50. Or sorry, $2.75. See if I get filled there.
So I made that adjustment in FCX. Now I'm going to go, should I double down here?
Yes.
Or do I go a little bit more conservative? Because I'm long delta here. Maybe doing a put ratio. I'm thinking like the 55-50 out in May. Maybe I get like a 10 cent-ish credit.
I like it.
Oh no, I'm gonna go spicy. This is what we're gonna do.
I just rolled my SLV position while we're waiting on your fill. I rolled from the 87-100 strangle in April to the 87-97 strangle in May, and I picked up $1.60 in silver. So rolling into extrinsic value strength into this 4% rally today, you would not have gotten the same credit yesterday.
Oh,
I hear the clicking. I hear the clicking.
Come on. I'm trying to do, I want to sell the puts, but I'm going to do them like in a ratio. These markets are not great.
There you go.
All right. I did a 1/3 put ratio. The 50-40, the selling 3 of the 47s, buying 1 of the 50s. Your naked 2 units on the downside, I did it at 160.
Beautiful.
So I'm long delta. I'm with you. I'm with you there. And I will push that out. I will also get the SPX trade out there too. Cool. I think we
almost did all of them.
All of them except for Carvana is kind of the one that we gave the X to. Everything else, I think we did good.
Yeah. Very nice submissions.
Yes.
Keep it rolling. Appreciate it.
Yes. Thank you. Beautiful. We're going to take a quick little 90-second break, come back with fan favorite. We got TP in the house with us here talking airline stocks. You don't want to miss that one, so stay tuned for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, my friend, we are back. We've got E-minis at 66.50. They've rallied at about 10 handles here in the last 10 minutes or so, up 44 and change. Not looking great, though, but, you know, that doesn't matter because we have somebody that's looking real great right now. We got TP in the house. What's up, TP?
Well, I got to fix my hair, guys. Hang on.
Oh, no, that's pure sex.
Mike, you know how this works.
Yeah. Looks
you know
great.
how it works.
It looks
Thank
fantastic.
you. No, and so Mike and I go way back, and basically, you look at his hair. You could set your watch by a haircut like that.
Yeah.
I remember saying to him, I said, Mike, you want to go anywhere in this world, you got to increase your hairdressing budget. And look at him now.
I mean, his is perfect, perfectly combed. We have the perfect. You see, mine is me and you, TP. We didn't get the hair gene. You know, our hair's all over the place. You got the curly, you got the frizz, you got a little bit of yours looks like you've got the established look. Mine looks like, you know, rolled out of bed or something.
Hey, he's got a strong hairline. Strong hairline.
Well, we were talking about before we hopped on here, we're talking about buying real estate over in the Middle East. It's looking cheap. Nick, what did you find out about Dubai?
I was looking, it was like 25% discount you can get over there.
That's pretty steep. And yeah, I'm not saying I'm ready to move out of Texas. I don't know enough about Dubai or anything like that.
Oh, they would take you out to they would take everything you got, TP. They'd see you, they'd be like, "Oh my God, that's the cash machine just walked in."
They'd be like hens on like food, like
yes,
they pick me apart. No, but you know, it's the sort of thing where young guys like you, this is how, you know, these are the risks sometimes you got to take. Mm-hmm. And I'm not saying you should move to Dubai or wherever, but you know, when you see these are global opportunities, guys.
How has the market felt to you, TP, this week?
So, you know, what's very interesting to me, and you guys have been doing this long enough, so, you know, you have your own opinions, but this is the most what's the word I'm looking for? News driven, headline driven market I've seen in a while. And you can say, Mike, I know you've seen this stuff. You've seen Brexit. You've seen, Brexit a few years ago. You saw what, Liberty Day, whatever it was called, April 1st.
The day, it was Liberation Day. Liberation Day.
These events. But here's the difference, I think, is that those things didn't last. It was a couple of days of events, and then the market sort of, started going back to normal state. Now we are a month into this quote unquote conflict. And whatever your stance is on it, whether you're supporting it, against it, whatever, that really doesn't matter. As far as the market goes, it's still absorbing that. Like, Nick, we talked about this last week. The FOMC meeting was last Wednesday. I don't think anybody was really looking at the FOMC meeting. Mike, I don't know what you were looking at a week ago, but no rate cut was already priced in, and nobody really cared about it.
No.
It was all about what's going on with oil, what's going on with Iran, et cetera, et cetera.
For sure. I totally agree. I think the news-driven market, it's been actually fun to trade if you've been nimble in your trading. I think it's hard to for our traditional style of selling 30-day or 40-day puts or calls or strangles or whatnot, because you're having these huge swings day to day. But on the scalping front, or even if you're taking risk directionally, it's been a great trade. I think you really got to be nimble in this market as a whole, just because of how much movement you're seeing in both directions.
Yeah. Mike, what do you want to say about that?
I was just going to say that the news-driven and the reactionary market is pretty wild. Like the other day, we were talking about Monday, how it was up. It was down 80 points pre-market. Nick took a shower, came back, and it was up 160 points net. And it's like, what is happening? Like, what was just announced? That's your first thought. What was just tweeted out, or what was just announced? Like, that's what I was thinking. I looked at the market and I was like, okay, E-minis and NASDAQ are up 2%, oil's down 10%. What did he tweet?
Yeah, this wasn't an NVIDIA chip announcement. No. This was a geopolitical announcement. That's what's moving.
Well, you kids in your showers, seriously.
I take 2 a day. I get so much grief for this. Yeah, I take 2 a day.
Get a pack of baby wipes and just sit at your trading desk. You're fine.
Yeah.
No, I can't go in. I can't get in my bed without a shower. I can't start my day without a shower. I can't get in my bed without a shower every single day. I have to.
So what I've been doing, and I think this is the most important part, is using defined risk strategies. So the volatility is high enough. With the VIX, I don't know, the VIX is now, it was 26 whatever yesterday. Probably down a little bit today. But the point is, you can get enough credit for short verticals. Or hell, you want debit spreads. I don't care. You want to buy an money debit spread, buy a put spread if they're going down, call spread if they're going up, okay. But the point is, defined risk strategies mean that if I'm wrong on my bet, because that's what this market is right now, it's just bets, right? Look at the prediction markets. It's everybody's piling in there saying, well, the conflict's going to last this long, that long, whatever, who knows, right?
Yeah.
So for me, it's defined risk trades. Yes, I still have some short premium, naked options on. Okay, fine. But it's sort of a thing where, do as I say, not as I do. The point is, for most of my trading right now, it's all defined risk verticals. That's what it is, because I don't want to. I have been caught on the wrong side of this stuff,
and that's a good way to participate, but pump the brakes a little bit. So I like that. There's certainly a place for that.
And the verticals, like the defined risk nature of them is great, and you can sleep at night, which is great after your shower, of course. But I think another thing to bring up is, like, if you're selling undefined risk, you have pure exposure to that implied volatility, but you also have undefined risk. The vertical spread, you still get exposure to that IV by way of moving your strikes further out of the money, and then you set it and you see what happens the next couple of weeks. So you're still taking advantage of IV, just when in a different way.
So to that point, before we jump into the segment here, you guys know this. You've been doing this long enough. 26% or the 20 handle VIX won't last forever.
No.
Maybe it will. Maybe it will. But it usually doesn't do that. And when you're trying to find credits, the credit spreads or whatever, short selling premium when the VIX is 13, 14, hell, even 15, it's pretty hard. And if you're seeing this, market, if you're seeing the volatility and your natural inclination is to put your hands in your pockets and not do anything, okay, you choose the level of risk you want to take. I get that.
Yeah.
If you're scared, okay, I get that. But don't expect to get rewarded like this for very long.
For sure. I think
at some point this is going to get resolved one way or the other, and the VIX is probably going to slink back down below 20.
For sure. It's you never know how good you had it until it's gone, right, TP? That's how I feel about VIX.
Indeed. So let's get into today's segment. So what I was looking at, the cherry picks yesterday that you should have got yesterday afternoon. Some of the symbols that have been really whacked lately are the airlines. Yeah. Understandably. I know you guys probably fly more than I do at this point. But what happens is, okay, higher crude prices. Okay, that means higher jet fuel prices. That I understand. You have this kind of, weird feeling. Oh, geez, these conflicts, wars, whatever, makes me a little bit afraid to fly. Maybe I don't want to fly. Again, add in the whole the DHS funding and the TSA agents not being able to work and all that stuff. I don't know what the lines are up in O'Hare. I've seen 4 hours and stuff like that.
Yeah.
Down in Houston, it's 2 and 3 hours sometimes in the early morning. Nobody wants to deal with that.
Yeah.
All that has conspired, along with sort of inflation risks where people just don't want to spend the money flying anymore, and the airline stocks have been whacked. Only one. So what I looked at, guys, is I put this together. I pulled in as many airline symbols as I could find. There are some that are left out that I just didn't have physical room for, because I'm not a formatting guy. So I couldn't necessarily squeeze this down. What I saw was, except for Delta, and I think, Nick, you probably did a Delta trade yesterday, maybe?
I did a ratio spread, yeah. Call ratio.
Yeah. Delta over the past month, and I sorted this by the 1 month change. Why? Because that's when this conflict started. What was it? February 28th or something like that. Mm-hmm. That's close enough for a month for me. So what it is, Delta is basically unchanged. The SPY is down 4%. Every other airline, though, is down at least twice, sometimes 3 times, 4 times as much, 5 times as much. So the airlines have been getting whacked, okay? So understandably. However, as we look at this stuff, let's go take a look at the next slide. And, I'm not a chart kind of person. I don't necessarily look at charts, but it's okay if you do, and all I ask is if you look at the chart and you're bullish or bearish based on that, use a smart option strategy to express it. That's all. But look at some of this stuff. So starting in January 26, so this is only 2026 returns. Percentage changes, right? Uh-huh. So we saw big rallies. The green line is JetBlue. The blue line is Southwest. Those had pretty sharp rallies and then basically got crushed starting in February, late in February. The other stocks like UAL and Delta have been lower all year, so far. And Jets, I like to include Jets in there. It's an ETF, the ETF that tracks the airline stocks. Mm-hmm. Not the most liquid, not the best trading symbol out there, but it's okay. You can trade it. traded options and jets pretty often. So this is what I'm seeing here. And like I said, JetBlue, Love got crushed. And Delta is the only one sort of creeping up over the past few days. Everything else, though, has been sort of consolidating over the past week. They had big sell-offs, and now they're starting to firm up a little bit. Does that mean they're going higher? No. Nope. They all could go down. But I think what's going on with the airlines as we go into the spring and summer, the seat bookings are actually pretty strong. If you look at the news and some of the reports on these airline stocks, they're actually doing okay. The long lines notwithstanding. And as we go into the spring and into the summer, this is when historically the consumer, like us, I don't know if you guys are traveling for business, I guess that counts for business travel, but leisure travel and business travel is usually pretty resilient through these months. That could in turn give a little bit of upward pressure for these stocks. If the bad news is already out, maybe they found a floor. Let's take a look at the next slide with the implied volatilities. Obviously, guys, the IVs, this looks back over a year of just IV numbers for these 5 symbols. Obviously, they're higher now. The quote unquote excitement around this Iranian conflict has just jacked up their volatilities. What does that mean? Mike, this is what we were talking about a few minutes ago. You are rewarded for taking risk. I don't know if these things are going up or down, but I do know that if I step in and am willing to take some risk, that the premiums the options offer, those I can actually use those. Let's go into the final slide. Then maybe we can actually take a look at some of these on the platform. Not sure if we can do that, but the final slide is just the IV ranks. They are rich. Jet 70%. Southwest, Love 60-ish% as of yesterday. Everything is high. Pick your poison, guys. Pick your poison. One of the big things, though, and this sort of flies in the face a little bit about what we're talking about, but not too much, is I was looking at some naked short puts in these things. The reason is that their prices aren't particularly high. Okay. And, if I'm looking at a $40 stock or a $20 stock or even a $60 or $90 stock, the buying power reduction, the capital needed to trade a short put on there is relatively low as opposed to a $7,000 index like the S&Ps, okay, or a very expensive stock like Nvidia or something like that. It's 150 or 160, whatever it is, right? So because these stock prices are relatively low, the capital requirements are a little bit lower too, and they actually sort of, you're thinking about a naked short put. I looked at a naked short put in the cherry picks yesterday in Love and in Jets.
Okay.
The skew is pointing towards the upside in those stocks. Your mileage may vary. If you guys are looking at Delta, I would also look at Delta, DAL. I would also look at UAL only because that's Liz Deerking's favorite airline. And people say, well, how do you pick stocks? That's pretty much it. Okay. It's not like I do this deep dive into the financials, which you can do. Great. If you want to do that, great. But if Liz Deerking says she likes United, I like United too.
I like it. I have not traded Jets in some time. Trying to do like a little covered call here. Same sort of thinking as you had with just a short put. UAL, I think, is probably the most liquid of the bunch. Kind of like those puts too, like maybe the May 85 puts. I mean, that's kind of the low that was set in the last week or so. Trades at 380. Let's see.
The last trade I did in UAL was an 80 strike short put in April. That was like 2 weeks ago, and I closed it for almost 50% a week later. I actually just got into a call diagonal spread in UAL which is an interesting way to kind of straddle the earnings announcement. So I bought the May 95 and I sold the April 105, but UAL will have earnings sometime between April 24th and May 1st. So if it doesn't rally the way I want it to, I can roll that short option into the earnings cycle and really get a lot more premium because of the earnings announcement and see if you get bailed out to the upside there. To your point of the numbers look good, this might be a reaction, obviously a reaction to the heightened oil prices, but if the bad news is out, maybe we see a bid there in a defined risk way.
Yeah, that makes a lot of sense. And, you're talking a little bit about capturing volatility in the verticals. You still have volatility exposure to that. With a diagonal, you're getting a little bit of long vega. So any excitement going into those earnings numbers, they might jack that back month up a little bit for you.
Yep.
Be awesome.
I like it. Good stuff, man. Cool. All right. So did you get in? You got into a new one. So you did the diagonal. I did the short puts, did a cover call in Jets as well. Put a new line item in my portfolio, which is getting jam-packed here. So thank you for giving us a new one, TP. Appreciate it, man. We're going to take a quick little 90-second break. We're going to come back. We got the boys from the trade desk. We got Ryan from Tasty Crypto. We got Quentin from Tasty Trade coming on to give us the top 20 symbols of the day. We're going to take a quick little 90-second break. Thank you, TP, for joining us. You're listening to Tasty Live. Stay tuned for the trade desk.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Mikey, my friend, we are back. Just a quick little market update because we haven't talked about it recently. We've got E-mini S&P 500 futures up 52 right now, a little under 1%. We're at 66.58. You got the NASDAQ up 267, a little over 1%. The Dow up 373, and the Russell up 39. The Russell and the NASDAQ, the strongest of the group today. Oil catching a little bit of a bid here midday, down 379. It was down about $4 and change about an hour ago. Volatility futures at 24.25. They're down 69 cents, about 2 3/4% here. Bonds have remained steady here at 113.16, up 28 ticks. You have gold and silver both strong, 45.96 on gold, up $162, a little under 4%. Silver up at 73 and change here, $3.61, near the high of the session. And Bitcoin having a nice little day here, up $2,000 on the future spot, up $789. But who cares about that when we have this guy? Q. What's up, Q?
That was beautiful.
That's
Thank you very
elongated DTT.
Well, it's funny you say that because Jamal was saying over the last couple of days that I wasn't doing enough DDT. I've consciously made that decision to extend the DDT to go even further than any man has gone before with the DDT.
No, I loved it. So thank you.
I try to vary it too, like loud deets, soft deets, DDT, you know, like a little.
And yeah, because that's what's bringing me in.
Hey.
You know, it's everything else is stable except the connection when bringing me in.
Yes.
You know.
But to everybody out there that doesn't like my DDTs, I see some people saying it's getting better. I will say the DDT master will be back on Monday next week. It's spring break. He's out on the beach, taking the boat out, with his
be nice.
With his favorite son.
Yeah, it must be nice. Well, we're out here.
Which clearly is you. In some ways.
Still the patriarch.
There you go.
Okay.
Yeah.
Number one son. Firstborn son.
There we go. That's what matters.
That's what I tell myself.
The first cut is the deepest.
That's true.
Yeah.
That's true.
That's what they say.
What's happening with you, Q? How are things? How's the desk right
good.
now? A little bit of a rally. That's probably good for
Yeah.
some people. I think that's probably positive. A little bit.
Yeah, because I mean the deltas are now neutral across the board. I would say the deltas are back to neutral where they're at. But I mean, volatility is still bid. Volatility's been bid. A lot of interesting opportunities still out there, for trading. And yeah, I mean, it's a very, very active time right now in the markets for the retail traders.
For sure. I think, I get those emails of like, did I miss it? Did I miss it? I don't think you missed anything. You still have very high implied volatility stocks still on their butts, some stocks at highs. You got more than enough opportunities out there.
Yeah, and with the way like a lot of our customers trade, like with the premium selling strategy, it doesn't always follow like the activity of other firms and like the normal investors, right? Where they're just like buying as things slowly tick higher. This is a lot of the times where like a lot of our traders will, use a lot of their buying power, get more and more aggressive because that implied volatility is high. And so this is when it's more exciting for a lot of our customers to trade.
Are they taking advantage of the moves?
Yeah.
Seeing a lot of people like scalp / take, quick profits.
Yeah, I would say the scalping activity, not as much, but it's more like the, selling premium, not as directional right now, because I mean, overall the market's been like seeming pretty neutral, right? With the sort of like the slight down move, but it's been seeming more neutral, right?
Markets go down sometimes.
Yeah, right. I mean, imagine that.
It's kind of crazy.
But yeah, people have been taking a much more like neutral standpoint, like just across the firm, not like, just saying like what we're seeing in general, right? People taking a lot more neutral stances, trying to be short volatility because it's at its highs right now.
For sure. Well, good stuff. What do we, you want to get to the list?
All right.
See what people are slinging around?
Yes, sir. Let's go top 20 symbols going through the system. At number 1, the king dethroned by NVIDIA with a 28. Wow. SLV 81, Amazon 26, Tesla 3, GLD 56, Microsoft 32, HIMS 56, AMD 37, Oracle 99, Palantir 19, Apple 16, iBit 71, Micron 68, Broadcom 58, Google 22, SoFi 15, TQQQ 29, Netflix 29, MSTR 57, and Robinhood 46. Some different symbols cycling through there, which is nice to see.
I like to see that. NVIDIA, you got an Ivy rank of 2 in NVIDIA. I did a June, May diagonal spread, 90, long the 190, short the 200. We'll play for a little bit of upside there. Stock's been choppy.
Yeah, you know what a lot of people have been like selling premium in actually is Robinhood, because it had like that big move up, and then when it went back down, lots of volatility, and then sort of just stayed there in like that $70 range about.
Yeah, I kind of like that. I've got some long stock, which hasn't been great here. But I think I could probably add some premium.
Yeah, like with their crypto exposure, you know, and Bitcoin going down. And next person can talk about that.
Of course.
I'll leave it alone.
Of course.
HIMS is interesting though.
I've traded a lot of trims.
I was surprised to hear that on there.
I've been doing like 1x2 like strangle ratios, selling 1 put to 2 calls because there's lots of call skew there. That's another one of the like hype kind of stocks.
Yeah, I could imagine a lot of call skew in there.
Yes. Q, thank you so much. We're gonna be gone with you. We have our next my man Ryan in the house. What's up, Ryan?
What's up, guys? Mike, welcome back.
Thank you.
I feel the energy in your voice right now.
I'm no longer sick. I've been fighting this cold for like 4 weeks.
Oh yeah.
He had the same thing. Gus has it right now.
Yep.
Was it a cold or was it just like sinusy like?
It was all of it. I think it's COVID. I think it's going around, or it's the
really.
flu.
We got the.
Yeah, they're just calling it something different these days.
Yeah, it's nationwide, worldwide.
Yeah.
You've all got it.
Yeah.
I feel like
Gus was giving me some grief yesterday because he's got the sneezy sinus action. That's
but
what
I wasn't
had.
like sick. I didn't feel sick when I had it. I was just like.
We all had the same thing.
You're just tougher than most.
Yeah.
But yeah, I gave it to him and then I buzzed off for 10 days.
Yeah.
So. But yeah, it's weird.
Yeah.
Sinus action without feeling sick is very odd.
So Ryan, you're not sick.
Not sick.
Bitcoin's not sick anymore.
It's still going sideways, but we got the bounce in gold I was looking for. Just personal note. Oil vol has presented some opportunities. I like buying dips in there. But yeah, the nice move in ETH if you were buying any of this pullback here, or if you're just long like myself. But outside of some of those tokens, seeing a nice move in Hyperliquid, in Tau.
There you go. I knew you were going to talk about that.
So
you got some Tau? You buy some Tau?
Not yet. But I was going to say we should go to Tau and celebrate the Tau tendies.
There you go.
I don't know if I can go to Tau. I think I've aged out of Tau, I think, at this point.
Yeah, so things are okay.
Yeah.
Yeah.
I mean, that's got to be good, to see some of those. Like, so why don't you explain what Tau is for those that are new to this?
Yeah, I guess without getting in deep into the details with just a few minutes here, I would think of it as a competition marketplace for services. A lot of those services happen to be AI related. As a result, and there's some interesting economics associated with it, but as a result, it's kind of become this AI blockchain without explaining how all of that works.
Yeah.
That's kind of the narrative or the theme that I would think about. Recently starting to get picked up a little bit more. I would suggest to everybody go out and read about this, learn about this. Maybe it's interesting to you, maybe not. But CEO of NVIDIA was just talking about it and definitely starting to get some more traction here. So price is recovering, but it's still kind of middle of the range that it's been in over its lifetime. It's still relatively new and very risky, very, very volatile. But I think the concept is interesting in terms of decentralized AI and decentralized AI services that are accessible via, this ecosystem essentially, which is BitTensor network.
But I think as a larger, just it getting a little bit on the tail end of the crypto space, like getting some recognition on the tail.
Absolutely.
Has to be a somewhat bullish feel for you. Just for the space getting that kind of recognition. On the flip side of that, you had some of the Circle stuff, the stablecoin situation, which I think they kind of basically said they can't pass through.
Yeah, let's talk about that because it's presented possibly some interesting trade ideas or opportunities. You've got Circle, which has gone up, I think, 100% or more in the last couple of months. And then yesterday, it got smashed down by over 20%. Coinbase getting hit as well. This is on the heels of at least a Senate version of the, or a compromise of the Clarity Act here, looking to prohibit any of these issuers from passing stablecoin yields on, and those platforms for the platforms that host the stablecoins or where you can park your balances, say Coinbase, for example, prohibits them from passing any of that yield on to users. That's what the banks and the crypto industry have been fighting in the back rooms over, essentially. It's been that sticking point, with the banks arguing that if the consumer can move their money to Coinbase and get paid 4% or 3% and we give them 0, well, they're going to move all their money from our bank. That's the argument. And that would be detrimental to the banking system.
Banks, yeah.
I don't know. But that's been a sticking point here on the Clarity Act, as well as just a lot of other things obviously going on. Yeah. That said, the Senate version of this looks like it would prohibit exactly that. And so you see Coinbase take a little bit of a hit, but you see Circle take a little bit of a hit. And I think the real reason behind this is not so much related to the existing economics, but it's this question surrounding whether or not stablecoin market cap, or USDC specifically, continues to grow if you remove a real reason for people to hold stablecoin balances.
Sure.
25% of that circulating supply of USDC is held on Coinbase's platform. Clearly, Coinbase is a massive consumer platform, millions, if not tens of millions of users, right? And so if those users can no longer generate any return off of just holding those balances there, in the same way that I suppose you would as a bank, and maybe there's a strong argument from the banking side around this, as these aren't banks. Mm-hmm. But if they can no longer do that, does that possibly slow down the growth of USDC and the related revenues that both Coinbase and Circle enjoy from those things, right? Yeah. So short term, you see that as the catalyst to take down a stock, in my opinion, that's gone up 100%. You have to be used to that kind of volatility on the downside. You're going to get these corrections. I don't think that where we are today alters anything fundamentally in terms of the trajectory of the growth of stablecoins. Mm-hmm. I don't think less people are going to use stablecoins in the future. There will be less use cases, even if you can't generate yield off of a balance at Coinbase today or in the future. We'll see. This is not passed into law. This is a version of it. There's a process that this goes through. So we'll see where we get to, but that was the catalyst to, in the market when other things were relatively stable and you even, towards the end of the day got a nice bounce there, that was enough to push this a lot lower. I think when you get that bounce in volatility, especially short term as a result of this, maybe you look at an opportunity. I stepped in, sold a put spread far out of the money. Mm-hmm. It's come in a little bit here today, but I think you look for kind of some of these news-driven catalysts to present short-term trade opportunities or ideas. But that's really what's behind it. So therefore, you see a little bit of damage in terms of Coinbase's performance, but less so versus Circle. Circle makes money off of stablecoin reserves, right? Yeah. They facilitate this process. They charge some partner fees, but generally speaking, it's a spread between whatever the U.S. Treasury yield is.
Yeah.
And so maybe it slows down adoption. We'll keep an eye on that. At the same time, though, you have to also wonder if this other headline maybe wasn't just as important. And there was a headline that came out that for the first time, Tether's USDT reserves are going to be audited, or Tether's going to be audited by one of the big four accounting firms. I don't know which one. Mm-hmm. But what that means is that, okay, Tether is taking steps towards further legitimizing its business in the eyes of regulators, in the eyes of the market. There's certainly been some questions. There's been scrutiny at times around whether or not dollar for dollar US dollar Tether is pegged. What actually is backing this. Yeah. So if you get clarity around that, all of a sudden I think a much more legitimate competitor, especially in a more regulated environment in the United States, And Tether is the biggest globally in terms of market cap for stablecoins. But all of a sudden, that's a lot more direct competition here domestically for users or for those participants. But in terms of what users have access to, that's direct competition to Circle. So that is important as well.
Yeah.
Any regulations that are passed, of course, apply to all stablecoin issuers and platforms the same way. But Circle gets hit a little bit on that. How much of it, though, is that the competition could be coming quickly?
Sure, that's a part of it. I mean, I would think the scariest part is going up against a behemoth like JP Morgan. Like Jamie Dimon is going to defend that zero interest rate with his life. I mean, that's where banks are making all their money is, you have $100,000 parked in a savings account and you get, 1.5% or 2% or whatever the number is. And, the bank gets the other 2%. And that's millions and millions of customers. And so, that's a formidable foe to be up against.
I totally agree.
Like, it's a scary thing.
I think in most battles, let's run the numbers, the banks probably win
95%.
99% all the time. But, there's this one other variable, and they debanked him. He's known to go in a lot of volatile directions.
Yeah.
I guess you just don't know what role does Trump play in all of this.
Yeah.
And I think that you always have to throw that question out there. You have to be somewhat prepared for some crazy shit.
Yeah.
And not so much that exists or is related to this here, but we know, how quickly things can change in the markets with this administration. It's not a right or wrong. It's just something that you ultimately have to be aware of. And so I'll throw that out there.
Yeah.
But I think, probably the platforms are not able to, in the current form, pass that yield on. We'll see.
Until JP Morgan makes JP coin and just replaces,
Sure.
USDC, and then they get, it's like, oh yeah, this is fine, but you just got to use our coin where we skim.
They need to catch up a little bit
20
first
basis points
in
off.
terms of the user base.
Yeah.
Yeah. Well, they start with a pretty large, I guess, potential market for that. Yeah. But yeah, we'll see where we get to. Like I said, it's not a law by any means, but at least not yet. But that was the catalyst. That's kind of my view or my read on the situation for what it's worth. I do think if you're a betting man, you're probably betting the banks here, and that's what ultimately the outcome looks like. But to me, it's presented an opportunity to sell some vol, sell some premium, possibly downside risk premium in names like Circle and others that sometimes just given the correlations and where these are in terms of the baskets that they sit in, you see that other things that largely aren't impacted are just simply impacted by the flow and the selling pressure there. So maybe something to do in there. But yeah, outside of that and some of the names that we called out earlier, not a ton going on when we look at Bitcoin and ETH or Solana, or really anything in terms of the biggest market cap tokens. It's driven by the macro, of course. So if we see a little bit of reversal, in my opinion, of the recent jump in interest rates, if you get a little bit of that relief or pressure comes off, a little bit of a reversal in the dollar, probably see vol come in most places. You're seeing vol come in crypto a little bit. How long does that last? Well, until the next headline.
Mm-hmm.
But for now, that explains the short-term price action.
Love it. Couple slides for us.
Got an update on one standard deviation trading ranges or weekly expected moves, whatever you want to call them. So you can see vols come in a little bit if you watch the show every day. We report on this on Monday and Wednesday. So we came in from about 54 to 51. Not much of a change. Realized vols coming down a little bit as well, but still elevated. Bitcoin's range right now kind of creeping higher, and this is true of all of these ranges. Bitcoin creeping higher, 77 about on the upside, 66 on the downside. You've got almost 2,000 on the downside for ETH and 2,400 on the upside. Not levels where the trend flips back to more of a bullish trend. Performance on a kind of 1 to 3 month time period looks pretty good. Not there yet, but if we get back up above, call it 77, 78, just push up into 80, start to think differently about that. Same thing with ETH. If we're back up above 2,600, trend looks a bit more bullish, and we're starting to reverse the moves that we've seen previously.
Very good. Awesome. You still got your IBIT position? You been holding?
Oh, yeah. I'm an IBIT lifer.
I know, it's great. Volatility, although it's not super, super high, is still high in an IBIT. It's a great trading vehicle. It strangles, diagonal spreads, covered calls. Those are all in play.
Yeah. I mean, I collected over $3,000 in premium last year on a strangle and IBIT, and then
on a one lot.
It took 100 shares, still profitable. I've got a covered call at 43. I sold that 30 strike short put for June that we talked about a few weeks back. That's coming in nicely. That was basically just a pure vol play, but if we get down there, it'll cut my cost basis in half. I'll just dollar cost average and then ride off into the sunset. But yeah, IBIT's a great trading vehicle, in just a pure premium standpoint.
Speaking of riding off into the sunset, that's it for us on this session, Ryan. Thank you for joining us. We're going to take a quick little 90-second break, come back. We got Liz and Jenny. They're live from the SIBO, and it's always electric when the ladies are live. We'll see you later today. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews, and we are live from the SIBO's famous SPX pit.
Today, we have a very special study from our in-house genius, Jacob. You ask, and you shall receive, and you shall receive even more than what you ask for.
Ladies and gentlemen, put your helmets on. This is how the sausage is made, where the ingredients came from the sausage.
And it is a deep dive into...
And what the animals ate. Because I don't even know.
We asked Jacob, we asked for a piece on selling selling SPX put spreads at the expected move, and this is a doozy. Let's jump right in, Liz.
Let's jump in. Okay, so 0 DTE out of the money. OTM is out of the money put spreads, and this is springboarding off last week's. We did a study on at the money put spreads, so this is out of the money, meaning we're going to shift them over a little bit.
We're going to read the study setup first, and then you have to put your helmet on.
Then you put your helmet on.
All right, 0 DT options offer fast results and highly liquid markets, an appealing combination for active short-term premium trades of all kinds.
And last week we explored various mechanics around selling ATM put spreads, but many traders prefer staying out of the money.
This means accepting a smaller initial credit in exchange for a higher win rate and more room for the market to move against us. But how far out should we go? And that's what we are looking for, testing these put spreads, going further out of the money. You ask?
Yes, and you shall receive. At Tasty, we often use the expected move as a reference point when placing trades. But for same-day moves, there are meaningfully different ways to calculate it.
Okay.
I was told there'd be no math today, but there is.
Hey, bust out your calculators. The VIX and VIX 1D provide one family of estimates. So here we have expected move equals spot price times vol index over 100 over the square root of 365. You've got the equation right here. Take a snapshot of it. If you want to do the math, here's the equation for the expected move from the VIX and the VIX 1D.
Yes. Okay, both are calibrated to a full 24-hour period and use a mix of expirations for computing IV. By market open, though, the VIX 1D is already largely composed of 1 DTE options rather than true 0 DTEs.
So think about that. If it's the VIX 1D is largely composed of the 1 DTE options, that's going to have a greater expected move because there's extra time. It's tomorrow. They're not pricing Wednesday's options. They're pricing Thursday's options.
And that's a big deal.
Yeah,
when you're looking at such a large index like the SPX.
Okay, because of this, using a fraction of the index-derived expected moves is natural when placing 0 DT trades.
Okay. In IVX, a blending of a straddle. This is the old trader trick. This is how we used to get expected move before you kids had everything these days. A blended of straddle and a near out-of-the-money strangles derives exclusively from 0 DTE option prices and thus reflects the same session expectation from start. So that is straddle plus strangle divided by 0.85.
Or yeah,
0.85, wasn't it?
Straddle plus strangle divided by
2.
But times 0.85.
Times 0.85.
Right. I think that was it. Straddle plus strangle divided by 2 times 0.85.
Well,
something like that.
It's all on the platform for us now. That's the one thing why we used to have to do this on the trading floor to see what the expected move is for the cycle. But now it's all there.
And that's IVX, so that should be close to what we see on the brown bar.
Correct.
All right, today let's see how put spreads placed at different distances out of the money, anchored to each of these expected move frameworks, have performed. So now we're getting into the study. Using 3 years of data in 0 DT SPX options collected every 10 minutes.
That's usually our study. We consider the results from selling one $20 wide put spread every day at 9 a.m., give or take 5 minutes.
Experimented with short strikes at different multiples of the different expected moves or at the money as a baseline.
Which at the money we did last week, but he was different widths. Now we're sticking with just $20 wides.
Yes.
Explored closing positions at a range of profit targets from 10 to 50, and other trades were allowed to expire.
Examine the total number of winning trades, the total profits or losses, and the maximum drawdown. The largest amount someone could have lost following these mechanics every day by starting at an unlucky time. So when you see that drawdown, that's not from one trade. That's if you had multiple losses in a row.
And I'm going to, because these are kind of springboarding off one another, and you'll notice there are some consistencies in here, I want to address that real quick. Because somebody had asked that the maximum drawdown is literally an unlucky time. These are defined risks. So if it's $20 wide, and you're taking in 7, you know the most you can lose in one is $1,300. We all know that. This is a string of losses at an unlucky time.
Right, and we can talk about that when we show the risk on these trades. Okay, all trades were assumed to exercise at mid-price. All times are Chicago time.
Chicago is Central Standard Time. That's another comment we kept getting. So what is Chicago time? Central Standard Time.
Central Time. It's a lovely city. Come visit. Now it's time for you putting down your helmets.
Wait, do you want to go to the takeaways first?
That might be easier. I'm going to bypass slides 4, 5, and 6 and read the takeaways.
We're going to go backwards.
I think this will be helpful. I think that's a great idea, Liz. This will be very helpful. Takeaways. Initial strike selection is one of the most powerful times for an option trader to determine the characteristics of their trading outcomes.
True. And despite the persistent bull market, out-of-the-money put sellers have been able to largely keep pace with at-the-money traders thanks to more consistent winners.
Further out-of-the-money strikes gave up some profits, but further insulated traders from the dangers of consecutive losers.
True. Okay. And the best performing profit target strikes were slightly higher, meaning we were looking at 50% range. If you take smaller credits, because you're farther out of the way, if you take in smaller credits, you have to try to keep a larger part of them. That's the common sense slide.
Okay. The exact particulars of which out-of-the-money strikes to use was not especially significant. So I think that's the important thing here, what we want everyone to remember. When we're looking at all these different parameters of sell it here or sell it here or sell it here, the exact particulars of which out-of-the-money strikes to use was not especially significant. Though a full VIX 1D expected move is likely too far. Starting from the IVX expected move and adjusting up or down to taste is fine with the approach. So you're going to look at these, and they're all winners. There are no losers.
That's a good point. They are all winners. And for those of you math geniuses out there, because we know you know who you are, and a lot of people want this, especially derivatives. There's a reason Jacob has been with us for years and years and years, because he's a math genius, and people want the numbers behind this. So now we're going to give them to you.
Okay, so we're comparing the same thing on every slide, just different profit targets. So here we're looking at the money short strikes, half VIX 1D expected move, VIX 1D expected move, half VIX expected move, VIX expected move, and IVX expected move. We're looking at all of these here, taking a profit target of 10%. The next slide will be 25% profit target, and the next slide 50% profit target.
Yes, and so and I'm glad you brought that up. All of these were winners, meaning that over time, your losers are part of this calculation. So it's over 3 years of data if you did it every day, right? So if you consistently did the half VIX 1D expected move and you did your little calculations, you get out your pen and paper and you do it every single day. What they're saying is, and I'm just looking at the half VIX, you're getting $41. That's average net P&L with your losers, because I wanted to address this. So you're not risking $7,331 to make 41. That is your maximum drawdown, and the average P&L per trade are two totally different things. There was one thing that somebody got lost in the weeds with last video.
So that max drawdown, Liz touched on this earlier. That's if you have consecutive losers in a row. So if you're selling a $20 wide spread, you said for $7, and that would be closer to the at the money, because that's a hefty
that was the at the money. That was the at the monies. $7 was the at the monies.
I did at the expected move today. I did at the expected move at 9 o'clock, $20 wide. I got $390. So $390, say $400 on a $20 wide, meaning my risk is $1,600. If you go to the IVX expected, which Jacob said the IVX expected is close to the actual move.
Pop in the platform and show them what we're talking about. This is how we use the expected move. So SPX 0 DTE.
I just went to the expected move, and at 9 a.m. it was lower. Market might have been different.
No, the expected move was larger, but the strikes were lower.
Right. I mean, SPOOs were probably not too far from here, but I think I was down at the 50 level because it was 9 a.m., not 10 a.m. And
I still have it in. It was the 6550, 6535. That was the strikes at 9 a.m.
Now here you've got at 10 a.m. the $20 wide at the expected move. You're getting about 330. So when we're talking about that conditional value at risk, you can see this trade has a max loss of 1,600. So how are they saying that at this IV expected move, the max drawdown is 7,800? That's starting at the most unlucky time, you would have, 4 losers in a row, and that's how you would get to that number there.
Don't get me wrong, bitter pill to swallow. I get it. Like if you're starting at the unlucky time and you come in being like, whoa, but what we're trying to say is that $47, and I'm just going with that last column now, that $47 nets out all your winners and all your losers for 3 years.
Right. Right. So one thing I just want to mention, if people think this is confusing, half VIX 1D, VIX 1D.
Hey, it confused me.
Half VIX expected, IVX expected. It confused me too. We asked Jacob to compare various put spreads at the expected move. I assumed Jacob was just going to pull up the platform and look at where the brown bar ended and take that strike. I didn't mean for him to calculate all these variations of expected move.
But you know what? You ask and you shall receive, Jenny Andrews, so I'm glad. But let's talk about what we do. If you look up there, so take that top line, March 25th, 2026. You go all the way across and you can see that up or down, $31.05. That is what the implied volatility of the VIX is saying that the expected move left for the day is.
Right.
And this morning it was higher because there was more time left in the day.
And when he looks at some of his other calculations that are based more on the one-day expected move, look at the difference. You've got the 0-day expected move, $31 right now, and at 9 a.m. maybe it was 45 or 40 something.
Yeah, it was 44.
Yeah.
Right.
So the one-day expected move is 70. So if some of these calculations he's putting together are using mostly the one-day, it's giving a much wider expected move, and you could see that on the charts just by looking at the win rate. So if you look at the win rate and you see something with a 99% win rate, you're getting the least amount of collection on those.
And same with that VIX 1D expected.
And that's going to be the furthest from where the SPX is trading. So if you're wondering, like, how far are these? Look at the win percent. The highest win percent is the furthest short option, the lowest delta.
And Jacob said that in the takeaways. It's the lowest delta. You are taking a much less profit, and your drawdown is much less. Look at that. The VIX 1-day and the VIX expected have the least amount of drawdowns for this 10%.
Now I'm going to move on. So this is taking 10%, and you can see across the board, all winners. Does anything jump out at you? That VIX expected of $15, to me, that's not enough. I don't like that risk reward. I don't like that average P&L.
So what jumps out at me? What jumps out at me is keeping it simple. Like this study to me shows, I love it. I love the numbers. I like everything about it. But trading for as long as we have, we know that SPX calculation and this platform actually shows what the expected move is, and it's moving as the volatility changes and time elapses.
But again, I think, so that brown bar, and we see that the brown bar is the same expected move as that number on the side, and that is one version of the expected move. Jacob is doing a deep dive into other versions of expected move. If people want to dive deeper, you certainly can.
I love it.
Next week, I'm going to ask Jacob to keep things simple and just use the brown bar. So here we go to taking 25%, and you can see the jump. We go from 40, 30 to 70,
almost double,
80, 70, 35, 44. So I like taking a little bit more of a percentage.
But still look at your VIX expected. You're still only getting $13 for this, even though you've got that high percentage. And he said that in the takeaways. You can't go too far. There has to be a happy balance between as far out of the money as you can go, but not too far out of the money that you're taking in a decent collection.
Right. And honestly, that VIX expected is moving, you're going so far beyond that daily expected move where you're going to sell at $20 wide and get very, very little if you're winning 99% of the time and you're keeping 25% of your credit and your only average P&L is only $13. I mean, you have very few losses in there.
Very few losses, but it adds up to.
So here, but you look at the IV expected, and that's closer, according to Jacob, closer to the true expected move of the 0-day,
right.
And that makes sense. That's what I did today. I sold it for $3.90, and in an hour I took it off for 40%.
All right, let's look at the 50% because just to kind of drive home this point as well. So, and Jacob had said in his takeaways that when you do go farther out, which are farther than the at-the-moneys, you have to take a bigger percentage. And that's true in these numbers.
Right, and you can see that with the higher win percent, you need to, it'll perform better at the 50% level. When you have the lower win percent, those perform better at the 25%. So take them off at a 25% profit target instead of a 50% profit target.
I agree.
So Jacob got a little bit into the weeds with this study, but there are definitely some good takeaways.
There are some great takeaways. I think the nearer you are to the at-the-moneys, the less of a percentage you can take.
Yes.
And this is my layman's term. The nearer you are to the at-the-moneys, the less of a percentage you can take. The more room you give yourself, you have to up your percentage of profits.
Right. And I like that because you could see here, the 82% win rate or 93% win rate or 89% win rate, those lowest win rates performed better. I think we got 45, 57, 61 or 77, 67, 81 perform much better when you're taking in 25% of your max profit target versus 50%.
I love it.
So my takeaway there is I know we like to collect more and risk less, but maybe that means we need to take it off for 25, 35% rather than wait for 50%.
I agree. Let's put the takeaways up there one more time just for people to see visually. We'll leave it up there. They can take a screenshot, anything of that nature. But if you like this video or want more of it, make sure you hit that little thumbs up button that's underneath me.
Like, subscribe, share with your friends. If you want more videos like this, you can find us on tastylive.com or on the Tasty Live YouTube channel.
Now remember, get out there and trade small, trade often. Okay, so let's, perfect.
All right, that was, to our regular viewers, we're back.
We're back. That was a very, very, very in-depth study, and I give him a lot of credit for it, and there's a lot of people that want the math behind it.
I could read you the message we sent to Jacob. Jacob, can we do a study selling various put spreads at the expected, with the short end, the expected move? And then he comes up with all of these different expected moves, which some math people want that.
Did we put various before expected moves? Maybe we did.
Said, I meant various, we meant various widths.
Yes.
He probably read it and was like, they want various expected moves?
That's correct. I think you're right. I think we put various in the wrong spot.
Yeah, we went various put spreads at the expected move, meaning $20 wide, $30 wide, $10 wide. But he must have read it. These girls want various expected moves.
Yes, but I appreciate it, Jacob, so thank you very much.
We got to be a little more clear next time. Anyway, if there's anything...
And jump in the platform, too, because take a look at this. Boots are only up 13.
Whoa.
We are crashing. I'm kidding. That's not a real term, but...
Okay. I want to see what oil's doing. Because we heard it here today.
Oil's the new VIX.
Oil's the new VIX. And it was great. We were talking to one of our favorite traders here in the SPX pit, and he said oil's the new VIX. Instead of watching the VIX, they're watching oil. As the oil moves, that's how they know how the market's going to move.
Yes, that's true. So let's take a look. Let's compare. So oil is down today. Great. Our oil is down. Let's take a look at the VIX.
But it was down much more. So you can see it's 90 right now. It was as low as 86. When oil was lower, the market was higher.
Yeah, oil's the new VIX.
Those
kind of weird to watch.
That's like their gauge. If oil's down, market's up. If oil's back up, market's down.
Yeah.
Yeah. Huh. Crazy.
And we do have, let's look at our positions, because I think we have an MCL. Do we have a CL? No, we have natural gas.
Yeah, we've tried getting filled on the oil trade. We have not gotten filled on the oil trade. I think twice we put it in, didn't get filled. Liz, maybe today, third time's a charm.
Third time's a charm. We did get filled in our ZB overnight trade, though. So that got filled at 6 a.m. this morning, our GTC. And you can pop that out.
So if I go back to this ZBM.
Are you impressed that I know the exact time? I was working out, and I was like, what did I just get filled on?
Yeah, and I'm glad we had that show yesterday, because I ended up putting in GTCs for my ZB, and I got out this morning, too, before the open. So now we've, over the last...
Yeah, because ZB was up 29 ticks this morning. Now it's only up 25.
So here we go. Here we go again. We bought that call spread. That hasn't come off. That's still a loser. That's down 265. But we took $125 out of our first put spread, and took $112 out of our second put spread. So we've taken enough out of those put spreads to almost scratch this call spread that we still have on.
Can you see for me, because I know ZB was up 29 ticks when I looked at it, what price that is trading for now?
That put spread.
Yeah.
Well, I think we were at like 1322 or so. How high? I saw 1322. Let's see how high it got. 1325.
Yeah.
So, and it was 1322 when I took mine off for 28 cents.
So it was the 31 day.
The same one. 112, 110, 31. Yeah.
Yeah, we took it off for 29. That's not bad.
We sold it for 38 yesterday.
Yeah, and took it off for 29. So that's not bad.
So we can't get back in yet. If ZB comes back down, we'll get back in. If it keeps going up, great. Our call spread will come off.
TP's bearish bonds.
He fluctuates based on the day.
I know he says he's leaning bearish bonds right now, which I thought was crazy.
Well, TP's the bond master. He's on tomorrow.
But here's what I think is fascinating, and we kind of had a little bit of a riff about this. He's bearish. We just put in a bullish trade. We have a bullish trade in. We got out of it right away. We got out of the one we put in yesterday right away. With options, that's what we were kind of lamenting about yesterday, is that he can be bearish and we can be bullish, and both can be right within the next 31 days.
I know. Right. So honestly, we go down again, great. We throw that put spread back on. If we keep going up, we've got this call spread that we've got, fingers crossed. We only have 9 days on that, but a couple other big things going on. Oh, earnings. The only earnings trade we did was Pinduoduo, right? Or did we do Chewy?
No, we didn't do Chewy. Pinduoduo is the only one, I think.
Pinduoduo is up 750. We put on a bullish diagonal. That, if you do the math, 99.107, we're $8 wide. it's not through that 107. So if it were through that 107, you would say like this could be worth $8. Right now it's only worth $6 because it's not through that 107.
I would still take the $300 and run like a thief in the night.
Okay, so $6. Great. We paid $3. We're closing it for $6.
Perfect.
$300 in Pinduoduo. That was good.
Yeah, that was good.
That was lucky. That was lucky.
That was lucky, and I'm not saying this, but I know you pressed the button yesterday, but both of us were slightly apprehensive.
Hey,
I was like, we got to do something because I didn't trade much with TP.
I think it was $289 on a diagonal that you could make $800 or it could be worth $8 didn't seem unreasonable.
It didn't.
No.
No, but you got to remember, if Pinduoduo went down, we would have lost $200.
$280. Yeah. Chewy, we looked at. We didn't trade. It's up 260. So Chewy's having a little bit of a move to the upside. And the other one, do you remember? It was like
ONDS.
Ondas.
Can you guys? I hope you can hear the hustle around us.
SPOOs are up 30 now. So we had that swift move where SPOOs are only up 10. Now they bounce back up 30.
That's true. But I was listening to Vanetta this morning, and Vanetta was saying, she was talking about how we're live from the SIBO. And she goes, you got to see some of the comments on these shows because the people don't realize that they're live from the SIBO. People are like, are you at a mall?
Turn down the noise.
Turn down the noise. Are you at a mall? No, we're not at a mall.
I mean, it is kind of funny. Turn down the noise. Turn down the background noise. Well,
I like the background noise. I think it's fun. It's energetic and lively to be here.
Yeah. I can hear something big quoting right now. Looking at the board, I see March 63.75 puts, March 63.80 puts. Just a $5 wide. A $5 wide put spread just traded.
That's okay. As long as it's over 200, it'll go up there.
Yeah. So normally you think you'd see like over 200, over 250.
Yeah.
It goes through the pit. So just a $5 wide put spread in March traded.
Yeah.
Okay. Now, as far as look at Intel up 330 today.
Yeah, Intel's having a big move.
We have a strangle. We sold a strangle. We sold a call and a put for 40%. Maybe we take it off.
Yeah, I think so. The 40% on a strangle, I 100% would.
Yeah. Okay.
I just went to the SIBOs only because we are live from the SIBO. We love it here. I just went to the SIBO.com. I wanted to see the calls over puts, and we've only got 3 half hours of data. But equity options, it's calls over puts significantly, and index options, it's 50-50.
50-50.
I mean, I use 50-50 loosely. Clearly, one is over the other, but they seem to be pretty neutral.
All right, I got out of the Intel strangle.
Good.
It was April, and we're going to have earnings before May.
But also in this environment. I mean, I know we have earnings and things like that, so that's a good call. But I think it behooves us to take things off and re-put them back on when we want to.
Well, in
take
a strangle where we have a short call and short put, if Intel gets a little steam under it and rallies back, I hate to lose on a short call.
Oh, yeah.
It doesn't, I don't like
Nothing.
that. I don't
Nothing
like that.
hurts worse than losing on a short call.
And I don't know what the news is today, why they're having such a bounce, but up 8%, that's a big move for them.
That is a big move. There were some other big movers. Do you want to take a look at the watch list? Can we go to the watch list?
I mean, look at Hood, but crypto. So Bitcoin is back to 71,000.
Yeah.
And
it was higher this morning, I think.
Hood is up 6%, over 6%. So that's a big move for Hood. We have a short put that's finally making a comeback.
We do. Yes, and that's been on. Somebody just fell.
Someone fell.
Someone just fell.
No, but then someone's mad.
Someone fell off their chair or got pushed off their chair. Who knows?
But then I did see some in an angry face in a.
Surprised the floor officials aren't in there yet.
Oh man, excitement down here. But they're like kids. They're like high school kids. If someone falls, nobody helps. Everyone laughs.
Hold on. I think you're giving them too much credit. I'm going junior high. I'm going junior high, and they've never gotten past that point.
Most of them. Okay, what else do we have? You. I'm going to flip this so you's at the top.
Yes, please. That's had a run for the last couple days.
Oh, we must have rolled this in the money because we're up, but we're still in the money. So we're going to leave that. Another big mover today was Fly was up $4. Fly was at $4. We just sold this put yesterday. Oh, we rolled it. We were going to take off our April as a winner, and we rolled it to May.
Take it off.
Because
Yeah, for sure.
Fly seems to have, I know we're getting a bounce today, but we've seen many times it has a bounce up and comes back down. So we take it off and we put it on our watch list.
Do you know what's getting hit right now? Everything's coming up green except for DraftKings.
DraftKings. It had.
And it's March Madness.
I think Monday DraftKings was having a good day, but.
Are you surprised by that? In the middle of March Madness.
Yeah, okay, so you could see Monday. It was looking like.
As soon as the game started.
It looked great. Monday it was all the way up to 25.64. Now we're back to 22.
Yeah.
And you're right, down $1.20.
Mm-hmm. I mean, it's down 5%. In the middle of March Madness, DraftKings can't catch a bid.
I don't know what to say. I don't know what to say about DraftKings. Okay, I'm going to close this put and fly. 32% in a day. 125 debit. All right, that's going to work.
Hippie's nice and loud. April, July, 56.
He wants all of our viewers to hear the order. This is how they say it. April, July, 66. Well, I'm not even going to say it because it's not even filled yet.
It's not filled yet.
It's not filled yet. But they say, like...
They drop
the first 3 numbers at least.
Yeah.
Maybe them all.
Well, they should.
Okay. Next up, Liz. And I just want to see what we have in FedEx. Because if it's just... We have...
FedEx is expensive.
FedEx is expensive. This is probably holding up a decent amount of buying power. It's a 268-day trade. I know we only made 16%, but we've been in this for less than a week.
I would close that.
I would take our $50 in FedEx. I think this was an earnings trade. Do you think?
No,
it's
but
giving us $2,000 back.
Yeah, just ship that. We do have quite a bit of capital, so we can have a lot to outlay. Suppose you're back up 42. That little blip was crazy.
I know. Was it just like one big sell order, spoos down 10, and then rallied back up?
Or was it oil?
Let's see where oil is now. Is oil? It hasn't. It's still kind of where it was.
Yeah, it's kind of where it was.
Yeah. Okay. Into Twitter. Today we have earnings. Oh no, just Pony. Any idea what the Pony is?
No, but you're gonna tell me in a minute.
Let's take a look. Pony AI Inc.
Yeah, we're not gonna. I mean, in an IV environment like this. So
$11.
I would like to put some trades on. Can we go to the watch list?
Wait. There's something I wanted to look at today that I heard in the news yesterday. Out of Fly. I was hoping that was out of FedEx. Is it RXX? Hold on. Thought it was RX something. REXR, that Rexford?
Well, give me more sugar. That's what we say.
I don't know.
Can you give me more context on what you're looking for, and I can help?
I'll have to. I don't remember the symbol. I'll look for it later.
Okay.
Okay. So as far as tweets, we're taking live tweets. Send us a tweet. Put the hashtag LIZJNY. That's what we're taking a look at today. That's what we take a look at every day. Any tweet that has the hashtag LIZJNY.
So there was oil inventory, I think, today.
I don't see it on Frank's calendar.
I saw it on Ilya's list.
And he knows. Frank, I'm not going to say Ilya knows more than Frank, but Frank gets this. Oh, show more. Well, I don't see it there, but I don't know. I believe you.
I don't know if that would have even been on there. They might have totally different lists.
Okay, let's make some trades.
Yeah, let's go to the watch list. We've got a high implied volatility right now.
In oil. We're not in oil.
Oh, then let's get in oil. And that's got high implied volatility.
We keep trying and trying and trying.
Now, you gotta put an L.
Now, this morning, I think I heard Mike Butler.
Let's use the big one, because we're going to define our risk.
Well, you can or you don't have to. I mean,
yeah.
So let's talk about this. I don't know if it was Nick or Mike Butler saying they've been doing the short terms. I think it was Mike Butler saying he's going in the 8-day and selling puts in the 8-day. Yes, and he got $300 for the 85 put in the 8-day.
I have all of it. I've been doing strangles in the. I'm in the 2-day. I've been doing like 2-day. Who was the guy that did this with oil?
Our rising star.
Our rising star. So I've been channeling him, and I've just been in the nearer term. So let's assess all of it. We got back a lot of capital. So you just tried to get out of that FedEx. I would much rather get $300 using $1,800 in 8 days
I'm not, and I just wanted to pull this up because this is what Mike Butler was selling this morning. I think the 8-day 85 put for $3 takes your break even down to 82. Now, if oil's the new VIX and oil's down to 82, hitting our break even in 8 days, we know the market will be rallying. We know the market will be rallying. So when people talk about hedging their positions, if you
I don't know what that was, but I just figured I would show you. The junior high kids are acting up.
Yeah, so if you're looking for a hedge on a bullish portfolio, if oil's down, I would think the chances are the market's going to be up.
I mean, we're springboarding off what somebody said to us today. We're just kind of having fun with it. But I agree with you. But that being said, here's what I'm saying. It's got a 65 rank, 8 days, and we don't have to start with.
I'm not.
We don't have to start with that 85. But I'm in the 2-day oil right now.
And honestly, I think we would go more to the 22-day. I know you're in the 2-day. Yeah, breaking news. Today is Liz's last day for now. She's leaving for vacation. She's gone the next Thursday, Friday, Saturday, Sunday, Monday, Tuesday. You're back Tuesday.
I'm off for 3 days. And all-star lineup. You've got TP on tomorrow. Then you've got Fauzia. And then Monday you've got Tony from Mexico.
Right. Yeah. All-star cast coming in. If you have any questions for them, TP tomorrow, Fauzia Thursday, and Tony from Mexico Monday. TP on Thursday, Fauzia Friday, Tony from Mexico Monday. If you have any questions for them, you can email me, Jenny, Jenny, @tastylive.com. If you have any questions for any of those you're amazing traders.
And I know people will email you. It is very tricky to get to all the viewer questions when you do have those guests on.
Well,
I hit on one yesterday from TP.
Well, TP, yeah. But that's okay. If you have questions for them, they're going to be on for the full hour. So
that's exciting.
I know.
Exciting.
I know.
Okay, so let's go back into oil.
So anyway, my point was, I don't know if I want to sell the 2-day. I don't know if I want to sell the 8-day because with you gone, I really don't get into managing our positions.
Either way, I want to sell premium in this. It's got a 65 rank, and we don't need to define our risk like the big one. To your point.
If we want $6, let's just do MCL. We can sell naked options. We can get $3 and $3. We can get $3 on that, or even the 79. What do you think? 79 puts, $3 on.
I think it's got a huge call skew, doesn't it?
Yes. $3 on the 107 call. So we have the 107 call, 79 put for $642 in 22 days.
That's not bad.
No.
This has, I'm pretty sure it's call skew, right? Huge call skew.
You're 107, so you're 17 points up and $10 down.
Yeah.
For $3 each one of them.
I'm okay with that. Now, can we?
I know this is straying from our downside broken wing butterfly, but
this is also an MCL. I do downside broken wing butterfly in CL, in the big dog.
Yeah.
Right. So once you have, I'll do it in something that's a little bit more defined risk. Okay. So taking a look at this.
Everyone's very happy and jovial on the floor today. Oh, I know why. Everyone's very happy and jovial on the floor today because they had breakfast for everybody.
They had 9 pounds of.
90 pounds.
90 pounds of bacon. The pile of bacon was this big. I've never seen anything like that before in my entire life.
I know.
Yeah, so that's why they are all jovial.
Yeah, everyone's loaded up on Danishes and bacon.
That means no one's going to be at our lunch spot for lunch. It's just going to be me and you.
Oh, yeah. We'll be alone in the cafeteria.
Yeah.
Okay, so the 79 put, 107 call, getting $6. So our break-evens aren't 79 and 107. Our break-evens are, add or subtract the 640 to our strikes.
Okay, I gotta do this. I got to get on a soapbox here for a second. This is the power of naked options. You're going $6.
Oh, the power of naked options.
You're going $6. And thank you. I saw you, Ashvin. He was talking about the power of naked options yesterday, too. Yeah. So you get $6 outside of where your strike is. So let me ask you this. So you're going to get, this return on capital is almost 50% return on capital if you let it all expire.
So here's my short put. The red bar here, the 79. But the green bar goes to my break-even. My break-even is down to here. So my break-even is more at the 15 delta line, even though my put is at the 25 delta. And on the call side, you could see my short call, 107, that's a 27 delta, but my break-even is more around a 20 delta.
Okay, and when you have a naked option component, which you have both, she's selling a strangle. And this is just what we're doing in our account. None of this is a trade recommendation.
Nothing we do is a trade recommendation.
Nothing we do is a trade recommendation. These are just things that we have in our account. I have something very similar in the 2-day. So my question to you is, and I'm just springboarding off this from yesterday, when you have naked options, now I did 2 ratio spreads yesterday. There's a naked component to them.
Right.
What are you going to do if oil gaps wildly in one direction or the other, Jenny Andrews? If you put on this trade and in, say, 10 days, oil is trading, I'm going to just give it a number, 114, what would you do?
If oil's trading 114 in 10 days?
In 10 days.
Well, there are various mechanics on how to manage it. So if oil's trading 114 in 10 days.
It's outside your break even. Yeah.
I don't know how much I want to roll up that put. Like, I'll roll that. Again, I think that is person dependent. I know there are tasty mechanics, roll up your put, roll out in time. And certainly I'll roll that call out in time and I'll roll my put out in time. I'll roll it all to May, but I don't know how high I'm going to roll that put out.
And that's what I was going to say is because if you look at this, you've got 22 days left. If it happens in 10 days, that means you have 12. I'm getting it. I'm going out in time.
Go out in time. Sure. Go out in time. Other people might say roll up that put.
With 11 days
oil,
left? Yeah.
But even out in time, with oil, I'm going to be cautious of how high I roll that put down because as fast as oil goes up, it could come down just as quick.
But you know what to do. So if you keep your size in check, we're not putting this in CL. You're not putting it in the big dog. This is MCL. So if it gaps down wildly, it's so much easier for us to manage because then so what? Because then you're long micro crude.
I think this is a different animal than like getting long in equity that you want to be long.
No, you just keep rolling your put.
Because in my mind, I don't want to be long micro crude forever at 72. Like
no, it's not forever. It's until you can get back to break even, scratch to break even.
Because I don't care if I hold on to this for 22 days. Because my break-even here is around 113. So I don't care if I don't want to roll out in time and I hold on to this and oil's trading 114, well, then I'm out $100 at expiration. If it's trading 115, I'm out $200 at expiration. So some people can choose to leave it and say, I don't want to roll this to May because I don't want to fight this rising oil battle.
But a one lot or keeping your size in check always helps with naked options.
Right.
Just because your buying power effect here, and that was kind of what my point was. Your buying power here is 50%. You're getting $6 in premium. You're not going to load the flow total and be like, I'm going to put 7 of these on just because the buying power is so low because you're getting so far.
And I mean, some people are trading with the big dogs. Some people are doing this in CL.
Their account is much bigger.
Much bigger. So
it goes from account sizes, and risk is a personal. I might do something different than Jenny might do, even if we have the same size account.
And if we put this on and think like, oh, oil's staying in this range, or we're getting a lot of premium, or our break-evens are really far, and things get crazy and oil starts getting nuts, we could close this for a loss and change our trade.
Yep.
We've done that too. So it's hard. I mean, everyone wants the playbook of if this happens, what do I do? I think that's a hard thing to say.
But I do think what options give you, they give you something to do instead of just being like, oh.
Right.
So oil, the pendulum swings both ways, right? So we've noticed as oil rises, so does that IVR. So if it's trading 114, you've got heightened implied volatility. That gives you something to do with your strangle.
Right. Yes. Exactly. It does. It does. All right, I'm going to ship this. I'm not afraid of the micro crude short strangle because this is the micro. Again, we know what our risk is. If anywhere above 113 in 22 days, we would lose $100 for every full point higher.
Yes.
And we keep talking about the upside. To the downside, same thing. And to the downside, I'd have an easier time just keep going, rolling the put, and continuing to collect credit.
Yeah.
And you can keep doing it to the upside. I mean, we've seen people roll positions for 3 years.
Tom.
Roll until you're right.
And it worked. He had the capital to back it up, though.
Yeah. All right, so I'm going to take this down by 2 ticks because we've tried, this is going to be our 3rd time trying to get a new oil position on, and we haven't been having luck getting filled. Now we're in.
That's all you got to say. You get filled right away.
Now we're in. So this MCL strangle, what percentage do you want to take out of it?
Because it's a strangle 30?
Sure.
$2.
So close for 30%. And hopefully when you come back from your cruise, it's gone.
I think it will be.
I think by the time,
Well, they were saying, I was listening on the news today, and once again, I think the headlines are all very, fear-mongering, but they were saying if the oil prices stay like this, ticket prices for cruises and for airlines are going to go up by like 25%.
Oh, really?
If the oil prices stay up.
Yeah. Well, luckily it's summer, and we don't,
You
need
don't
to
see
leave.
that.
We don't need to leave Chicago in the summer.
But you don't see, it's not, to me, I don't see a direct, I know there is the direct correlation to the price of the pump, the price of oil, but I don't see it.
At the pump right now, it hasn't really. Well, I don't know. It hasn't gone up too much. It's
not yet, right? That's why they're saying it's going to go. The price of these airline tickets are going to go up by 25%.
Well, if gas is if gas becomes so expensive, let's take a look at these cruise lines. Royal Caribbean up $5 today.
Yeah, but it's been down.
Right.
You can see that it's down from its high.
Yeah, $278 though. It's still.
I do think these are kind of moving. Your airlines and these kind of stocks are moving with the oil prices.
If cruise prices go up, do you think that's going to deter people from going on cruises?
No.
I think I feel like some of these cruise lines are just floating casinos, and most of the people on the ship are people who got the rooms free from all their gambling in the casinos.
Possibly, yeah.
Yeah, they just hand out free cruises.
Yeah, there's possibly.
Our friend was just on a cruise third day. She got in her certificate in her room. She got a free cruise.
She did.
My son's on a cruise right now. I guarantee he's coming home with a free cruise.
And that's how the cycle starts, ladies and gentlemen.
Yeah. I think on Royal Caribbean, I asked once. I think it's $1,200 through gets you a free cruise. And that doesn't mean you lose $1,200. That means you've gambled $1,200. And with their payout rates, let's say at a casino, their payout rate is 92%. So if you put $100 in, you're getting $92 back. So if you're putting $1,200 in, you're getting $1,100 back.
It's that high?
Payout rates. Yeah. Like casinos just need to make a small amount because it's such a They just want people coming.
Well, DraftKings can't catch a bid, so I don't know what they're doing wrong.
I don't know what DraftKings is doing.
Okay, but let's take a look. I also wanted to look at some of the emerging markets, EEM, things like that have the high implied volatility.
EEM.
EWW. EWW had a high IVR.
I'm happy selling strangles in. Oh, and here we probably have one. We have a jade lizard in EEM.
Can we take that off?
No, it's a loser.
Can you take a look at EWW?
Yes, because EEM's the only E we have. EWW, Mexico ETF.
81 IVR.
81 IVR, we have nothing. Let's look at a strangle. May. It's not great.
Look at how wide those markets are.
It's not great. The markets are super wide, and you're actually not getting that far. $6 up and $6 down.
That's not... you're not getting that far, but 85 cents at 60 cents, 70 cents at 195, and a regular monthly option with zero open interest? No, thank you.
No, the markets are too wide. The markets are just too wide. I want to see. So what if Boeing is up today, Firefly is up?
Oil was down.
Are all the defense stocks up?
Go to our defense list. Go to our list.
Yeah, okay, here we go. Watch list. Watch list, Liz and TP's defense list.
All the way down.
And change percent, okay? So Firefly up the most, 16%. No, that's really...
It's just Firefly. I mean, the rest of it is a mixed bag.
Lockheed Martin, GE, nothing else having a big move like that. And if I want to see what's having a big move, you could go to Tasty Fast Movers and see what's having a big move today.
Do you know what I just saw on there that kills me that I don't have?
What?
When I was at UK, I kind of let everything go. My PLTR got called away from me. When I just saw it on there. Yeah, it got called away.
PLTR is gone?
It's gone.
Okay. All right.
I need to I want back in.
All right. PLTR.
I just glanced at it. I was like, where's my PLTR?
Since you lost it, it's not like it...
No.
Right. I mean, Monday had a big day.
And I'm fine with that. I'm a churn and burn. It's not like I needed the stock, but it's gone.
So PLTR at 152. If you had a bullish position and they're all gone and you want to get back in,
it's kind of nice because then you just start with selling puts.
You start from scratch.
Yeah.
Now, where would you go? April 23 days?
I'm going to 23 days.
Because earnings are after that.
Yeah, I'm going 23 days and I'm probably selling the 145.
For me, I'd get conservative because I have to be in.
Yeah.
I don't have to be in PLTR. But for you who really want it, $4.
That's why I went in the money a little bit because and I'm glad
not in the money, but
just a little bit inside the brown bar. Because take a look at this. It was eye-opening when we were looking at the expected move in CL. Because if you bring it in, you can get yourself to the expected move by taking a little bit more premium in.
Right.
Now, the out of the money is for sure. Like Jenny went to the 140.
You get $4. Your break even's 141. You're at the expected move.
Yeah.
So $4. That's not bad.
It's not.
What do you think of that short put? And so this account is a smaller account, and $4 is great, but
no, I think for a starting point, I would go farther out. For us, I would go farther out of the money.
Or for us, I think we almost need a spread in PLTR. Do you think?
No. Because see what the buying power is if you just sell that 135. So that's once again the power of naked options. You're getting $2 one way or the other for
$1,300.
Yeah.
So let's just get $2 on the 135.
I can't believe I didn't have PLTR on my account for 3 days. It's shocking.
PLTR. What's new in PLTR? Market cap $360 billion. We got $2 on it. 4-star liquidity. 4-star liquidity.
I know. Look at that guy.
All right. So we're in. We're in PLTR, and I'm going to quickly put in a
GTC.
GTC.
It's 23 days. It's a very high pop trade, so that you're out of the money. You're at the standard deviation.
That's what we just sold it for.
I know. You got to put that 50% in. Or you can even put 30%.
Yeah,
I don't care if you want less in this environment with 22 days left.
It's fine. If we get a bounce in PLTR, that can get filled. Okay, so I'm going back in the watch list to see what...
that was crazy. I can't believe that...
what else is moving big on this list? Wayfair, Enphase Energy...
What do you have it sorted by?
Well, this is just tasty fast movers.
Can you sort them by IVR?
I did. I was sorting by the move, today's move.
Oh, by the move. Okay.
But if I go into Tasty Default, and just sorting it by percent change, silver and gold, big movers today.
Yeah, silver and gold are the big movers.
Silver and gold. What trade did you do in gold the other day?
I did large, very wide broke bet
It was
trade.
Yesterday. Yeah, and you know what? If I take a look here, we do not have GLD or SLV
but it was using a lot of capital.
Well, let's find something in gold or silver. So we've got 76 rank in gold. It's up 3.5% right now. Look at that little. Oh no, it looks like just a little blip.
It is a little blip. So my strikes are. I'm up a tiny bit of money. It's not like the end of the world, but it's too expensive for our account.
Yeah, so we'll tweak. Yeah. We'll find something. We'll find something in gold.
Yeah.
But the 76 rank, honestly,
GDX is a proxy and it's very low priced.
It's low priced. If we want naked options, $86. If I went to GDX and went to May and just looked for. If I just look for
$1 and $1.
I mean, the problem is these markets are wide. But you
can go 68.
You're going all the way out to the dotted line, really far.
60. Oh my God! Look at the upside.
Yeah, you're going almost 2 standard deviations
for $1.
Right here. 68 and the 114.
Look at the buying power. You're only using $867 to make almost $200. That's
if
not
we
bad.
want more credit, do we want a little more credit? But what if I brought it into the 110?
So you're not getting that much more to the upside by bringing it down.
If I did like the 110, 70, 260.
You know what I found interesting when you were moving it? Your buying power never changed.
No, because it's so far.
Yeah,
so far. You can see that 70 put is the 13 delta. I'm beyond the expected move with an 83 rank, and to the upside, I've got a 15 delta on the 110.
I kind of like the round numbers. I really do. So
yeah, the 110, 70.
Yeah, do it.
262. This is just a naked call, naked put, power of naked options. We're going very far with this short strangle, collecting $262. But this is a longer trade. This is a 51. Should I check April first? Because we hate waiting so long.
You can, sure. No, so when I was saying my video, the rank in gold is so high that if you get a move and the rank comes out, you can get out of this pretty quickly. Even though it's both sides, because it's such a high IVR, you can check April too and get a dollar and a dollar.
In April, because it's only 22 days,
you'd go to the 100.
I would get, if I got like 75 cents and 75 cents, you know?
Yeah, sure. 103, so you're $7 inside where you were on the top because you were 110.
So 103 and 72. It's almost the same on the bottom, right?
It was 75. It was 75, 110.
Oh, it was 75?
Mm-hmm. Maybe it was 70.
Yeah. So let's just say I want $1.50, 75 cents to 75 cents, then $1.50 in 23 days instead of $2.50 in 50 days.
I like it.
Yeah. $1.50. Strangle in GDX. You know what we're earning today?
Do you want me to pull mine out?
Certified badass card.
3 of them. 4 of them.
All right, so that is
We're not filled
working.
in that though. Yeah, that's working.
No, I'll lower that by a couple pennies. We were filled in MCL.
Yeah, we were. Do you want to pop out? We only have a couple minutes left. It's 10. We only have about 2.5 minutes left. Do you want to pop out the side and talk about what we've done? I want to close FedEx. Can you penny FedEx
I want to
up?
close FedEx too, but now it's only a $26 winner, so I'll just let that
Just leave
learn.
it. I was using that buying power left and right today.
Yeah, I know the $2,000 we were getting back from FedEx that we never got back. All right, 148 credit. Final offer, GDX. Take it or leave it.
Honestly, I find that the more I chase, those are the trades that wind up being the worst.
So I'm working that. We're filled in Palantir.
Yeah, so ZB, PDD, Intel, Fly, MCL, and PLTR we got filled in today. I wouldn't chase that GDX.
So activity today, all symbols. ZB, that was early. We closed our put spread. PDD, we got out of our diagonal. Intel, we closed our strangle. Fly, we closed our naked put. MCL, we sold a strangle, and PLTR, we sold a put. We're also working a strangle in GDX.
Yes, and GDX is pretty liquid usually. What is the stars in GDX?
Oh, I'm going to say 3. I'm going to say 3 stars for GDX.
3 stars in GDX.
4.
4? Shame on you, GDX. Get filled.
Yeah, right. I pennied it down twice, I think.
That's what I find odd.
So we are, and I want to make sure, we got to everyone.
I've been keeping an eye on it.
And we never, the good news is, well, you're going to be gone. Carnival earnings. So that could move Royal Caribbean too. I don't know when, I'm surprised Carnival earnings are this late.
And when are Lulu's earnings? Because I always remember that.
We had it already. That was just last
That's usually cleanup. Is this the start again?
I can't imagine Carnival's the start.
I can't either. We're going to kick it off with Carnival.
I know. So Carnival, I don't know. Yeah, earnings March 27th before the bell. So that's, and tomorrow I'll be trading with TP.
You'll be trading with TP.
I don't think what's your guess on has TP ever been on a cruise?
No.
No. I doubt it.
Yeah, I doubt too. All right, Jenny, the fastest hour of the day is done and dusted. Everybody, good luck. I will be back on this floor next Tuesday.
Next Tuesday. Liz, I will miss you. Have a wonderful vacation.
Thank you very much. I'm going to watch all of your shows in the archives. I will not be watching them live.
I don't expect you to ever watch them. Have a great day, everybody. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. See you Tuesday,
I'll see you
everybody.
tomorrow with TP.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. I started off as a chemist and engineer, and I love those fields, but sometimes when you're doing an experiment, you can go months without anything changing, materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Yo, what's going on, everybody? Welcome to Option Trading Concepts. Did I scare you a little bit?
Yeah, no, you got me. I'm on my back foot. You are ready to go.
How you doing, guys? I'm Jamal Chandler. He is Glenn Freibarger. How you doing?
Pretty good.
Yeah.
Wednesday, we are right at the hump. So following this hour, we'll be sliding down.
Well, first of all, I do have to remind everybody once again, it is Glenn's day.
Thank you.
It is your day, and you're on the show, of course. Mikey is back in town. He was doing the morning show this morning, so we're giving him a little break. We're giving him a little reprieve, okay? So it's just you and me, and we're going to talk about a gang of things. But let me just set the table here. Markets are all over the place, I feel, recently. Headlines are flying around. We're doing a lot of content about it. I mean,
trying our best.
yeah, it's crazy. It's hard to keep up in a way.
Do you have like a lot of friends asking you stuff about markets right now?
Yeah.
That's always the tell. It's always the tell.
Yeah, it's kind of like what happened today? And depending on when they're checking, my friends, of course, have like some stock accounts. Rarely do they get into options as actively, but are checking, multiple times a week. And it's funny because you can tell when they check, because it'll either be, we've had red day, green day, red day, green day.
Mm-hmm.
And so they'll be like, what happened? Or like, what the heck happened? and can't really tell right away that we are just flat on the week. But I try and...
Because you've been, how long have you been here now? 3 years, 2 years?
Just about 3.
Yeah, 3. And so I'm trying to think along that time period. It's 26. And 23, 24 was election, 25 last year, big drawdown in April. Like I'm thinking of these times because I'm trying to reflect on when I was starting in the industry, and I feel like I do. First of all, just get used to this. This is a thing, okay. And this is when like how people talk about those indicators about like, oh my God, the Uber driver asked me, or my grandmother asked me about this is also the indicator when all your friends are asking you, the market is hot and there's a lot of volume. And first of all, that's good for us, obviously. Right. But it's also fascinating because we sit and we talk about these things on air, and we're trying to make sense of it as it happens. We don't know what direction the market is going, but we know there's a lot happening, and we're trying to find ways to make trades that help out our accounts, of course. But it's just interesting when people are asking you, you're like, it makes you think about it more deeply, right? Like you have an understanding of it, but then you're trying to explain to them to some way, shape, or form of what's going on. It's a trip.
It is, and I've taken the opportunity because when they're asking me this, it's at the end of the day. I have 4 roommates, so those are the people that primarily will ask me what happened today, and I try to give myself an arbitrary word count.
Yeah.
Say, I'll give it to you in 13 words, and then try and just sum it up. No further questions. Let me go to sleep. So that's been fun.
Yeah, I bet. And then there's this added thing, I would say, particularly in this time around, because it's, there's global conflict, right, around this situation, and it's leading to a move and a major amount of assets right now. And, like your generation, obviously there's a lot of like TikTok and or Instagram or whatever, quick videos. I'm sure they're seeing a lot of that too, which is obviously leading to what's going on with the market. Like that's got to be interesting in itself. Because like I'm trying to think like for other times, like when the market was tanking in 2022, it was because we were raising rates. That's boring. I don't imagine there were a lot of videos about what's going on. This is different. There's a lot of videos and news every second, seems like. And so, yeah, that's going to lead to even more and more questions.
Yeah, of course, not the backdrop we want for more volume, more activity is, a war and us sending troops elsewhere. But I can't tell, to your point, what gets people, like new entrants, more into a narrative. Right now you can look, and it's almost just as easy to be deterred because you get a video presented to you from yesterday, and that all information is now outdated. Yeah. And so I could see how this could be more of a frustrating environment, that even though, rate expectations, one of the more, maybe boring storyline for driving increased participation, is almost more exciting from kind of I want to understand what's going on from an education standpoint, perhaps easier to latch onto, whereas here it's just, mayhem. And definitely, definitely for people already engaged, I feel like has sparked more interest in shorter term, not only option strategies, but directional plays as well, because you don't want to be right and then wrong and never be in and out of a trade. So that's been interesting, hearing a lot of how people are participating, because you do get kind of, if you're not actively managing your positions, let alone, putting on new positions, but you can have winners there and gone before you even check. So
it's true. It's true. Yeah, good to see you guys in the chat. Please, jump in, ask questions. We'll get to those at some point in time. We're going to take a look at the market in a second, and Glenn's got a couple of slides for us we could discuss. I do like You got to call out with what was said in the chat. One of the things, Jamal and Glenn, great host team, like Lewis and Martin. I do like that. Do you know what they mean? You don't know what they mean when they say Lewis and Martin? I didn't think so. No idea at all. Entertainers.
Okay.
I mean, this is before both you and me, but I've actually seen some of their movies, and I would invite you to watch a couple of their movies.
Okay.
Today too. Jerry Lewis and Dean Martin.
Heard of Dean Martin?
Man, they were great, man. They were a great team.
Pulled up a picture, and it is in black and white.
Of course, yes. But it's timeless though. You got to watch like at least a couple of their movies. I got to figure
format. It's movies.
Yeah, it's movies, man. It was like, the one dude is the cool dude, and the other dude is kind of like, the younger dude, and the older dude would like.
The younger dude is not the cool one.
I didn't say that. You said that. And then.
God, you're good. Backed myself right into that one.
But I mean, it was funny. It was really good movies, and like Dean Martin's always like the dude who's like, having some ska. Yeah, Dean Martin was an interesting character in itself. You got to see like he's part of the Rat Pack, which was like him and Frank Sinatra and like all those dudes. It's good stuff, man. Good, just classic television.
All right.
Stuff. But they were a great team. You and I, a great team. You're missing the point, Cliff.
Okay, yes,
they were
that
a
is the
great
point.
team. You asked me about them. I told you about them. I didn't say it was. They just said we're like them. Like we're not them.
Like if they were a bad team, it's kind of similar.
Yeah. Put it like this: in the movies, Dean Martin would always get the girl. Jerry Lewis would not. We both have girls. Okay, see, it's different. Don't worry about it.
All right, thank you.
Let's take a look at markets right now. We're up 0.5%, 66.40. I tell you what, just about every day recently, even though we had the big move on Monday, last 2 days, we're in no man's land.
Yeah.
Literally no man's land. 66.40 does nothing for anybody. I feel like most people are not really making money if they're long here because you probably got long at 6,700. Maybe you got long somewhere around 6,500 and change on Friday if you dared to do so because it was really scary. But right around here, not doing much. Maybe you're making some money on vol plays. Who knows? 0.5% here, 66.40 in ES, 25,350 in NASDAQ, up 130. Basically about 0.5%. Russell's the leader, up almost 1% at 2,500. Again, it's well below 2,700, but it's not quite at 2,650, which I think is the more near-term high. I actually sold a call spread against that yesterday. I'll talk about that. Dow 50K, it was a thing. It is not a thing anymore. That was like weeks ago. 46K. The interesting things about today, which has moved a lot, 10-year yield below 4.4 now, so down at 1% and change. I mean, this is your guide, right? Like when the 10-year yield is down, the markets are probably up. That means the dollar is probably down too, but that is not the case today. And we'll talk about that. Volatility's in here, still backwardation across the curve. Bonds are up, obviously, with the 10-year yield being down. Gold, again, another thing we got to talk about, up 3.5% today. This is a pretty big move. It's bouncing back. And silver up. Crude oil, well, what a surprise, right around 90, which is like, that's the new level, I think. And then Bitcoin up 2.3% today. And I won't even give the rundown on currencies because we'll get to that. But you got slides.
Yeah, just one note. Oh, here we go. Yeah, let's get into the slides because this is something that Ilya touched on yesterday during Macro Money, but thought it was, a really interesting take and worth revisiting here and getting into some actionable takeaways for the U.S. dollar because there's an interesting narrative with how markets are currently pricing the U.S. dollar and perhaps a potential opportunity to speculate in either direction because, like you said, we're in kind of no man's land right now. Dollar markets, not outside of that story, still in the middle of a back and forth range, a wider range than we've been seeing in recent months.
I totally agree, though. Like it's touched par, it's gone over a little bit, but like it's still hanging at the high 90s now, which we hadn't seen for a while.
Exactly right. So let's get into first what, on the next slide, what the takeaway everyone is kind of latching onto now that we've had entering this conflict. You get the immediate flight to quality, kind of safe haven bid for the U.S. dollar. We saw that play out, and we saw new U.S. dollar extremes, saw euro down. below 115 for the first time in 2026, and a handful of other price extremes, dollar yen up to 2024 highs. Now we've come off it a little bit as the conversations evolved, into the second order repercussions of what this conflict means for global repricing. And this is the CME Fed Watch tool we always love to reference. And the market for this is looking at the end of the year, the December 9th meeting for the FOMC. We're looking at exactly where we are now, which is very different than even the conversation of 1 or 2 cuts, 2 or 3 cuts this year, because of course, even getting into outside of purely financial markets, it starts to get very political with, what everyone wants lower interest rates. A handful of people would prefer them higher, depending on what business you're in. But lower interest rates, pretty across the board, a good thing for consumers. And so that's gotten a lot of headlines. And now the question completely flipped, looking at not only no cuts, but as you see there from the darkest blue bar, some outside chance of a hike by year end of 25 basis points and even a little blip of a 50 basis point hike sometime this year. That's the real storyline for what we're expecting, how this would affect currency markets. But what you would expect from looking at this graph is, U.S. dollar must be ripping. Absolutely. If we, oscillated to new dollar strength based on, not 2 cuts, but 1 cut, higher for longer, then with no cuts, we should have a vast outperformance in this U.S. dollar. Not the case, because if we go to the next slide, you'll see that this is not a Fed-specific story at all. And you're looking at those, that same bank, our bank, the U.S. Federal Reserve, that bottom blue line, and right around 0%. And what this is showing you is the rate cut hike expectations, like we saw from the graph before, but oscillating right around that 0%. And you can see when you think about currency markets and the spot FX pairs that we look at, these are all relative rates and based on relative performance. Here, U.S. dollar is not the outperformer or the U.S. central bank in terms of hike expectations. And so it makes more and more sense that this U.S. dollar is only appreciating on some of these safe haven bids and not on a categorical repricing of a sustained U.S. dollar demand as a result from higher rates. Higher rates in theory, meaning that holding that asset, in this case being the currency, would theoretically command more demand because you're getting a higher reward for holding the currency. Here, we're looking at the Reserve Bank of Australia, which has already delivered 2 hikes this year, but still pricing in near now over 1% in hikes for the year. So 2 additional cuts. The more fundamental picture, they were already hiking right before this conflict, and so makes a little bit more sense that they're on pace for a couple additional hikes. But you have someone like the European Central Bank that for all of this year was expected to do nothing at all. Their rate hike cut probabilities right there around 0, little to no movement until March, are now pricing in 50 basis points of hikes. And similarly, the Bank of England was pricing in, cuts with us, that yellow line, until the start of March, tracked all the way back to no cuts expected, and now is matching the European Central Bank with multiple hikes expected. Does this surprise you, or does this clear up some of the moves you've seen in the FX space?
It doesn't surprise me now. I mean, watching things day in and day out. But yeah, if you asked me, I mean, let's go back to March 2nd, right? Where if you asked me then, I'd be like, we might not cut,
would we hike?
But we're not hiking.
Yeah.
But that was always the fear. And then, obviously with a huge huge energy shock that has changed the landscape. Yeah, man. I mean, this is really surprising to see, now that we're having to think about that. And the other scary thing, I think, is back in 2022, the ones that you have laid out here were the first to start hiking. It was Royal Bank. I'm pretty sure it was Reserve Bank of Australia, and it was also ECB and Bank of England. They were among the first, and then eventually we kicked in, and then we were slower to cut than them. Probably, thank God, honestly. And you could argue, but it was probably a good decision. And so, yeah, as you can see here, we're going to be slower to hike, but we probably end up doing it.
Yeah. So our probabilities, now just flashing positive for the first time this year. And I'm sure if we took this graph a lot longer back, it would remain negative for much of last year, the year before, as we came down from 5% interest rates. But let's go to the next slide, because this is where we're at right now. What we're looking at, and what Ilya so eloquently highlighted, was that not only is there perhaps a higher threshold to actually hike than staying put, but what the actual effects are of this supply shock might be playing through to the wrong kind of inflation to hike into. And his argument was that here we're looking at global PMI figures, so the US, Euro area, UK, and Australia coming in very recently, and surprising to the downside that this 50 level here is the barrier for expansionary versus contractionary. So that Australia figure dipping pretty starkly into contractionary territory. And so in theory, the demand pull inflation, which is, our economy is doing well enough to support an interest rate hike without tanking the economy. What we're seeing here, and what might be the effect of higher oil prices, is really from that supply side, that input, that cost push inflation, which makes all prices higher, but doesn't really say anything about whether your economy can support this, can continue to grow or sustain the output level that it has with those higher interest rates. How will this all play out? Who knows? But what this means for central bankers is they'll be continuing to monitor these data releases. And what will they be monitoring them for? Will, given all the current readings, will a hike put too much pressure on our economy and sink us into a recession? That's a huge decision. And now, looking back on the expectations, perhaps you think that it's a more reasonable assumption that the Fed is in a much better place to stay where they are, not start cutting, but keep monitoring the situation, not inject any sort of, spike to interest rates that might, cause a quicker deterioration of the economy than expected. Then what markets are currently pricing some European countries to do, and even Australia to do, which is hike again 1 or 2 more times. It just becomes not only a financial decision, but a political decision as well for these central bankers if they really want to put more pressure on their economies. And so we'll hop into the platform here to look at potential trade ideas for spot dollar pairs, because when you're trading these spot FX pairs, you can get as granular as you'd like, even to the point of speculating on euro pound directly here, where you could say both of them right now expecting to hike 50 basis points by year end. that's been a much more drastic change in projections for the Bank of England than it has been for the euro. So if you were to speculate on this and say, you know, where we are currently is still baking in, you know, more anticipated strength for the pound, then you could see there is more recent history of upside to go along this. Or, you know, the exact opposite. You could say they're both expected to hike right now. I think that only the Bank of England will be able to do that. The European Central Bank has said they'll be on hold. Maybe they're more like the Fed and will just be able to hold through this inflationary shock, whereas England might actually have to hike, and that would spell, in theory, further downside for this pair. So what we have here is, of course, when you're picking directional markets, you have to speculate, make some assumption, but we have a unique potential opportunity here where you have markets pricing in actions that have yet to come to fruition, and you have multiple players all expecting the same thing. Not all of them, as we know, will do the same thing. And so whether that be monitoring Euro area data closely, UK data, or Australian data as it relates to the US, it's becoming very interesting for medium-term dollar traders or currency traders in general as we start to think about how these inflationary effects will affect central bank decisions.
The currency of any country is kind of like the financial health of their country, right? Like, I mean, you can determine how well they're doing, right?
Right.
And so it's interesting to me how, you know, in 2022 was basically, just kind of, this is a multi-year chart. We're sitting around, as you can see, January 2022. Just looking back, and, you know, I mean, people do this all the time, right? They want to get an idea of, oh, if we start hiking, which way is the currency going to go? Right. January we weren't, February we weren't, but we also knew there was a lot of high inflation. Again, we had high inflation in the U.S., also across the globe. I mean, all of these countries and these situations, if one sneezes, the other catches cold. So March, we started. You could see there was a lot of kind of indecision. It didn't jump up right away, right? And that's fascinating to me. And, you know, currencies, you know, sometimes are a little slow, but it did take some time. But eventually, I mean, they started to really run. And you could see it continually start to go higher here. There was just a lot of volatility, though, as you could see when you look back at this time period. I mean, there was, again, we started, global rate hikes really started in March. And it was slow to build. It started to go up, but then I don't exactly remember what happened on the 4th of July area. Well, they don't care about 4th of July. But anyway, it's just fascinating to watch, like the tug and pull. And again, this is, you know, the euro pound, but there was some time, but eventually, I mean, there was a bigger move. And I mean, you wonder if that's the kind of thing we could look forward to again right here.
Yeah, and this pair in particular is interesting because they are so highly correlated, these two currencies, against pretty much every other currency. But when you're looking at their relative rate in particular, one of the biggest drivers is that rate differential and the speed of hikes and cuts. Of course, all expectations, because by the time we get to the meeting, there are relatively few surprises that make it a true event risk, but definitely some central bank narratives shaping up that could, like you say, really cause this market to run one way or another, depending on who actually follows through. And just looking at, you know, maybe a closer term trade, just looking at euro dollar.
I was about to say, why should I trade euro pound versus just outright trading euro dollar and pound dollar? Is there any benefit?
Except for being, you know, double margined. That would, if you did both, that would give you, you know, perhaps more flexibility in position management. You would be double margined, but you're right in that you can pretty much synthetically create the exposure that you want through those three currencies.
Well, yeah, but I mean, like, what if I guess what I'm saying is, like, if I feel like both of these guys are going to hike rates, why wouldn't I just get long euro dollar and long pound dollar.
In that case, you would go directly to those markets. It's only if you think that, in this case, that these two central banks would operate differently in actuality, because right now they're both pricing in similar things, and so that could.
See, that's what I think. I think they're going to do. I think they're both going to hike. So if we get to that point,
right? So then we could go directly to those dollar markets. And yeah, then you could possibly think about it in terms of I'm making kind of two bets that these European countries or area banks will hike. If only one of them does, you still get paid on one of them, all else equal, right? Because even though these are, like you said, some financial health barometers for a country or a region, a ton of factors going into it, such as, just risk sentiment in general that's helped this U.S. dollar in the month of March so far. But yeah, a really interesting look at.
I feel like these two charts look the exact same. Kind of. Since 2023. There was this big dip here, which obviously, I just feel like they look the same. That's why I don't know.
If you zoom into a daily chart, I think you can get a little bit more granular to see, exactly where we are year to date, which is pretty interesting. You should see. Oh, there it is. Yeah, so you can see that the effect of the U.S. dollar strengthening has had a greater effect on the euro thus far. Mm-hmm. The pound has held in, a lot better than the euro has year to date. But you'll see that if you're looking to kind of validate your assumptions, you would look to just the chart of the euro pound directly, right, to see that kind of relative outperformance, and then come back here to validate your thesis if you were going to trade this market as opposed to the pound yen. So, or pound or euro pound.
Wild times, man. I mean, I don't know. I mean, I wonder how long oil has to stay at 90 to start to really see real changes in the CME Fed Watch tool. You know what I mean?
I know.
Because that's what this is really all revolving around.
Yeah, and also the conjecture of, if everything went to normal yesterday, are the effects already, to what effect are we priced in, or how much of a premium in terms of time expected, more a few couple weeks, or are we now pricing in what the actual effects are globally? A lot to dig through if you're willing to dig
I've been in the game for 20 years.
Okay.
And I've learned more about currencies and particularly bonds in the last 4, starting with 2022, than I ever knew.
Interesting.
I mean, really.
Yeah.
And this is the crazy thing about like these type of markets, right? And I mean, dude, you're getting like a hell of an education right now with all the stuff that's going on. Like when things move big, that's when you kind of like see relationships either work or break down. Either way, which they can break down. We saw it break down with the dollar and gold. Like that relationship totally broke down. And then it started making sense again. Today, you could argue it's breaking down. I don't know what the heck's going on today, but
today, it's funny, you were talking about it right before the show, that, looking across asset classes doesn't really make sense. Couple that with what you're saying about us being in relative no man's land, it almost feels like a Friday where it's more on kind of position management of, who's actually participating in all of these markets, but, just kind of settling up, which is kind of an ominous thing to be happening.
Nah, this has totally been that week. This has been like a, reposition or a manage, risk management type of week. I think we should all take it as such because again, I mean, if you really believed in the news that was laid out this week, there's a ceasefire for the next 5 days, well, starting on Monday, and by Friday it's going to end, and who knows what's going to start happening after that. And again, these relationships, some will get stronger, some will break down. I don't know. Yep. So in that case, it's funny because I lightened up. I told you I've been flip-flopping a bunch of different positions recently on the little move of the dollar. What was it? Was it up yesterday? Yeah, it was up yesterday, right? I think. And so as a result, I was like, well, I'll just do a little bit getting long. I mean, Aussie was lower, pound franc was a little lower. I was like, I'm gonna get long a couple of these, but nothing crazy. I'm kind of waiting for the next big move in either direction so I can take the other side, which is kind of working.
Yeah, and what's really interesting about markets, I feel like only in the past week, this is now a 3-week conflict that's headlining all markets. Only in the past week have we really seen on a daily chart in the U.S., longer wicks and shorter actual bodies of these daily candles, which, doesn't tell you a whole lot, but it does tell you for shorter term trading that, you could get, if yesterday the dollar actually weakened on the day, we've had wildly expanded daily ranges to which you could come in yesterday and manage your positions and say, when I checked on it, dollar was ripping, got in, got out, we must have had a good day. Actually weakened a little bit, right? and you could have been on either side and with active management come out ahead. So really been whipsawing on an hourly basis more and more as these headlines continue to be sporadic, but also global players are treating this risk sentiment very differently, right? I mean, on talks of the ceasefire right after market close, initial bounce, that gets digested by overnight markets, as they see fit, even without further headlines until this morning. So a lot for short-term traders here.
So when you come in every day, I mean, this is normally the portion of the show where we ask you for a trade, a spicy trade. I do feel like we're in no man's land, so I don't really want to put on anything at the moment. I'm just going to stick with this Aussie dollar I have and pound franc. This is part of the reason why I asked you that pound franc is a little, dollar franc is a little different than what I've been doing. But the reason why I asked you about earlier, why don't I just do pound or euro versus during that pound euro? Because mostly I've been trading everything related to the dollar.
Yep.
Right? And even the ones with the highest what's the word I'm looking for? Highest
carry.
Yeah. Well, the euro has the most of the dollar. It's the largest component, right?
Of the index, yes.
Yes, of the index.
If you're looking at like DXY or something, then that euro exposure is around 50%.
And that's the one between that and or pound dollar or Aussie or New Zealand, those have been the main ones I've traded. I'm probably going to stick to those. I'm waiting for the big moves to happen in those. But what I'm getting at is I'm curious. Every day you come in, what are like the top 1-2 currency pairs that you look at every single day?
Yeah, so I'm looking at really for a kind of gauge of the U.S. dollar's performance. I'm looking at this popular U.S. dollar collection we have here that really gives global exposure, looking for those percent changes, and based on which side of the pair the dollar's on, you can get a pretty quick sense of, okay, today is across the board a dollar up day. What gets interesting is when you have one of these currencies not participating in that broader dollar storyline. Like, let's say that right now you're looking across the board and everything is the same directionally for the US dollar. But if we would have seen this US dollar Japanese yen also be red, that's a flag to me that there might be some idiosyncratic risk or something that happened overnight, a higher propensity for that to happen with the yen. But really, by the time I'm getting here, the start of Europe has already well underway. So really the U.S. in some cases the last to wake up. So anything is just as liable to have moved overnight. But that's really what I look for if there's any divergence from a broad U.S. dollar move. And then we can start to unpack, okay, there was perhaps something Japan specific. Is this affecting the dollar the most, or are some of these yen crosses getting hit harder? That's kind of how I unpack it. And then when we have a lens of, very risk on, risk off, then I just am interested to see how the emerging market currencies are reacting, just because those can have a wide range of magnitude reactions. We could see 2-3% moves there if there is a spike or sudden change in risk sentiment. But while we have this dollar yen up, someone in the chat saying the yen carry trade, a big part of the US dollar, should be talked about more. I agree, but what's been really interesting this past few weeks is the yen hasn't been as big a mover as you'd expect, really pinned at this, what are highs dating back to 2024, above 159. So it still looks like a market that's coiling up, reactive to these wider US dollar moves. But this is a really interesting one that I don't think we've seen the catalyst in yet for the next 2-3 months of direction. But we do know that Japanese officials do not like this range historically, do not like their currency to be here. Perhaps right now they have more to worry about with the actual inflation shocks, but it would not surprise me if if we broke through 160, if that started to get a lot more elastic, or if anything happens on the Japan front, or U.S. yields start to come down and our rate expectations start to come down, that there's a lot of potential room to the downside here that we really haven't seen, even on some big U.S. dollar misses, some days where the U.S. dollar really has gotten banged up, not to any sort of sustainable degree here against the yen. So that carry trade dynamic, just to surface it, is if you're looking for at that swap bid, swap ask, because of the current rate differential and how sustainable that has been in recent years. Japan at ultra low interest rate levels, US dollar was at its peak above 5%. A natural trade to hold US dollars, finance it with Japanese yen for this pair that would be going long. You are getting a positive carry every night by holding that interest-bearing asset and financing it with an asset that has effectively zero interest rate. Those carry traders, new carry traders, get pushed to the test here when we're at highs, right? And so there is still directional risk. If you were to get into the carry trade today, you could, if we stay exactly where we are, be getting that positive, almost theta, if you will, every day, but very susceptible to, just overall price risk. And if this market falls apart, that's when you start to see huge moves to the downside, flushing out of leveraged exposure, because so many participants are leveraged long traditionally in this pair. Trying to capitalize on just a couple basis points.
There's a lot of air underneath there. It is something else. Folks, you are listening to Option Trading Concepts Live. I'm here with Glenn Freiberger, part of our Tasty FX team, explaining everything about all the different pairs right now. It is hot. It is hot. It is hot in the streets, as they say, in the currency land, dude. Because there's so many different things that are going on, like you just mentioned. There's global conflict, and usually when there's global conflict, there's a lot going on in currencies. I'm just trying to see a little bit back here in 2022. Again, that's the only thing that I keep thinking of. I'm trying to compare this time period to 2022.
It's a great time of reference.
And again, I know it's not the same. I have come to say this a lot because it's true. Like oil going to $90, $100, that's not the same as 2008. It was a total different reason why I went to that price in 2008. And so it's not the same type of conflict. Gold doing what it did recently and making a big move to the upside. I saw that in 2010. I also saw it in 2011, 12 as well. totally different reason.
Yeah.
Summer. So it's not the same. It's not like you can just, okay, cool, I'm gonna open this playbook and
copy.
it doesn't work that way. Trust me, I've tried. But at the same time, I think it's fascinating to look back at 2022. And again, we were in it was a global rate hiking cycle. And I don't know, we've stayed elevated. I'm curious, like what happens here. But then at the same time, there is what happened in 2024. I think this is that unwind, I think, right?
Yeah.
July 2024. That was nasty. And is that where we're headed? I mean, what do you think? Is it the market tank? And if the market tanks tomorrow, we drop down to 6,400, 200 points. I guess the dollar would go up. I don't even.
Yeah, no, and that's what this has been interesting because it hasn't really played along as much as euro dollar has, Australian dollar has, but its day will come. Just might not be this week. Just want to answer.
You know what? I'm gonna do a small one here. Yeah, no. Go ahead. There's a couple of questions in there for you in the chat.
Yeah. Before we get to the real market, because enough of Glenn babbling on. Yeah.
Yeah, don't get baited. It happens to me too. Don't get baited.
But time of day for Forex trading absolutely does matter. These markets are not only 24/5, but actually pretty liquid 24 hours a day, as in compared to some other markets that see a big drop off in activity outside of U.S. market hours. And aside from that, time of day only matters in terms of I can check looking at hourly candles. You can see kind of digest different trading sessions based on what participants to be most active in the market. So if you're looking at an hourly candles, start of day here in the U.S., looking back over the past 5, you can see what Europe is thinking for a particular market, and the 4 or 5 candles before that, primarily just the Asia sessions, and then throughout the day, of course, U.S. trading hours. So it's interesting to me to see, you can see very clearly how different global trading centers are processing price movements, and then also just global data releases, like when all these central banks have their meetings, when they're getting their inflation data, et cetera, happen at all hours of the day.
Which
for U.S.
last
traders.
week we got a bunch of central bank meetings, right? Was that
Yeah.
this week?
I
am starting to lose what day.
Last week, which thought it
was last week, right?
Yeah, thought it would be super interesting. They all basically came out and said the same thing, which was interesting, but less interesting when we're looking at relative pricing here. If everyone holds kind of a party line in terms of these risks are real, we might have to hike.
I mean, when we get these situations, like I said, somebody, one country sneezes, the others catch a cold. This is a global situation right now. I'm sure they're pretty pissed.
As if their job wasn't hard enough.
Dudes are like, God, really? You got to start this now? And I'm running for election. Who knows? I mean, you're right. You mentioned that earlier. It can affect a lot of things.
Yeah, let's go into your positions. What do you got going on today?
Oh, geez. Let's see. What have we done today? We've done. I did a couple of things. Again, a lot of the stuff that I'm doing in the last 24 hours or so has been more like risk management. URA is one where I had a straddle in there. It was the 65 straddle. Stocks trading basically $50. And I bought it back for $15.50. So you know anything about put call parity? I mean, that's basically the straddle is $15, right? I paid 50 cents over. If I paid $15.50 with stock, basically, I mean, technically I paid I paid 53 cents over, but whatever. It's 47 cents over. Considering that the call market was, I think, a little bit more than that. It's fine. I don't really care. What really matters is I made $100 on the position just from ball alone, and I wanted to get some capital because I think there's another storm coming. Honestly, so that was why I closed that position out. SPX is I rolled down a call spread. on a super, I think this was my Super Bowl trade. Where the heck is it? No, sorry. No, it's not. This was a Iron Condor. And so I've short this put spread since we've moved up higher today. Decided to roll a call spread. I had a call spread way up here when I initially put this thing on. It was like 7,100, 7,110, I think, or something like that. Decided to roll down to this. I mean, you know, if markets go higher, fantastic. I got long deltas. I'm ready for markets to go higher. I would gladly lose on this position, but for some sneaky reason, I don't think in 23 days we're going to be back in 6,900. I could be wrong.
You could be wrong.
But this, with 300 handles higher, that means things are fixed. And I don't think things are going to be fixed in 23 days. So, yeah, hopefully I win on that Iron Condor. And then the other position, CRM, similar deal, just repositioning. Talk about long deltas. This is a super bear trade. I initially sold this put spread, and I was long, I think, the 230, 250 call spread. I think I did it for I know I did it for credit. I just don't remember how much, maybe like 50 cents, maybe $1. So I just rolled this spread down because, I mean, this thing is basically in the money and it's, $5 and change. And the new spread is that, $2.95. I paid, is this higher? No, it's probably about, let's just say it's right here. So, I mean, again, if I have a $2.95 spread and I am short that, I'm basically doing this for this type of credit. Although I did lose, obviously, some money on the original spread that I had. So it's probably less of a credit, but it's still a credit. I just need the stock to move higher.
Yeah.
Which has been hard to do with a lot of these software names. That's the weird thing about it. When we started tanking, but prior to all of this, if you can remember back that far, beginning of the month, before the beginning of the month of March, we were in a scenario where software names are getting just absolutely rocked. The CRMs of the world, the Snows of the world, the ServiceNows, and because, AI was supposedly eating their lunch. And then as soon as the market started tanking and everything else started tanking, it was like those were getting killed and the Walmarts and Costcos of the world were getting bought, the consumer staples. And then once the market tanked, all bets were off, right? Everything changed. And all of a sudden you found situations where they were starting to buy back some of these names. This is what happened. And with this is 1 year chart. Yeah. We started seeing a little bit of buy program in some of these. Microsoft as well. They were starting to buy some of these as the market was tanking. And then they started falling.
Yeah.
I don't know, man.
This one arguably harder to follow along than some of this headline geopolitical risk is, trying to map out to what degree some of these software names are to be replaced. Are they going to adopt a lot of this new technology? So, yeah, much harder.
Why you got to ask such tough questions?
They
don't need this, okay? Just tell them to go up.
No,
tell them to go higher.
Move in Microsoft has surprised me.
For sure.
Absolutely.
It's wild.
Market's up, it's down. Market's down, it's down. Market's unch, it's down.
Not only that, I mean, the Mag 7 names in general have been pretty weak. I think all of them are down year to date, last I checked. I mean, that's, the funny part about that is I was always really annoyed and everybody talk about, Mag 7 names, there's so much of the index. Is it too much? A million articles. Is it too much? Is it moving the market too much? Are we too reliant upon them on tech? Now everybody's like, the Mag 7 names are down. This is really not good. Now it's not good. Now it's not good?
Where is your healthy baseline for percentage weighting?
No, we're never happy.
You're absolutely right.
We're never happy, bro. You should have been happy with the Mag 7 names being positive. Yeah, year to date, they're all negative. Yep. NVIDIA down 3.9, Apple down 6.3, Google down 6.4, Microsoft down 23, obviously. Amazon down 8. It's not technically part of it, right? I always forget. Where is it? I don't know. No, Tesla's not. I don't remember.
It's whatever. Mag 9.
Yeah, I mean, really, it should be the Mag 9. It really should be NVIDIA, Apple, Google, 8, I guess. NVIDIA, Apple, Google, Microsoft, Amazon, Meta, AVGO, Tesla.
Is Oracle supposed to be in there or no?
No, it's not. Oracle's number 20 as far as size, as far as market cap.
All right.
Yeah. Costco's bigger than Oracle. Yeah.
Who knew?
Costco's behemoth, bro.
Yeah, that's
people
big.
do a lot of things at Costco. Like you can get your tires changed there.
I used to
You
get my
can
glasses
TVs.
there.
Did you? Yeah, I think I should go there. That's actually on my list.
Very cheap frames.
Yeah, they are, right? I
Yeah.
should probably go there and do that.
They were running a 2 for Mike. I just read Mike 2 for 1 special. Where's Mike? Mike's here, but he was doing
I need some new bags, and he's the
morning
best
show.
at creating bags.
He is the best.
Bags?
Hands
Just like
down.
a trade for a forex trade? Is that what you're talking about? Bags? What do you mean bags?
Just,
What do you mean
I
bags?
assume
Thomas?
a new tranche of something.
Is that what he means? He must be.
A new year-long trade.
Yeah.
Is that what you call them?
No, I don't think that's not a bag.
Oh.
I think he's just saying Mike is the best at making him money, is what he's trying to say.
I'm glad you appreciate the Forex talk. Always here for you.
Yeah. I mean, look.
And yeah, Pete.
I
Pete
appreciate
is still here.
I appreciate it. I think it's important right now.
Yeah.
I think people might not trade it on the regular, but look, it's moving around. This is the time to trade it. In a few months, it's going to if all this resolves and in a few months things change, it'll be boring again. Although I doubt anything is going to be boring under this administration. Everything is live. Everything. It doesn't matter if it's commodities, if it's currencies, if it's equities, everything is live. So, yeah, man, that's kind of what I got going on. I got a lot of long Delta related stuff that I need to get paid on. I am short silver still. That's been one of my best trades. Even in this downturn, I'm short the 70-90 strangle in May. I'm not touching this. I expect it to fully bounce back at some point. I don't expect it to go crazy, go ham like it did again, way back here. But I do feel like it'll bounce. GLD.
That's funny that
what's that?
The GLD compared to SLV or GLD compared to the futures, it's hard to do, number for number. Like it's hard to say what is 418 in the actual futures price. But you had SLV up, which is a lot closer to silver, and I just saw it and was like 65. I thought we were I know. I thought we were up on the day. Silver in the 70 handle for the futures.
I don't know. Sometimes when this happens, there's like a dividend situation, but I mean, obviously, there's no dividend in GLD. It is just off. I don't know. I mean, I wouldn't say it's off. It's just I don't know.
No, that's
price like that.
That's the most. It's the funniest. I feel the least math savvy when I'm looking at, the NASDAQ futures. I know what it's up
Qs.
And then I'm like, what would this make QQQ right now?
Yeah,
No
I know. It is kind of weird like that. Well, what's really good is when you start to kind of get used to a ES move and the equivalent NASDAQ move.
Mm-hmm.
Like I feel like 300 handles is like around 65 spoos or something like that.
Sure.
Somewhere in that range, it feels like. Both being like 1% almost, or that's not really 1% for NASDAQ. It's a little more, but yeah, you kind of get
still more of an expected move. Yeah.
The one that makes sense is you got to give it to the Russell 2000 and IWM. I mean, it's pretty close. That's
sense. Pretty good.
Yeah. They do a good job. The diamonds and Dow futures, they also do a good job.
Where did we go wrong?
Yeah, I know.
The case for Dow.
Yeah, the case for Dow.
The case for Dow being the future is because their ETFs are
not a chance at all. Man, this has been fun, man. We're basically out of time here. Any last words for the people on the dollar, on Forex, or anything you think going forward? What are you thinking?
No, just multiple ways to get exposure, and this market seems to be rewarding quick profit taking and attacking each new headline flat and not getting caught too aggressively on any one side on outdated information. So trading small, staying agile, and eventually the big conviction trade will come.
Eventually.
But
yeah.
I'm not seeing a lot of evidence for it being this week.
Yeah, I know, right? It feels like this is kind of the reposition week. We'll see how it ends. Folks, thanks for watching.
It's only Wednesday.
It's only Wednesday. I know, right? Thanks for watching Option Trading Concepts Live. You can always reach out to us on Twitter. I am at Jamal Chandler. Glenn is at Glenn Freibarger with an A.
There was an A in my last name.
That's right. And one N.
One N.
I remember. See, yeah. And Mike is at Trader Mikey B. And there's give Tasty FX a follow too when you get a chance. That's all for the show. We'll be back tomorrow, same time, same place. Actually, might not be same place. It might just be me tomorrow. Mike's pretty busy this week, but we'll be back together sooner or later. Thanks for watching. See you.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. We got a green open to the market going on today, trading up about 0.7% at this current juncture after news broke this morning that SpaceX might IPO very, very soon. I'm joined as always by my wonderful co-host, Errol. Errol, how you feeling? What's going on?
Is it that, feeling good? Is it the IPO is SpaceX? I know that was going to launch, somewhere in June or July this summer? What was the headline about? It might be a little bit sooner than
headline this
you'd
morning
imagine.
is that they are planning to file their prospectus sometime in the next 2 weeks, potentially by the end of this week.
Oh, wow.
However, that is still very much, I mean, I wouldn't say rumor. They're citing legitimate sources, but SpaceX has declined requests for comment on that, and they have not confirmed this publicly.
Okay.
So still just reporting at this time.
Yeah.
But yeah, exciting stuff. Could very likely be the biggest IPO we've ever seen.
I'm excited. I'm looking forward to it. Maybe a little bit more volatility. It'll be nice to see some volatility outside of the indices, oil, metals. It'll be fun to see if we get some action in the other places at the same time. But
yeah,
see if we get there.
Yeah, the space companies are moving. Tesla is moving. Tesla, it's going to put Tesla in an interesting spot because on one hand, increased excitement could send Tesla, flying. But on the other hand, it's like if people, if these, people who have a lot of confidence in Musk himself decide to rotate their money from Tesla into SpaceX, that could potentially cause it to take a hit. So interesting thing to try to evaluate there.
Yeah. We are not matching today. Close, green and black. I guess they complement each other well.
My pants are black.
Are they?
Yeah.
My pants are black too, so we got the black pants going on. There we go.
Matching from what you
usually. I'd also have on that bracelet that's very similar to what you have on as well, but mine was sterling silver and it unclipped one day, and I have no idea where it unclipped at. Have you ever went down to reach for that piece of jewelry and it's not there? That happened to me there. So
I had actually
this
is my second version of this exact same bracelet. I had this exact same one, and then actually one time while I was playing video games, it was like the clip spontaneously combusted. It was so strange. I think I must have caught it on something earlier that day, and it was just barely
a little
hanging
weak.
on.
Yeah.
But then I was sitting at my desk and I heard it hit the floor. I was like, what the heck? And
it wasn't even moving. Yeah.
Then it was completely broken. So
Yeah.
Had to replace it. But I'll give you guys I'll give you a little secret here. This is mine, just you and me talking voice, okay?
Yeah.
Between you and me, this thing, it's not real gold. It's a $20 Amazon situation.
Hey, it still never feels good whenever you check for something and it's not there though.
Yeah. Oh yeah. No, yeah. Doesn't feel good,
yeah.
Easy to replace. But yeah, we can jump straight into the Tasty platform here. Let's take a look at some of these SpaceX movers to kind of kick things off. Tesla opened up about 3% today. Has since moved down to 1.6. And then I mentioned the other stocks in the space sphere. Rocket Lab up 11%, real solid day that they're logging. AST Space Mobile not far behind, actually about the same now, trading up 11.8. And then what's the other one? PL, right? Planet Labs, not to be confused with Platinum Futures, which we may also discuss today. Planet Labs just logging a 16% gain today after they took a gap up just 5 days ago. I don't recall if this was earnings or what. This isn't a company that I super keep up with. But yeah, the space stocks blasting off, if you will.
Oh, they're blasting off to their highs for sure. I don't think I've traded these names. It's looking like they have a pretty decent amount of liquidity, pretty decent implied volatility, especially for them to be trading at their highs. So
big deal.
Keep an eye on that.
I don't believe they're wearing pants.
Yeah.
Hey, if a tree falls in the forest, there's no way to prove we are wearing pants.
Whatever your imagination wants to paint right now, big deal.
I'm not allowed to stand up here. Are you kidding? I'm AI generated. I'm not real.
I have been standing up this whole time. That's all.
We're actually standing right now. If it don't turn green, I don't care. Exactly, JLB. Well put, and it does not. So it hangs on. I actually never take it off because trying to clip a bracelet on is a tall ask. You kind of need assistance with that.
It is.
You can't.
I guess that's one thing I don't miss. Actually, I remember having to try and get around and clip it myself, but I haven't dealt with that in a while since I've lost it for I think maybe 4 months now. So that is a little issue I don't run into.
You got to try to get leverage on it. It's the whole thing. I never take the thing off.
That is.
I take it off when I get an MRI. That's pretty much the extent of it.
What is
What's going on, Sergio? Good to see you. Tesla price drop after SpaceX IPO. That's kind of what I was just getting at. Personally, I think so. I think we'll probably see a little bit of stagnation, if not a little dip in Tesla, just because obviously there's big Tesla bulls that have kept this thing propped up forever and trading so far ahead of its PE, and there's a lot of money there, and forever Tesla has been like the buy Musk stock, and we've seen Tesla move after successful or unsuccessful SpaceX launches before, kind of as a vehicle just to buy into that Musk empire. As soon as SpaceX goes public, that veil is lifted and that goes away. And there is just a direct way to trade SpaceX. You don't have to use Tesla as this vehicle anymore, no pun intended. And you also, I think, will get a little bit of rotation out of Tesla as Musk people pull some of their money from Tesla to reallocate into SpaceX if they don't just have the extra money laying around to buy a big chunk of that IPO like they would like. However, I think the SpaceX IPO is going to be a hype, like a Circle type situation. Actually, a Circle would be the perfect example. Where they IPO'd here back in June, and they just ripped 300%, and there's all this excitement, but then all of a sudden it stabilizes, and we figure out that the IPO price was actually pretty fair by the end of the year. Then they sunk a little bit. Obviously, I don't know that we'll see the action from here out of SpaceX, but I think this IPO will be so hyped that it'll be this type of situation where it's just this crazy rally, and there will actually be short opportunities a few days after the IPO is finished. You were going to say Microsoft?
No, I was thinking, what's Microsoft been up to today?
Microsoft has been sliding. This is beginning to be a Netflix situation for me, if you will, where it's like it's so beaten down, obviously too big to fail, obviously still giant market share, and I mean even more so than Netflix. It's just one of the biggest freaking companies in the world. So this has to be coming by sometime, but I do think the analysis is apt that it's just there's not really much to be excited about here either. I mean, it's not like I don't understand why it's been sliding. It's there's been rotation out of big tech over the last few months, and Microsoft just a victim of that. And in terms of the broader AI space, Microsoft hasn't really done anything like super groundbreaking or exciting to me.
Yeah.
I think the Copilot commercial right now with the dude with the pizza restaurant is a good commercial, though.
What is that one like?
Anybody's seen it?
I don't think I've seen it.
It's like some.
It's not an AI commercial, is it?
No, it is. Yeah,
It
it's
is?
about.
Okay.
Well, it's the commercial is like real actors and stuff.
Right.
It's not created with AI.
Yeah.
But it's about AI.
Yeah,
Important distinction.
Absolutely.
But
AI nowadays got to make the distinction.
exactly. But yeah, I don't know. It's just like a guy who has like a pizza restaurant in a city and it's dying, and then he decides he wants to bring back the $1 pizza slice that they used to do in the 90s, and so he has Copilot like draw up a whole projection of how he could do that and still make it profitable.
Okay.
When it ends, and there's like a line around the block of people waiting
Okay.
for his $1 pizza slice.
Okay,
I
interesting.
think it's good execution. It shows how Copilot can make you like a giant, bulky Excel document in just a few
Okay, so
seconds.
it's about efficiency.
Yeah, is sort of a thing.
Okay.
So I don't know. Something.
Oh yeah.
Good projection. I think
that was Microsoft.
Yeah, that's Microsoft. Cool. Yes. Microsoft is Copilot. Is their AI. I have never used Copilot myself. If anybody has, feel free to share your experiences in the chat. But
let's not be that great.
This is like, I mean, it's looking like leapy to me. If I were going to get involved here, I mean, we're pushing Liberation Day levels here.
Robert says nobody wants Microsoft. Apparently, they've been dishing it off.
Yeah.
I don't know if my boys, but I'm not going to mention the files again. I don't know. I don't know. Everybody's narrative has changed a little bit around the structure of the company with everything that's been going on in a larger picture. I don't know. I mean, it's been sliding. Some big boys have been selling. So
yeah, we haven't seen
selling.
these levels since what year am I even looking at here? This is early 2024. February of 2024 is the last time that we were at these levels. So over 2 years, we're at north of 2 year lows at this point on Microsoft. They get the giant sentiment boost. Well, I shouldn't really say sentiment. They are involved in AI, but as the AI tech hype happened, they get that giant run up, and then I've just been selling off really since last summer. I haven't really made any new highs. So
yeah, it's been sliding.
Maybe some good long opportunities here. But these premiums are just going to be so insane. I know. If we go like a year out, you'd have to go insanely far out of the money to try to get on anything naked. I mean, even if we try to go with a vertical of some sort here, it's not like there's that much downside premium to take advantage of. Like, what about something structured around the 400 level here? Yeah, that's not bad. 575, 425. I mean, these are a year out. You could get more aggressive if you want. Go way out of the money. That's pretty much 2 to 1 there. But is that really that much better than that one we were just looking at for $50 more? I don't think so. I don't know. This isn't one I'm itching to get involved with at this time. I don't see what necessarily stops this slide. It seems to be pretty substantiated, and this is an aggressive down move, especially in the last week. Is Copilot related to 21 Pilots? I don't believe so. I saw 21 Pilots in concert one time. Great performance.
Yeah.
I highly recommend. I don't even really care for their music. I was dating a girl who wanted to go, but I enjoyed myself.
Not everybody's a great performer, so it is cool whenever you're like, yo, they're great in person too.
It's like a
not
whole
just
production.
studio.
They're like in all sorts of different spots.
respect
and
it.
Popping up in the crowd and going up on cables, doing drums.
I respect it. I think anybody performing in 2026, I think it's going to become more of a hot commodity. But I even find those live events more attractive. I don't know if we're longing for those kind of things, but
I respect a good performance. Enjoy it. In July of next year's 450 on Microsoft. 450, Gus. FWIW. What does FWIW mean? What am I missing here? That's an abbreviation I'm not familiar with.
F with it if you're effing with it. I don't know. In July of next year, 450 Gus, FW. What is that again, Jared?
I'm not sure. There's some text speech I'm missing out on here. In my opinion, Bill Gates' personal life troubles low-key factor as well. Yeah, that's sort of what Errol was alluding to there. I'm inclined to agree.
What was that again?
When you said you weren't going to bring up the files.
Oh,
we were talking about Microsoft, but yeah, it is. For what it's worth, in July of next year's 450, Gus, for what it's worth on Microsoft. I see. Are you saying you think it's going to be at 450? I think 450 is very much in the equation. I mean, that's just this level. If we're looking at that on the chart, I mean, that's not any crazy recovery. If you're a gap fill guy, maybe we need to see 483 sometime in the next year. Oh, those are the leaps you're in. I see. You got July 450s. Okay. It's all coming together. Yeah, I think this is one I will want to get some long involvement with, but in a leap context, I'm in no rush. I would prefer to see some sort of confirmed upward break. I'm not going to try to catch the falling knife when we're talking about things that are that long dated. If I get slipped, $30 on a $500 max profit, it's like kind of is what it is. Obviously large on a percentage basis, but if that's what it takes to see confirmation and feel a little confident that things might be turning around, I'd be willing to get involved. Although I suppose if I were saying that 2 weeks ago, I would have seen this and jumped into some leaps and be getting burned right now. So. It's all touch and go, but it's too well established of a company to not want to attack at 3-year lows, right? I mean, it's a serious spot.
Because I'd even argue, outside of Bill Gates' personal life troubles, let's say Bill Gates isn't with the company one day, which is probably going to happen one day. He's getting a little bit older, but if he's not with the company one day, I'm sure Microsoft is still going to be a big dog in the race, no matter where they end up in the next couple decades.
And saying, dudes, I have you on while operating a rented Caterpillar dozer. I'm digging a new farm pond in my place and trading at the same time. Hell yeah. That sounds like a great day.
Living the life.
Yeah, no kidding.
Sounds amazing.
You should get some steel plates and weld them to the sides of the No, okay. What do you consider a confirmation here? I would say...
Is that on Microsoft?
Yeah, on Microsoft. I don't know. I would say I want to see I don't know. Like I said, it's scary because this move that we saw here from February into early March is something that I would have considered a confirmation. I would just like to see it string a few green candles together, show some substantiated growth. I'm really talking more in the micro as I speak about confirmation and as we're just in the midst of this, total slide, one green day in the last 10, 14 days, however many candles this is. These are daily candles. I don't see any reason to try to catch this knife. But that said, the other side of the equation that I'm saying here is with leaps, you have a little bit more room. Even if I were to believe I see confirmation and guess wrong, they're so long dated that as long as the thesis holds, it would be fine. If you want to take this example again, had I seen these few green candles right here and decided to buy at, say, the 400 level, I would be hurting right now, but I would still have 350 days left on these contracts, and I would still believe in the thesis and not really care. So I'm just not going to try to perfectly bottom tick when there's a year that you're talking about time horizon. Microsoft is currently too big to fail. Yeah, absolutely. Microsoft definitely is in the bucket of companies that would get bailed out if they somehow
100%.
They somehow blundered away, and we're in a terrible situation.
100%. With the things that Bill Gates got caught up with, some of his friends are probably the same friends that would help his business not go under.
Sure.
Considering, the type of affiliation he does have. So,
none of them are in jail.
Yeah. So, definitely those might be, they're just same thing with PLTR, right? Like PLTR, regardless on the opinion of them, when they have contracts with the government, there might be a little bit of an inkling that they could succeed and might have a little bit of inside help of succeeding when they are entangled with the government. So,
yeah, PLTR beginning to bull flag a little bit as it comes out of that drawdown.
I know Michael Burry, right? Put the short on near the top.
I don't know that he's still in on those shorts, but yeah, he was in at like the close to 200.
Yeah, I was gonna say if he scaled out any at all with that type of position size, he probably made a pretty good buck on it.
Yeah, and I did manage to catch a Palantir short somewhere in the midst of this drawdown. I didn't perfectly top tick or catch the full thing, but there was a max profit short in there somewhere. Who asked about MCL? Rodrigo, any trade ideas for MCL before the weekend? Well,
I was a little bit more neutral biased on there.
Yeah, I know you were saying you were thinking about getting neutral. I was commenting on how contrarian that was. USO is my preferred vehicle to attack oil. I'm already short. It would be the short answer there. Deeply so, in fact. Where are they? Right here. A little bit green on the day today. Bleeding on these contracts. Have a fair amount of time left. Like I said, the gamma is sort of the broader thesis with a lot of these. I just think that whenever the true war is over news comes through, this suddenly collapses. These put side premiums go flying. That's why I'm long the puts instead of trying to sell premium or take advantage of theta or anything like that. I would prefer to just, even if these never get into the money, if we can just get that one giant $20 sell off to the downside in a single day, these all go flying. So that's sort of my thesis there. In the shorter term, though, as we head into next week, I don't know. I like Arrow's neutrality thesis. Do you want to share that again? What your thoughts are?
Just more so expecting a little bit more of a slowdown directionally speaking. I don't know. Maybe we get stuck in this range for a little bit, but that's really all. I just felt like we've really poured a lot of fuel on the fire in both directions in such a short amount of time. So, that's kind of sitting in that period of uncertainty. I could see us having a little bit of some more, a little bit of range bound action based off of the direction that we had seen. But that's just kind of where my bias is. But a little bit on the sidelines at the same time. Directionally speaking, I have no bias. It's kind of tough. So I think that's why I lean neutral a little bit.
Yeah, the elevated
in the short term, at least, like over the next couple weeks, I would say.
Yeah, and the elevated volatility obviously offers some good opportunities to sell premium. And if you go neutral, you're just selling premium on both sides.
Yeah.
There's lots there to be had.
Squeeze some out.
Lots of meat on the bone.
You're able to go pretty wide as well on the USO, so we might circle back around to considering that at the same time. You're able to get out really wide, so if we need to, we could adjust one side.
That's true.
But then again, it's like you ask yourself, is it worth it selling an iron condor? Is it worth buying the extra wing to cap those prices? Like, is the trade even worth it now? And then you could consider selling the strangle, but then do you want to hold a strangle overnight in oil based off of what we've seen? So it's a little bit of a dance you got to play with the decisions you got to make.
Yeah,
here.
Especially the buying power. The buying power you're going to have to post up to get a strangle on in a thing that's this volatile.
Yeah.
It's like the risk equation becomes a lot dicier.
I mean, because through these last couple of days, I mean, if you had a strangle on, you could have a call from your buddy Margin the next morning. Some pretty outlier moves we've been seeing here.
Yeah. Why is Pizza Hut calling you at 3 a.m.? Robert, yes, long 3 at 66.46. All right, Robert, you were successful yesterday. Godspeed to you, brother. Long at 66.46. It's where we're at right now.
That's a full port.
Go up, market. Go up for Robert. Bobby, can I call you Bobby? No, I'm not going to do that. ASTS is ASTS the big mover tech. Yeah. ASTS moving on that SpaceX move today. Loving space stocks. Yeah, if you were just already long space stocks into what we're seeing today. Pretty much any of them. Like I said, pick your company. ASTS, PL, blanking Rocket Lab is the other one. You'd be
Rocket Lab.
You'd be a happy camper at this juncture.
Said undefined risk over weekend in oil is too wild for me. Yeah, no, we could do roulette on who's going to do that one. Who wants to take that? Who wants to take that risk over the weekend? Not me. I feel you, Rodrigo.
Do rockets use oil or ethanol? IDK. I don't know either.
Let me check my notes. Checks notes now. It's like, why do you know that?
It's quite literally rocket science. So
get your friend that knows like the little details about everything, every industry.
Any aerospace engineers in the chat?
Yeah.
Let me know.
We all have the friend that has those fun facts about like how did you even come across that piece of information? Full port, a little bit of a full port jib. Fly and Lunar pumped today. A little more volatility in Fly.
Fly.
I looked at that in a little bit.
Oh yeah, look at that. Yeah, it's also just sentiment move. They are not a space company, but they are a things in the air company. Yeah, they're a close to space company.
I think the tide is rising.
I'm not going to take you all the way to space, but look at you much closer to space than you are standing on the ground.
Yeah, they're getting closer. It seems like the tide is rising because all these SpaceX companies seem to be benefiting from that directional move to the upside.
Seth, Space Name's rallying because the SpaceX IPO news this morning. They are going to file their prospectus sometime in the next 2 weeks. Is the rumor at this time? So all the space companies taking a bump on that. Maybe kerosene, hydrogen, and methanol. I have no idea. You guys are just throwing stuff out here. Yeah. Remember all the enols always giving me issues in chemistry class because they're all just like
the alls and the ites.
C3, H8, C5, H8.
There's the eights and the ites.
Yeah. Oh, yeah, like nitrates and nitrates.
Nitrates with the Na4,
Acids
Na3.
Bases. I have not good at chemistry. I was a big STEM guy, but chemistry I could never get my head around. Too conceptual. JetBlue mentioned holding 20 calls. Do you mean 20 strike or 20 of them? I hope you mean 20 of them. 20 strike. 20 strike is considerably out of the money. But I don't know, potentially a good gallon play. I mean, if a 20 strike is even offered, I bet it's like 2 cents. So is it? No. Not anywhere that I can find. So I presume you mean 20 quantity. But hey, you're doing good. If you bought those anytime before today, I'm sure that you're sitting fairly pretty right now. I've been long Frontier for a little while. Do I still have those on? No, I guess I got out of those last week for a loss. They were deeply losing. But yeah, taking a sentiment move, of course. As soon as I get out, it suddenly wants to start chugging back to the upside. Is this a broader airline thing or just a budget airline thing? I guess it's just a budget airline thing. I mean, everyone's doing well, but not Frontier JetBlue well.
It said rockets primarily use liquid hydrogen, refined kerosene, or liquid methane, typically paired with liquid oxygen as an oxidizer for liquid-fueled engines. There we go. Yeah, you're right. That slipped my mind. I don't know how I forgot that.
Yeah. How do we not have that?
I don't know how I forgot that.
20 of them. Okay, good, Toilet Wave. Well, yeah, congratulations to you then. If you picked those up anytime in the last week before today, I'm sure that you're doing real well via Google. Nice. China goes into Taiwan. What's the play? A TSMC put? Or
Yeah,
what do you call?
you touched on Taiwan Semiconductors the other day.
Yeah, I think it would be short TSM is the way that I would choose to attack that. The NVIDIA calls are, that's an interesting thesis, but obviously TSM very tied into their supply chain. I'm not as confident that NVIDIA would move up as I am that TSM would move down. There's also just broader China ETFs, Yin and Yang, two of my favorite tickers, Yin and Yang rather, two of my favorite tickers in the market. Yin 3x bullish China and Yang 3x bearish China.
Oh, those are actually inverse ETFs? Yeah. That's fire.
China inverse ETFs.
That's the best ETF name I've ever heard.
I know, right?
For sure.
But yeah, some good ways to get directional exposure to just sort of China as a whole. If you feel that there's an impact on China, I don't know any Taiwanese ETFs off the top of my head. If there are any, feel free to share them in the chat. I'd be happy to pull them up. But yeah, I think it would be short TSM if China decides that they want to go into Taiwan.
You know which inverse ETFs we haven't looked at in so long? I feel like TQQQ and SQQQ.
Yeah,
I haven't looked at those ones in so long.
Yeah, SQQQ is
which one's short the market?
SQQQ is short.
Is it? There we go.
Yeah, so actually rising a little bit as of late. And the TQQQ long. And there's also is TQQQ leveraged? These are leveraged, right?
Yeah, I believe triple leverage ETF. I believe they're 3x.
Yeah, 3x or 2x or something. But yeah, I do keep some of these in the long-term portfolio, just solid growers.
Long NVIDIA June butterfly.
Long NVIDIA June butterfly. What the holdup? Yeah, I don't know. The tech stocks have just really stalled out. The AI excitement has dwindled. It seems, like we said, they patched it. You can't just say AI and get a 10% bump anymore. It's been patched.
What phase do you think we're in right now? Do you think it's like, yeah, we know the hype is there, we know the opportunity is there. Now, are we kind of in the phase where it's like, all right, what is going to come out of this, and who's leading in this space right now? Are we kind of just stalling right now? Are we kind of just treading the water in terms of where we're at with AI?
Yeah, I just think we're kind of letting valuations catch up a little bit to
it's fair.
Just share price, or I suppose, that's what I'm trying to say.
That's fair.
The PE ratios are kind of coming down a little bit. There was just a long time there. I mean, multiple years, 2023 onward, really, until this stagnation.
It was a lot very quickly,
summer,
right?
Yeah, it was a lot very quickly, and it was really. We were trying to price in, 15, 20 years in the future, the broader implications of AI and how it could take over the world and all that. And I just think that we have now done that, and it's time. And now the market has decided it's just time to kind of chill on these things and let the revenue actually catch up to the valuations a little bit and see some substantiation of these theories before we push things to higher highs.
Yeah,
UQ is 3. Thank you, Catterday. Appreciate it. Pretty colors when SpaceX launches at night. There you go. Love a good rocket launch. It's awesome to see a rocket launch in person. I'm sure
I've never seen one.
Really?
And I heard again they were launching the rockets in Orlando, which again I was in Tampa for 4 years, which is about an hour and maybe 20 minutes away. So I'm surprised I learned that like a couple months ago and have also never seen a rocket launch.
Yeah.
That hasn't been AI.
It's true. So, I would love to see SpaceX.
But you have.
I've seen a rocket launch before.
Okay.
When I was real young, I got relatives in Orlando, so it's like you could stand in their backyard and see them.
Okay.
I've never been like right up. Well, nobody can be right up on it, but close enough to really see a whole lot. But I've seen them go up into the sky, and I'd love to watch with my eyeballs Tesla, like the SpaceX, like the chopstick thing where they're catching them.
I wouldn't know, what does that look like?
That's like their whole thing with the Dragon rockets. They can land again, and then they
yes, have seen a video on that.
Yeah,
I've seen one.
I think that would be really cool.
That technology is insane, though, huh?
Yeah,
to have the ability to do that, that's insane.
So it looks edited. Like
it
when you watch a video, you can't believe that it's real. Yeah. It's like almost unnatural the way that it just moves so smoothly. Hype has been priced in. Value starting to balance real world result. Yes, well put, Jared. That's a good one sentence way to say all of the yapping.
Where is fair value for SpaceX right now? It's like, where is fair value?
Yeah,
are we above it or below it right now?
Yeah, I mean they have so much going for them, and Starlink is a part of that company as well. Yeah. Starlink is like one of their main revenue drivers.
Starlink snuck up on everybody. I feel like.
Yeah. That's crazy. I mean, a lot of people still don't realize how often they put like 3 new satellites a week in space with Starlink.
Yeah.
I mean, it's just a constant thing, sending those things up. They let people.
What an asset, though. Holy moly,
yeah.
what an asset to have.
Yeah, it's crazy.
I mean, that gave Elon Musk insane leverage in areas where he probably wouldn't have had otherwise. I mean, he was able to get into geopolitical conversations just because he had Starlink out there, right? So they could use it. Ukraine had deals with, so it's just kind of crazy.
Yeah, contracts with all sorts of foreign governments, and he's got contracts with our government.
It's wild.
There's like national security satellites that are secured, and yeah, it's crazy town.
Yeah. I don't know if that's scary for an opportunity. My bad. I don't know if it's scary to have the government reach out and want to utilize some of your resources. Like, I don't know if that's scary or like an exciting opportunity. Like, that's a weird position to be in.
I think in a business context, obviously, it's an exciting
for sure. Yeah.
It is a lot of pressure though, especially if it's like national security implications. You really got to keep these things secure. It's putting national security and highly sensitive stuff in the hands of private companies. There's a lot of pressure on.
It is.
It's going to be like potentially world altering consequences if you mess up, which is quite a position to be in. I'm sure nobody takes their jobs lightly.
A unique one for sure.
I use Starlink. It's been good. Yeah, Starlink. I've only ever heard great things about Starlink.
I've never used it. Never heard of. I don't have any friends that I know of that have used it. But I hear it's pretty cool.
Yeah, I've mentioned before. I don't have any friends that use it, but I've run into it in a lot of the national parks. People just have the Starlink thing slapped on their phones.
Makes sense.
Yeah, real reliable. When it was first coming around, it was like it'd be like 30 minutes on, 30 minutes off as the satellites pass and stuff. But now I think it's pretty much constant. They have like a pretty full network.
Yo, who's going camping with the boys? Who got the Starlink? Yo, who's bringing a Starlink? It's like, I got the Starlink in the back. No, that's going to be it on my end. We'll see where the markets finish up for the day.
Yeah, they've double boxed us, so that is our sign that it's time to wrap it up here. Yeah, that's all we got for today. Thanks so much, everybody, for watching. We dearly appreciate you taking the time out of your day. We never take it for granted. Airline, I'll be right back here, same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. We'll see you guys next time.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
You gotta look right. I gotta keep it smooth. You gonna want it right. They gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know.
We're back. It's still Wednesday, March 25th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, how goes your turn through the middle of this week?
It's all right. You know, it's more of the same, what we expect, kind of oil down, stocks up. So we just need clarity on what's going on, and I think that's going to come, probably next week rather than this week. But a little bit of risk on here that we're seeing, so I'll take it for my portfolio.
Has oil topped? Are stocks bottoming? Those are the questions we're going to attempt to answer on today's show, because this is a market that, with yesterday's headlines during overtime, we saw that stocks traded higher, oil immediately came off. We haven't seen much follow through today, but it's a market that's pricing peace without proof, dare we say. Bond yields are down. Gold prices have ripped higher. The only part of the equation that's not really cooperating thus far today would be the US dollar. The news, of course, is continuing to shape the market as we move through the trading session. And all eyes remain on Friday as we wait for those US troop deployments to arrive into the theater of war. Thomas, one of the questions that I find myself looking at today is whether or not the market is oversold at the downside, because despite all of the hemming and hawing and concerning headlines, the economics that appear to be problematic as we move over the next few months, stocks are proving quite resilient. We may have hit a washout point recently. One of the indicators that I like to look at from time to time during periods of market stress is how many stocks are trading above their 20-day, their 1 month effectively moving average. 20 days, right? 4 weeks, 5 times. You trade per week. Okay, that's simple enough. How often do we get below 10% of stocks trading above their 20-day moving average? Not that often. I've marked off some of the recent occurrences on the chart here, Thomas. Upper panel is the S&P 500. Lower panel would be that percent trading above their 20-day moving average. And you can see here, for example, in September, October 23, you get fewer than 10% of stocks above their 20-day, and that's pretty close to the lows in the market. You have another one of these episodes going into April 24, and that's close to a low in the market. Sure enough, at the start of 25, or even last April during the tariff episode, you have these washout moments where people get too far over their skis and too bearish. We didn't quite get there this time. 10.13% of the stocks in the S&P 500 traded below their 20-day moving average, or rather traded above their 20-day moving average at the lows earlier this week during the washout. But it's pretty dang close, and I don't know if we're going to get too upset about 0.13%. So, Thomas, knowing that we have achieved some types of oversold conditions that have historically been associated with lows in the equity market, does a graph like this change your outlook on how we should be approaching equities over the next few weeks?
I mean, calling a bottom is hard. We've seen in this graph, you can see that there's retracements after you get to this level. I think the bounce here is, it's speculative in nature. It's on the prospects of a peace deal happening. I don't think it's not a vote of confidence in the macro backdrop. I don't think it's saying that, we're going to resume the previous trend higher. However, I could see it shaping up to be, a bit more of upside if traders do see more positive headlines on some type of peace deal. At the same time, you're seeing some military analysts say that, this is just biding time until U.S. forces are in place for a potential. I think that's has to be a strongly underlined word here, is a potential operation for Carg Island or some type of ground force action. So I think that this is a fragile move, but I wouldn't be surprised to see us get some more upside through this week because, from what we're seeing, any type of ground action won't be happening until at least probably, the soonest it would be is Friday from what I'm seeing. Forces are in place, and then, you still have some prep and planning to do once those forces are in place. So I don't know how I'm playing it here. I don't really want to buy directional bias to the upside here. Maybe selling a put spread if I could get near 65.50, somewhere around the recent bottom. That's my view on it. I mean, also I'm not really loving the way the sectors are rotating today. I think, what is it? Materials, healthcare, leading the way in the sectors. So I don't think that's the strongest tell of a purely risk-on move.
I think there is a point to that, Thomas. Financials are trailing on a day like today. KRE is only up 0.5%, where you see XME, the metals and mining ETF, up 1.7%. Then again, biotech's up, telecom's up, discretionary is pulled above healthcare. So it's starting to shape up a little bit nicer as the day's going on. But I hear you. You're not getting the exact growth blend in the sector rotation today that one would hope. Nevertheless, right? Hope springs eternal in this market. No proof of peace yet. Stocks aren't exactly extending their gains. They got their kick in the pants yesterday around 4:15 Eastern time, and we've been more or less stuck since then. We have had some encouraging headlines come out in the past hour or so, which I think are worth noting here, as we're pinned near 66.60 on ES, which that's not good. We're pinned near 66.60 on ES. Thomas, one of these headlines is that Arab mediators are reporting that the Iraq is being less strident in private discussions to end the war than it is in public. Arab mediators and other people familiar with the matter said, giving them hope that the diplomatic effort they're trying to spark isn't dead on arrival. Okay. There's also a second headline. U.S. forces conducted a raid on Iran's Karg Island to seize oil infrastructure and potentially leverage control of the Strait of Hormuz. Geographically, Thomas, the Strait of Hormuz is, I think, around 300 miles or so, 400 miles from Karg Island. So it's not like taking Karg Island automatically means the straits reopen. It's really just acquiring about a piece of leverage here. So we're going to be subjected to these headlines still over the coming days. But the market is looking through so far the continuation of the bombings to this idea that an off-ramp may just be around the corner. So oil down, stocks up today. How much of a believer are you in this move, given the very modest contraction and volatility that we've seen thus far?
I mean, I'm not a believer enough to really trade it to any great extent. Like I said, I might sell the put spread around 65.50, 6,500, around there if I could get down there. I still think there's a lot of moving pieces here. Something can go wrong really quick. And if the headlines churn negative on this, I think you could see this move be erased very quickly. A lot of this is speculative froth, in my opinion. and you know, rightly so with what we're seeing right now. But again, I think this is very wishy-washy with the negotiations being in a early phase right now.
Yeah, and the U.S. is working to arrange Iran peace talks in Pakistan this weekend, per another CNN report that just hit the wire right now. So you see right now an equity market where vol has come in. We were looking at for example, the Russell was at 49.7 IVR on the show yesterday. Today it's in at 45, and we're sitting near the top of a recent trading range, which, Thomas, we may very well get our first close above our 1 month moving average since the first trading day of this month here in the Russell. So talking about a trend change that could be on the heels of occurring, or at least a relief rally that pushes this market to the upside. The technicals are pretty close to telling you that we're going to turn the corner, and whatever bearish machinations that we have planned probably won't work out in the short term. The directionally neutral things are going to be working out well, but I think about the Russell here in this chart and the recent pivot low we had on March 3rd. It's been more or less capping the market in recent sessions. I have some vested interest in this area right now, where a little bit more of a push to the upside, I'm going to have to eat a loss on this initial short call spread I have up at 2550, 2600. But that's where we are. We find ourselves in this market where we are just ever so close to crossing the thresholds where folks who had any short delta exposure, it no longer becomes the appropriate way to think about this market. If it's ES, if it's RTY, if it's NQ, they're close to getting back into consolidative regions, which would then infer that the breakdowns have failed.
Yeah. I mean, I think a big question is if the war ends, if these negotiations go well, is that enough to suppress energy prices, bring down inflation expectations enough to where you bring the rate hike expectations off the table and you get back to rate cuts? But the market still, you know, if the war ends, you still have a backdrop of where you have, you know, at least slightly higher energy prices for a little bit, and you have a weak labor market. So rate cuts get pushed back no matter what, I think. Even if this ends, maybe those rate hikes come off the table. Is that a scenario where the NASDAQ is going to lead higher? Is it, you know, S&P 500? I think everything would rally, but I don't think we'd get back near the recent tops that we were trading back, you know, around October, around January. I don't think we'd get back there.
It's one of the reasons why the directionally neutral things may be still the most efficacious way to play this market. Yeah. Thinking about how this has behaved, right? I'm going out to some of the, you know, trades that are existing at 36 days to expiration, 61, 6,200, which, by the way, if you're willing to take a 7-to-1 or a 6-to-1 risk to reward, somewhere in that neighborhood, 7-to-1 now, you can get paid on it. I do see here, though, that if we're thinking about the positions we've been trading around, Thomas, you know, risking 4 to make 1, it's a little bit worse than that, still at the 60% probability of profit. If this is the end, so to speak, of the road, and we are indeed turning a corner right now, then vol should be coming in as part of this. I'm with you about the move to the upside. 7,100, 7,200. Do we really think we're going to all-time highs here because we solve this issue despite all the economic knock-on effects and AI and private credit issues percolating in the background? I mean, I guess it's possible, but I'm going to take the under because we couldn't get through there prior to this supply chain issue, you know, working its way through the system, and the Fed is not going to be cutting rates anytime soon. Thomas, let's take a look at this from a fresh perspective then today. In ESM 6, 44 days to expiration, the one standard deviation move, 72, 7,300 to the upside. We'll call it 6,100, 6,000 to the downside. 6-to-1 is not quite what we want to deal with, but if we start to pull this back in, okay, if we go just inside the one standard deviation move, we can still get better than a 4-to-1 at a 56% probability of profit. I'm comfortable with that. I think that's absolutely the way we should be taking a look at this market, given the information that we have in front of us right now. If this thing does rally, how much relief will we actually achieve? Volatility probably comes in though. So 200 points, 300 points to the upside. That gets you to 6,900, maybe 7,000. You're still below 7,100, and we're playing for theta decay here. I'm on board with that. I don't think in the next 44 in, 21 out cycle, we're getting to 7,100, given everything that we know right now.
Yeah, that would be it'd have to be a real Goldilocks scenario, and I don't think we're doing that with everything you mentioned. It would just be maybe like a 5% rally. Get back to pre-war levels around there, returning to the previous highs. That's a lot more suspect.
We still have a lot of places in this market that have a good deal of technical damage. I'm thinking about the Mag 7, and you were asking about the NASDAQ earlier here, Thomas. But, for the Mag 7 to turn the corner, let's get back through 60 first to at least return into the flag that was forming following this topping pattern. And the topping pattern, for what it's worth, has not played out by any stretch of the imagination. That's like a 7-point decline from 62. Got close. 55 or so is where you're aiming, but you didn't quite get down there. Today would be again, trying to close above the 1 week moving average. And you could see that since the market opened, stocks have traded a little bit softer, at least in the big mega cap tech side of the equation. The market isn't overly short, but we may have reached washout lows where if you get the headline, you get a bounce. I think it's still going to be a bounce to sell. I'm not on board with this thing jumping given the change in the regime and the technical structure. But I'm happy to be proven wrong, because ultimately what's best for the bigger portion of my portfolio, which is investing and less, day-to-day trading, I haven't touched any of those holdings. So I'm not going to be too upset if the market goes back to all-time highs. I'm not going to be properly positioned for it.
Yeah, trading side of a bounce to sell, and volatility is going to be lower if oil comes back in, the war is over. In that case, I'd look at buying probably a put spread, because you're going to be playing for in a lower volatility environment. I've been looking at other things like things that were already damaged prior to this, like IGV. I'm getting back to the point where I want to sell a put spread in IGV. Already damaged, it's not participating really in the rally the previous couple days. So I think that's something that I'm looking at doing.
The top performing sectors today have to do with what's happening in gold, and we're going to talk about that in a little bit. But GDX is up 3.9% here. You mentioned the metals and mining, XME likewise. That's having a fairly strong day given what we're seeing in the metal space. Thomas, I'm trying to figure out what the next move is over the next few sessions, and I'm thinking through the end of this week, we're probably going to get more of this back and forth, especially if the talk is that there's going to be negotiations over the weekend in Pakistan. It doesn't sound like we're going to have resolution in the next few days. And if President Trump pulls his typical kicking the can down the road card out of his pocket, then Friday we get to a market where he makes an announcement due to the progress towards a ceasefire deal. Negotiators are meeting this weekend. I've instructed U.S. troops to, stand back and stand by.
Yeah, I mean, and you got to think, if we do a raid or a limited operation on Kharg Island, is that something that would soften the resolve of Iran to negotiate more, or would it harden it? I don't have the know of, answering that question. And it'd be interesting to see how the market reacts to that in the follow-on discussions. But there's undoubtedly, the forced posturing happening to where that is a possibility now. So I think that's a big headline to watch. And you're going to have a market reaction if that does occur. I don't know if the market reaction will be sustained because, like I said, I don't know if that'll soften or harden the resolve and how it will impact these negotiations.
Thomas, I'm going to stay short deltas in the Russell until we punch through the zone, get through the 50-day moving average, then we can have the conversation. Same thing for the S&P 500, directional longs. You get through this swing zone down here, you break the downtrend from the highs that we had in the last week of February. That could really just mean 6690, 6700 by the end of this week. You have then a lot of tenants in place for a more meaningful bounce back, again, 2%, 3% to the upside, I'm going to be using that as an opportunity to sell. But for now, given where price stands, I think the directional neutral stuff continues to work. And for ES, at least, that continues to work. Those are some of the best performing positions I have on right now. Could monetize a whole bunch of these. In fact, if we wanted to take off one of the 36 days, take off this leg, we could. Let's just actually swap that. Quick G, a little over $1,000 profit, but there's still time. As long as we continue to chop around, we can milk this for a little bit longer. As theta decay is our friend. And again, 7,100, 6,200, are we probabilistically touching either of those in this cycle? I can't get my head around that being the answer to yes. So we trade neutral, Mr. Westwater. I'm curious, when you think about the sectors otherwise, though, what do you think? You said IGV is on sale. Let's say this is the low. We just had our washout. We got below, we get to 10% of stocks or less trading above their 20-day moving average. What's the number one place that you're looking if the market has another lurch to the downside?
I mean, there's things that are priced well, like, XLE has, of course, risen. I think if the war resolved, that would be one to kind of look at getting a little short. Getting a little long, I'd want something that's really beaten down already. There's a lot of things. Maybe XLV. It's at a consolidation area from October, November. XLC, it's held up a little better than others, but also coming up to potential support around November lows. But I don't really trade these sector ETFs too much. A lot of them just don't have the liquidity that I want in them, or the prices, or both. So I kind of, just watch those for analysis reasons more than trading.
We have XTL here. That is one of the top performers today. Telecom, very interesting. New all-time highs. Usually one of the growth names, one of the growth leaders in the market. It's mostly tech. It's 65% weighted tech, 33% weighted communication services. The remainder is real estate, believe it or not. Point being, though, telecom is not something you see moving to the upside from bottom left, top right if the sky's falling. And there are a few growthy things that you can hang your hat on here. Semiconductors continue to chop around, although they are really, really, truly trying to hold the uptrend from the late April and November swing lows here, Thomas. So, we think about the washout numbers. We look at some of the pillars in this market. They're not quite breaking down. They're holding up. They're proving resilient. It's one of the reasons why directional neutrality here is prevailing. I still have some short-term downside protection on, but by and large, the typical tasty stuff is being done for collecting the premium that volatility is affording us right now.
Yeah, and I think that's a smart thing to do, because ultimately volatility is still expanded from where we were pre-conflict. Started the year VIX around 13, high 13, low 14. We're at 25. We're off the lows near 35, but it's still elevated. So you could still be directionally neutral, get those high premiums, and you get those wide widths for. If there's a big move, you could kind of stomach that with a lot of these trades. Oil being one of those,
Oil being one of those. You have to be able to stomach it. Yeah, that's the whole thing. Surviving right now. Capital preservation, portfolio protection, riding out the storm, making sure that you're able to take advantage of opportunities when they come down the pipeline. Thomas, let's talk about bonds, which we just had a 5-year bond auction, 5-year note auction, I should say, come down the pipeline here today. And if we were to take a look at where it landed about an hour ago, you could see those red candles here on the 5-minute chart. The tail was 1.4 basis points. That's really, really, can I say it a third time? Really ugly. Bid to cover ratio was 2.29, rather weak. Indirect 61.9%. I got to double check, but these are multi-month lows on some of these figures that we usually see here, Thomas. So I find that fascinating. What's interesting about the belly of the curve, it's typically the area of the treasury market that proves most sensitive to the shifts when the market flips between hikes and cuts. Sure, the 2-year yield goes ballistic, but if you were to go back to like the taper tantrum episode in 2013, it was the 3s, the 5s, the 7s that had the most dramatic changes in terms of nominal, basis points, more so than the 10s or the 30s or the 2s themselves. So we have this gigantic shift over the past week in market expectations around Federal Reserve cut cycle. And now we're looking at the belly of the curve facing dramatically soft auction results here. I think those two things have to be tied at the hip.
Yeah, I mean the soft auction results, it's a little we have higher yields. So you would think just, ignore everything else, you get the higher yields. You'd think they'd be a little stronger there.
You would think so. And even with today's gains, because we did gap open higher and we ran up to the upside. Furthermore, I mean, we have bond here up nearly a full point, 29 ticks. Still have not broken through the levels that we need to feel, ideally comfortable that maybe we washed out. I say that because the January low, which we initially bounced from here in the middle of the month, broke down and we're trying to trade through it. Maybe we will. Notes, though, have not turned that corner. And you can see in ZF, the 5s, we're even deeper in that hole right now. The bond market isn't exactly telling you that the lows are in just yet. When you look at volatility, where do you see vol going today? In the 5s, 80.4 IVR. Notes 55.1. It's not exactly coming back in. So what would be the sign of the low here in bonds? I think the snap in volatility coupled with some price improvement, but the price improvement hasn't exactly taken shape. If anything, it feels more like a counter trend rally still. It could turn the corner. Maybe selling puts will be the right thing to do at some point. And notes, obviously, the best way to express that, more so than bonds. Not only do notes have a higher volatility profile right now, but they are the more approachable product for retail traders. Say it often, but half the tick value, half the overnight buying requirement as ZB. So thinking about 58 days to expiration here, you poke your head through 11 and a half, Thomas. There may be some interesting opportunities at saying, okay, we got back to 111 and a half. We returned above the 1 week. We returned above the January lows. I can sell the 109, 110 put spread here. I don't already have a bunch of short oil exposure or long stock exposure. It's all the same trade. You could size up something that's in the neighborhood of a 3-to-1 at, quite frankly, 71% probability of profit. And that's a very decent risk to reward given that level of profit potential.
Yeah, definitely. And I mean, the correlation between equities and bonds has become stronger into a positive correlation where it was more really neutral before the conflict.
It continues to evolve, right? I think that's the most important thing to recognize here. I'm just pulling up a quick rolling 1 month correlation with crude oil and bonds right now. The rolling 1 month correlation is negative 0.84, right? So oil up, bonds down, hand in hand. If we were to pull that over to something like SPY, or we'll go to ES here, the rolling 1 month correlation between oil and bonds is 0.9. Sorry, bonds and stocks is 0.96. Between oil and stocks, it's going to be
-6,
negative 0.84, right? So stocks highly negatively correlated with oil, bonds highly negatively correlated with oil. Stocks and bonds are nearly perfectly positively correlated over the past month. It's all the same thing. So if you're playing long stocks, you are expressing the same view as a short put spread here in notes at this juncture. Relationships change over time, but when macro's in the driver's seat, correlations tend to go to 1.
Yeah, and you definitely have to be aware of that if you're trading, because a lot of the things you're putting on, like you said, they could be the same trade. So, you could be over leveraging through that type. You think you're diversifying, but you're really not.
You could think you're diversifying, but yeah, as you say, you're really not. Even just on a shorter term basis, for what it's worth, you still see these very strong negative correlations between ES and CL, ZB and CL, ZN and CL. It's just, that's the trade right now. So yeah, there are maybe rationales to do this, but as you add trades to your portfolio, just taking a step back and not about the specific ideas being shared here on the screen, but more of like thinking about how we put together trades, big picture, Thomas, you don't want to put too many eggs in one basket. You have to stay diversified. It's not just about the products you're trading. It's also about your timeframes and your strategic assumptions. So if you're long equities and then long bonds and short oil, given the correlations in this market, you're not really diversifying your assumptions or your strategies or your time horizon. You are leaning all the same way. And that may be the best thing to do, right? Maybe we do have a snapback and that all works out. And the prudent thing to do is have all your eggs in that one particular trade basket in the short term. But those relationships can break down. So just be mindful. If you're doing this, you're already trading other asset classes. You may be putting on another leg of the same exact trade.
Yeah, exactly. I have to diversify a little more in the duration of trades I do. I think I'm going to start doing a little bit more short-term stuff just here and there for some tactical, try to be a little more tactical and timing short-term moves. Just keep it small, but maybe doing that and trying to call bottoms or tops in that way where, there are trades where you're using, a little buying power relative to, your more core trades, which are going to be, more around the 45 days.
Absolutely. Let's keep moving over to gold here. Are metals finding a bottom in this market? We could see here that as we get a potential corner turn in oil prices, there is a jump here in gold, which traded as low as $41.28.50 earlier this week. We're now a healthy 10% higher, 45.85.50. It's been a fun run if you've been sitting long gold the entirety of this time, like I have, Thomas. What a year it's been. What a year it's been.
Yeah. One of the best things for me going into this is after being long metals for pretty much a year and a half continuously, this is the one moment I wasn't really long metals. So, the copper trade's taken a little pain from this. I'm still hanging on in there with my short put spread, but calling a bottom in gold, the volatility is, it's not rising with the increase in gold prices right now. And I think that's what we would see if gold continues to rally, is this time you don't get an increase in volatility. And, so maybe a long call spread, which is mostly what I was doing on the ride up, wouldn't be the trade to do in this environment now.
Silver prices have bounced here too, Thomas. You mentioned that volatility is not continuing to go up. I think that's actually an important observation. I took the opposite tack yesterday, noting that with the washout on Monday and the rebound that we had seen in both gold and silver, you had started to see a little bit of a rise in vol. That's not the case today, though. Silver vol is at a 55.5 IVR. When we were looking at this on yesterday's show, Thomas, silver vol was back above 60. Same thing for gold prices. It's a nice bounce here. Love to see it, particularly for existing positions that I have not jettisoned yet. But you have the spike in gold vol. The high of 94.7 comes on Monday. And even though we've rallied up here, the high IVR for today is 83.6. We find ourselves at, we'll call it 77, as it were. That's not ideal. I think that's an important point. It's really, the ideal outcome for our long gold positions is that prices continue to go up alongside an expansion in vol. The fact that they're not is one of the signs that the market's not totally ready to put this crisis behind us. Because after all, gold is the liquidity vehicle that people have been harvesting. If you're a country, you've been buying all this gold for the rainy day, this is the rainy day. So gold bouncing back Oil can break down, Thomas, but we get out of like the woods of the crisis once gold and silver stop selling and the dollar stops rallying. Those are going to be the real important tells here. So as great as the headlines are today, the fact of the matter is gold is up, silver's up, fantastic. The dollar is not selling off here. It's actually up across the board in today's session. And you sprinkle in the fact that you have this volatility rise not exactly working out the way we would hope for it, more of a reason to be cautious if we're laying into this as a bull. But I am of the mind that once we turn the corner through this crisis and the liquidity crunch side of this is all over, why the hell wouldn't gold go zoom, zoom, zoom right back to the upside? So I'm being patient. I'm very conflicted. I'm hurt. I'm in pain. Maybe I'm, hindsight bias here a little bit, Thomas. That's guiding my thinking. But I want to see a little bit more, even though it's up 10% from the low earlier this week. There needs to be a bigger vol expansion here to make me feel like there's a sustainable, durable bottom being formed.
Yeah, I'm looking at trying to do an iron condor in silver, and it's like all right. I think I'm going to hold off though. I'd probably give myself a little bit more room to the upside maybe if I did do that. For like you said, once this is over, if we get a retracement higher, play for that scenario, and then if it doesn't finish, maybe we respect the previous lows.
Maybe we respect the previous lows. Well, we have silver here. We have copper here. Copper here. Thomas, not out of the woods yet either. Keeping it simple. Swing lows that we have going back to December. Even more than that, we could pull up this chart here. Okay. Swing lows going back to December, January, March. 560. Cracks last week. So we're not back through there. We're still below the 1 month. We're still below the 50. You get through 560 again, then guess what? You have a false breakout. This is no longer looking like a left shoulder head, right shoulder topping pattern. But if this were a topping pattern, Thomas, as is often the case, you break through the neckline, you bounce back to it, you reaffirm the support now has become resistance, and the next leg of selling begins, which is one of the reasons why we just need a little bit more to say a corner has been turned. And this is one of the faults in the way that I approach the market, for what it's worth. I'm not going to catch the highs and lows, the tops and the bottoms as a trend follower. If anything, this is saying a chance to maybe rejoin the bearish side. So let's just see how this works out around 560. We'll know the metals have turned the corner. Copper's 565. Gold is, 4,700. You get silver up at like $75. You're looking a little bit different, but the vol expansion needs to happen as well.
Yeah, I mean, if you're looking at economic output being strained from higher energy prices, that of course hurts copper. Yeah, it's the chart's looking not great for, a resumption of the rally. I'm still clinging on to this trade. I have a short put spread. It's in the money now. Don't love that. Probably going to wait till the end of this week and maybe eat some pain there.
We're going to keep moving here, Thomas. I think we're going to bounce into soft ag a little bit today too, where we have energy sliding back, and that being the fulcrum of everything in this market. Crude off 2.25% here, following that late day move lower on overtime, Thomas, where we saw that was the chart 420 Eastern. You can see here that oil has since tried to turn a corner intraday, and I bring up this intraday 5-minute chart because you can see how effectively 89.5 has been a pivot point in the market. Let's just go there. In fact, get rid of everything else. We have a line in the sand from which we can operate around on a very short-term basis. You want to be a bull, this market stand through 89.5. If you want to be a bear, get below 89.5. That's it. There's your roadmap for today. Oil IVR is still 65.9. You could definitely see how it's taken a bit of a breather since yesterday. Although, funny thing about all this, prior to the announcement yesterday that drop kicked, I should say, oil lower from the mid 91s down to 86 or so. IVRs were 64, 65. Today, after all of that, after all the positivity, after everything, the IVR is 65.9. The market's not ready to throw in the towel on this. Tell us that we're not out of the woods just yet. These hopes and dreams and promises of a deal, peace without proof, as it were.
Yeah, it's premature to say a deal is going to be made. And even if a deal is made, we don't return to the 60s. You'll get softening, of course. My positions in Iron Condor between 68.5 and 110. I feel fine keeping it here. We're almost right in the middle of that, 50 days out. And if there was a resolution, you would see vol drop. Maybe prices drop, but vol would be the one dropping more, I think. Directionally, I don't want to play it. I've been thinking about trying to just do an MCL contract here or there to pick direction, but trying to read headlines and what headlines are going to come out from this, I think it's just too it's too unknown for me.
Too unknown is a good way to put it. We do have various competing headlines over the course of the past few minutes. White House Press Secretary Leavitt said that the White House actually never verified the complete 15-point plan that was shared that Iran rejected. I don't even know how to interpret that, Thomas. So U.S. negotiators presented a plan to Iran that because it was rejected, now the White House said, well, actually, that wasn't the plan. You just rejected a plan that we never approved. Iranian parliament speaker says that the IRGC, they're tracking enemy activity and will strike vital infrastructure in the regional state if any action is taken. So everyone's, staying armed to the teeth. I feel like we're all waiting for Friday, whether or not we actually make a move to take Karg Island. And if that acquiring that, piece of leverage forces Iran to open up the Strait of Hormuz. Or if we go into a weekend with negotiations in Pakistan. Oh, what a world, Thomas. So we have natural gas here today bouncing back a little bit. It's up by 0.2%. You could see here yesterday it took a dive after hours. It's since returning to where it was pre-headlines yesterday afternoon. I'm curious. I'm looking at the fundamentals here, and I know that this isn't really a fundamental-driven market at present time. But European natural gas storage levels are exceedingly low. This is the lowest they've been at by March of a given calendar year since Russia's invasion of Ukraine. The only other time since COVID they've been lower was 2022. Why are we not seeing a bigger kick higher in gas prices, for example, which, given the fact that there's much lower liquefaction storage available for LNG compared to oil, shouldn't these gas prices be proving more volatile? And one last point to that, because gas prices aren't proving so volatile and jumpy here in the US, is that a signal unto itself about the severity and knock-on effects of this crisis?
So, I mean, we're looking at really warm weather the next couple of weeks, a really warm April for the United States.
Thank God.
Export utilization is already near full capacity, and you do get higher prices, but that isn't necessarily translating into more demand, right? It's higher prices, better margins for the natural gas exporters. So potentially, if you look at their stock prices, they will benefit probably more from that rather than the actual price of natural gas itself benefiting. Because, you could say, if Europe needs a lot more gas right now, the U.S. is already exporting near full capacity. So we could sell it at higher prices, but you can't necessarily sell more, at least right now. So, maybe a play on getting along the producers, the exporters for natural gas is the play there. But in terms of natural gas prices themselves, I think it's being balanced out by the weather you're looking at, where you're going to see, 70s very mild, nice weather across much of the East Coast, where a lot of gas demand is situated, it's kind of a canceling out effect, you know. And at the end of the day, the U.S. natural gas market, the world natural gas market, it's a lot more global than it was 10, 20 years ago, where it was a lot more regional back then. It's starting to become more like oil, where it's a lot more intertwined, but it's just not the case yet that it's at the level of oil.
Not there yet. Very happy about that warm weather. Did I just see on weather.com that it's going to be 70 degrees here tomorrow?
It's 70 here today.
Oh, lucky you guys. Yeah. I was outside, it's like 50 degrees here, and I went outside. That warm air going in the nostrils. Beautiful. Even better tomorrow. Yeah, we're out of the woods. I only have I have one more day ahead of me where we're going to have temperatures below 32 at night over the next month. Yes. Good. Great. Thomas, we're going to take a brief detour before we go to FX. I want to talk about the grains here today, which are continuing to bump up. These are holding up even in a tape where the market is telling us that we could be looking at some sort of resolution to, again, off-ramp for the energy crisis here. But there's a whole bunch of other goods and molecules that need to make their way through the Gulf, including fertilizer, as we've said ad nauseum. I can't help but notice that the trend here in wheat, for example, we'll just use the 1-month moving average, the yellow line here on the chart, since the middle of February. You can go further back to that, since late January. But it's been a period of support here. And while we fell into it earlier this week, we never quite got through it. Yesterday was a doji inside day candle. Today, while we did set a new low relative to yesterday, we are on pace to close above yesterday's high. So that is a bullish engulfing bar. And after a downtrend, it does mark a key reversal that brings the price of wheat back above not just its 1 month, but also its 1 week. And the 1 week moving average now, alongside the 1 month and the 50, has a positive rate of change. Thomas, as a trend person, this feels like the place where we should get into some long wheat as we think about second order and third order effects of the supply chain issue that is still forthcoming, almost guaranteed over the next few months. Wheat prices would be something that would have one of those second order or third order effects, whereas energy is the tip of the spear. So what do you say? Should we be looking at bullish opportunities here in wheat with its 33.6 IVR?
Yeah, I think wheat's a good play here, actually. Technically, it looks good breaking above these EMAs. The trend overall, it's been supported by the 21-day EMA, bouncing off of it today. You got higher input costs for farmers, higher diesel costs. A lot of their equipment runs off that. You got higher fertilizer costs. So you're looking at potentially lower yields through this growing season. I think this is, where you could see wheat and corn potentially outperform, because the input costs for those, you need to use more nitrogen compared to soybeans, where, you're not using as much nitrogen. So next week we get the USDA's prospective planting report. This is a report that comes out once a year, and it pretty much tells you what farmers are planning on planting, the acreage. So this is a really important report that we get before next month's WASDE, which is, I think, released on the 11th, 12th, or 13th, somewhere right around there. So the next couple weeks after this week are going to be quite, the grain markets are going to be getting a lot of information. And this comes amid, farmers got hit with the higher fertilizer costs right as they were ordering all their supply for this year, kind of at the tail end of that. So we're going to see our farmers in the U.S. planning on planting less corn and more soybeans due to these fertilizer costs. If so, that's an environment where potentially corn prices, because of lower acres, because of higher fertilizer costs, are going to push prices up. And because more farmers are planting soybeans, that's potentially going to keep soybean prices maybe falling or at least not rising as much as corn.
I already got filled. 650, 680 long call spread here in the market. It would effectively be looking for the market to return back to the highs we were at earlier this month. It's a nice little setup. technically speaking. It's exactly what you'd want to see if you're a trend follower, finding an opportunity to buy a dip within the confines of the broader trend. And so to that point, Thomas, we want to look for the next things, the next shoes to drop here. The Strait of Hormuz is still seeing very minimal traffic. Yeah. That's it. That's the story, right? The uptrend that we have here in recent months, and we could just pull this back, that's still very much in play. Until that changes, okay? Until that trend changes, we are only dip buyers in assets that look like this. And so we're going to find a reason. We've been looking for a place to get in to some of these grains, to some of the soft ag. Today we're seeing maybe that come together. Corn, likewise. You have the same bullish engulfing bar, key reversal type of situation. It's not perfect, not the same cadence. But again, lower than yesterday, above yesterday's high as well. We still see this envelope, the 1 month, 50-day envelope. We're finding support above there. And not for nothing, if we were to take a 12-hour time frame, Thomas, this feels a lot like a triangle that's been forming up here in our market. Okay, so a triangle, bottom left to top right, these are usually continuation patterns. You're seeing it across the grains right now. Corn, wheat, the beans here too. I'm going to go back to the daily for the soybeans. But where are you finding support? 50-day, back above the 1 week, back above the 1 month. We shouldn't dismiss this. Oil prices have come in, and yet you're seeing the second order and third order effects continue to firm up. So stocks can take the short-term rebound. I don't know if it changes the thing here. How many weeks is it going to take to get the fertilizer that's been closed off for the past month now to these regions around the world as we go deeper into crop sowing season? The clock's ticking. Yeah, I almost feel more comfortable playing these on the long side than I do oil right now.
Yeah, I think it's getting long wheat, getting long corn. I really like here. I'm looking at entering a corn position myself, and I really like that wheat position. I might put that on too. And it's almost always a second order effect of when you get these big energy disruptions or wars. You know, you get higher soft ag prices because there is disruptions in the supply chains. So I think it's a smart move to do here to get long exposure into these markets.
And you can see that the fertilizer companies today are having another strong session. CF Industrial's up 1%. Potash, Intrepid Potash is up 5.8% here. Corn with a 79 IVR expressing the bullish view may be better suited to something like a short put spread anchored to, we'll call it 450 or so, diversifying the assumption, so to speak. I mean, directionally bullish, but different ways of expressing this view. Even so, 3-to-1, 4-to-1-ish at a near 70% probability of profit, Thomas. If we just thinking about trailing it below the 50-day moving average as we build into a position. These are the ways that we should be thinking about the market now, not just oil, but let's see if we can. Oh no, we just passed it. Just missed the window. We'll get it on the other side.
115.
At least we got wheat in, Thomas. So the trade's been. Yeah, I got the wheat in. Why would I do this? For example, and I know questions coming. A far out of the money call spread here. It's offering cheap convexity in my view. It's defined risk. It's defined payoff. It's a 33 IVR compared to corn, which is an 80 IVR. A little bit more capital efficient. We are running out of time though, and we do have more ground to cover, which is the FX portion of the show. And the US dollar not buying this move, because you could see here that the euro is weaker on the day and the Canadian dollar is still weakening on the day, and your Aussie is still weakening on the day. And, you know, even the Japanese yen is still weakening on the day. These signs of optimism that you're seeing in other corners of the market not being reflected in the most liquid, deepest corner of the market in FX. So dollar index get gapped open lower, now trading a little bit higher. It's not ready to give up its uptrend so far. One of the problems I'm having with gold and silver, Thomas. What do you make of this chart, though? It's been a very rocky week or two for the US dollar, even though broadly speaking, it's had a very strong month of March.
I had a euro short that I took off the other day. I'm not really playing currency too much right here. If this keeps going on, I think we get a little bit more dollar upside, higher yields. I think that makes sense. But yeah, I'm just sticking out for right now on the currencies.
I'm looking for an opportunity maybe in the British pound, which has proven energy sensitive in the past. Same thing for the euro. Italy just cut its growth forecast to just 0.5% for this year. Italy is Europe's third largest economy. The euro may have other problems to deal with regardless of what's going on, even if this war ends tomorrow. So again, liquidity crisis part of this episode wraps up. We go to the second order and the third order effects. Pay attention to what's up on the tape today that would still benefit from a supply chain crisis, even if oil prices are lower. Calendar tomorrow. Do you like Fed speakers, Thomas? I know you do. I know Ilya does. Tomorrow, Ilya is going to be very happy because we have several Fed speakers coming down the pipeline, 4 of them, plus initial jobless claims. We'll be back later today, though. Last call starts at 3:30 Eastern, 2:30 Central. I'll be on there with Nick Batista and then right with Ilya on overtime thereafter. So good luck trading after a brief break, Thomas. Folks can tune back in because Dr. Jim Schultz is here with From Theory to Practice.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kaizen, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up
and do things our way. So if you wanna move, get out of our way. Totally bussin'. You understand I gotta play.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it's only because of you guys that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live network, then you should bounce on over to YouTube because you can join the conversation and join the discussion in real time and communicate with your brethren who are also watching the show. Man, you can celebrate with your fellow Bulls. You can commiserate with your fellow Bears, but I can assure you it will be a good time had by most. And of course, you can pop in the chat and you can ask me whatever questions that you might have for me, and I try to get to as many as I can right around the second half of the show. So Josh, bring us into the market. Is it still there? Still looking strong. S&P is up 46. Man, this market, this is not, is the VIX 25 or is it 15? Like, is the VIX 26 or is it 6? I mean, this thing, the morning was okay, but the last 3 hours, I mean, the S&Ps have been pinned at plus 46 for about 150 minutes straight now. The markets are not moving. The metals are not moving. I'm not even sure that oil is moving. Of course, Dell's up another 17% or whatever, but nothing else is moving. S&P is up 45. You got the risk-free instrument, also known as the NASDAQ futures, extremely high risk product, up 197. You got the boomers up 360. You got the Russell 2000 futures index up 29 on the day. You got bonds are up. You got notes are up. You got oil's down a couple bucks. That's good for the old inverted triangle. We'll talk about that here in a few minutes. You got UB40 is up. Man, look at the shifties up 150. Went to bed last night. Gold was up like 170, 180. And I mean, it was printing, man. Like that thing was on the rise. I thought, man, we're going to wake up. Gold's going to be up 400. Gold's going to be up 440. Went to bed, gold up 180. Woke up, gold up 170. I'm like, all right, uninstalling that long? Man, I did not see that one coming. But gold up 150 today. And then the Hunt brothers out there doing pretty well for themselves as well, with silver up almost $3 on the day, up to 72.45.5. And so volatility, obviously on a daily today, is going to be getting hit pretty hard. Volatility futures down 56 cents, and spot volatility down $1.74, down to 25.21. But again, this thing is moving like molasses, man. This thing is not moving at all. It feels like it's kind of got that 2017 feel to it. Like, do you guys remember trading 2017? I know I bring this up on the show fairly regularly, but let's do it again today. I mean, it's our show. We can do whatever we want. Let's go to the VIX. VIX, and I see you guys in the chat. You guys are putting in some work, man. I see you guys. Look at Chuck Bono in the house. Man, Sam L's here. Point B is in the house, and so many others. I'm going to get to you guys in a minute, but you guys are doing some work because I want to hear your thoughts. Josh wants to hear your thoughts, but you know who really is dying to know your thoughts? All the robots, man. The algo is dying to know what is going on inside of your human brain so it can take those thoughts and transplant it into its own robotic brain. So hop in the chat and do it for the love of the algo. But if we go to the VIX here, if I go into a chart of the VIX, let's do like let's do like a monthly chart because we can't even do daily. It won't even work. We'll have to do a monthly deal. Let's go back 10 years or 20 years. It doesn't matter. Whatever. So you go back to 2017. I know we've looked at this a million times, but it's so fun. Like, it's just so fun. And it's only going to be 8-9 minutes of your life you'll never get back. Look at all those. These are monthly bars, guys. This is not Errol Coleman trading. We're not looking at the 1 minute charts. We're not looking at the 2 minute charts. We're not measuring, depth of market and volume profiles and such. We're just doing caveman, archaic monthly charts and just looking at these guys. The VIX got down to 9. I think it got down to 8 at one point, actually. Was it 8 something? Hold on. Yeah, look at that. Hold on. Look at that. Guys, let me get my mouse. Can I get my mouse to rest on that bar? Look at that. Look at that. Look at the screen. If you're listening, if you're an audio-only viewer or listener today, man, I appreciate you. I appreciate you so much. You are missing out because on the screen right now, this is not my opinion. This is not conjecture. This is not a Dr. J off the reservation story that doesn't mean anything about anything. Look at the screen. The VIX hit a low of 856 in November of 2017. I remember I was wrapping up my first full year at the Tasty Studios. It was very exciting. It was awesome to be there. They're on 19 North Sangamon Street, and it was incredible. Loved it. Really, really special. I mean, I love it now, of course, but that was a really special time having just gotten started there, and it was so new and exciting and whatever. But I remember trading that market. It was very, very, very hard. I mean, you would have the whole day, S&Ps would move 6 points. And if they broke out to 10 points, you're like, this is it. This is what I've been waiting for. And then it would just collapse right back down to a 6 point range for the next day. And so it was brutal. this market kind of feels like that. I mean, maybe it's a little bit different because EMI S&Ps, they are up, still up 46, of course. I mean, why would they be anything different? But yeah, crazy stuff from going back to 2017 to the present day. And man, if you traded 2017, let me know. I want to know. Let me know in the chat. Algo's dying to know. Were you guys actively trading in 2017? Do you remember those markets? Because it was pretty crazy. And you know what's funny too? I remember. It's so funny. So if you look at the magenta oval there, right? So it's 2017. The VIX is 8 or whatever. The markets are moving. We're all crying. We're all crying at the studio. We're like, oh my gosh, this is brutal. Like somebody like, why did I even come in today? Why am I doing this, that, the other thing, whatever. Okay, fine. So 2018 starts right there. I remember this too. Early 2018. Look at that spike. Now the VIX shoots up to 50. Now we're all still crying. So now we're still crying. There's still equally as many tears, but now we're crying because we got too big, and we're crying because we couldn't handle the volatility expansion. We're crying because we got too much of a good thing too quickly. And so it's just funny that it always ends in tears. Like it doesn't really matter what you do; it's going to end with some tears. And so anyway. I digress, but that is a little VIX commentary for it. We look at that chart. I would say we do it once or twice a month, at least. And so, sorry. So there you go. All right, let's take a look at the portfolio though, because I believe we have a couple of victory laps to take here on the program. If you look at the P&L days, I mean, we got a little something brewing from a P&L day standpoint. So the only thing that has given us problems is, of course, Dell. Dell is now up another 3.5% for the 19th consecutive day. I mean, if you look at a chart of Dell, let me bring this guy up, and I'm gonna look at a month. Look at that monthly chart, man. That is the boss candle monthly chart. Look at that. That is the final boss. That is it. That is Bowser in the final castle. You made it to the end, and boom, it's a Dell monthly candle. And so that's some crazy stuff, man. But if I look at a daily candle. Let's just go back to some dailies here. We look at a daily deal. I mean, that's some serious business, man. This is the old gap and go strategy, not to be confused with the gap and crap strategy. The old gap and go, I mean, there it is. You gap it up. I mean, where's my gap fill? Where are my gap fill bros at? Guys, help me out. Guys, I need you. You guys have reliably assured me that the market fills all gaps. You guys have reliably assured me that this gap is going to be filled. Now, I can't handle it being filled here. We need it filled right here. And so bring it back home to roost, straight down, just a few cells. Now we can kind of make this guy happen. But yeah, it's not looking too good for us from a Dell standpoint. So what are we going to do? We're not going to do anything. Well, we've already made an adjustment on the trade. We've already, controlled our directional bias at least a wee little bit. And so, thankfully we kind of rolled off the put side. We brought in some more credit, and we do have some credits to work with in terms of, the overall break-even point and things of that nature. But I think right now, we're under 3x of credit received. I mean, you can see right here that we are at, 1066. Is our total credits collected. So that means my break-even point to the upside is 160. It's a little over 160, but it's about 160. So my break-even point to the upside is 160. You've got the stock at 183. We got a little work to do, obviously. We need a little downside movement, a little motion to the downside in the stock. Well, we're still only at just under 3x of credit received. I'm going to sit tight. I mean, usually 2x, 3x is where I start to begin to consider maybe cutting the cord on the position. And I cut cords earlier than that too. But generally speaking, if something runs really quickly, like really fast, that's where I'm just like, all right, I don't think I want to overreact here. I don't think I want to chase this guy. I don't think I really need to do anything. Let me check my position sizing. Let me make sure I'm small enough. And let me make sure I'm okay if this thing continues to run against me. Obviously, that's not what I want. That's not what any of us want. But you have to think through these possibilities so that we are aware and we are readied for the potential of the stock continuing to run away on that one-way track, I should say, where it's just kind of moving against us. And so we sit tight, we do nothing. We don't feel great about it. I'm not super excited about it, but thankfully, we do have a few other positions that have worked out that can help to kind of quell or even quench or even quasi something. A little cute alliteration for you guys there on the show. Only here on the Tasty Network, by the way. We'll sit tight with Dell in a quasi fashion or even a regular fashion. But let's take a look at AMD. Look at this, man. It is a thing of beauty. It is a thing of beauty, right? Screenshot this, turn it into an NFT. Are those still a thing? Are we still doing NFTs? Like, I forgot. Are we still slanging pet rocks or NFTs of, what was it? There was the CryptoPunk guy, CryptoPunk or crypto something that sold for, man, I don't know, it was like Crypto Crusher 123, or I don't know, maybe that's the subreddit that I keep reading. I'm not sure. But the NFTs back in the day, I mean, they were the thing, man. Like you could make an NFT by basically just taking like a screenshot of my AMD position, for example, and you could sell that thing for, I don't know, 10, 20, 30 grand. And so somebody screenshot this and put it on Etsy, I guess, right? Like, what's the most logical place for you to put this? To sell your creative wares like my AMD position. And I give you full credit. I mean, we'll split the profits 50-50, but I give you full credit to post this guy on Etsy and see if you can get somebody to buy it. It's a thing of beauty. The do nothing strategy, the DNS, as we like to call it now. Thank you guys again for bringing that to my doorstep. It wins again, man. It wins again. And what's funny with AMD, if I could continue along this victory lap, let's bring up a chart here. I mean, it's all fun and games right now. It's all just, it's all just gravy and, kind of, kumbaya right now. But look at what we had to endure to get to this point, right? We saw the gap and go with Dell. Here's the gap and crap. Like, there it is. Like, we had to stew in the filth all the way down here, and it was not fun. It wasn't fun. I didn't really enjoy it. I didn't prefer it. It's a very similar situation to what we're in with Dell right now. Now, again, this is a little bit different with Dell because Dell, we're in the money on the short call side. When you're in the money on the short put side, I mean, I say this, I think every single show now, one of the huge advantages you have is you can just inventory the position, play it to the upside, kind of tapping into the positive risk of the premium or of the market, I should say. And just saying, hey, I'm just going to inventory this for, not necessarily as long as it takes, but I'm okay for now. We'll hold it and we'll just kind of see what happens. When you're in an in the money short call like we are with Dell, it's a very different scenario because if this stock doubles or triples, then that's going to be incredibly, incredibly painful. And so we had a similar situation with Oracle back in the day. Some of the OGs might remember Oracle from, a year ago or so. And so very similar situation right now with Dell. Right now, I'm not going to do anything. I'm going to sit tight, but I'm also not going to bring this guy to the grave with me. Like, I'm not necessarily going to put this guy in the will for Penelope and then Eli and then, of course, Amelia May to manage to at least a scratch. I mean, I was writing up the papers for AMD, but thankfully we can all throw them in the trash today because AMD came all the way back. In fact, we actually found a way to muster up an incredible profit on this AMD position. I still don't really know how it happened, but if you take a look at the chains here and bring up my my Allison chains, some might call them the order chains, but that's not correct. The Allison chains, we have collected a total of $12.28 on the position. It is currently marking for, because AMD is up $15 today, it is currently marking for $6.82. That's like 50% of the total credits collected, which is way more than I typically go for on a rolled position. I'm typically 50% of original credit collected, not typically looking to kind of overstay my welcome and go for more than that, because when you roll, by definition, it's almost always a defensive posture that you're taking. This is almost always kind of a defensive maneuver. This is not the time to start going shotgun 5 wide, Rodney Peete, the old school Detroit Lions from the 90s. You got Herman Moore. You got Brett Perriman. You got, Johnny Morton was a little bit later, but you got all those guys. You got Barry in the backfield. Like, this is not the time for that. I mean, yeah, you're going to go 4-12, but this is still not the time for that. Like, the time for that is when things are kind of working for you. You want to push the ball down the field. You don't really want to do that when you're rolling and such. And so with our AMD position here, though, because, we sat on the trade and we got a huge up move today, and I try to do all of my live trading on the show. It wasn't even something that was on my radar until I started preparing for the show a few hours ago. So I was like, all right, well, if that move sticks, then this is going to end up being a really nice trade for us, obviously. And here we are. So as we round third base on this victory lap, let's go ahead and let's bring it on home. So if I go to AMD, I go to close the trade. It looks like we're going to have to pay about $6.95, maybe $6.90 for it. And we can release some capital. And there you go. Got filled on AMD. It's a thing of beauty. A thing of beauty. Again, you have my permission to post it on Etsy as an NFT, and we'll split the profits 80-20. 80% me, 20% you. And so that's AMD. So now, what else is going on? Is anything else going on? There's really nothing else that requires. MCL, we're going to roll this guy tomorrow. So you can see we're at about 22 days to go. And by about, I mean exactly 22 days to go on the on the MCL position. So we'll be at 21 tomorrow. We'll do this tomorrow. We got plenty of other things to do today. And so for MCL, it's down a little bit today. That's good. Obviously helping out the old P&L cause, trying to ward off and thwart off the P&L open bros to the best of our ability. But, again, there's only so much you can do because they're a pretty rowdy and numerous bunch, the P&L open bros. And so MCL, we sit tight and we do nothing. And so MCL, so there you go. So all right, we'll do that guy tomorrow. MES, MNQ, it's fine. Disney's down a little bit today. That's good. We'll take a look at this guy too, by the end of the week. I'm going to hold it and try to go for a little bit. Well, hold on a second. Am I going to hold it? No, I don't think I am actually, because again, I remember from yesterday, man, I had blueberries last night and I had them again today. And so the memory is on point. We are looking to make about 288 on this trade, 278 or 288. We're at 276 right now. I think it's time, guys. I think the time has come for this strategy to meet its maker. I think we're just going to go ahead and retire the Disney put vertical spread. This was an Amelia May special, and so that's some good stuff. I mean, $2.76. Man, that's like a week of bonefish. We might even be able to stretch that guy into the second week of consecutive nights at Bonefish. And so that is some really, really good stuff. Let's go ahead and close this guy down. And then that can be that. So 702 on the credit for the Disney put vertical spread. Let's see what happens on this guy. No takers at 702. Oh, they're going to do this to me? I'm not chasing this thing. I'm not chasing this thing forever. I'll do 695, but I'm not chasing this thing till the cows come home. I'm just not going to do it. Okay, fine. Okay, so we're going to win. You watch. They're trying to get us. You guys see what's happening. You guys see what's happening. They keep ratcheting down the theoretical mid price. Right? Like it was 702. And then it's like, nah, just kidding. It's 695. So we went in at 695 or 693. Just kidding. Now it's 690. No, nobody's kidding. We're taking off the order. Right? I'm going to go for even more now. Thank you very much. We're going to get a week and a half out of Bonefish. And that's going to be that. So, all right. So there's our Disney position. We'll probably lose all of our profits in the next couple of days, but hey, once again, the content's not going to make itself. And so DIS, we did that guy. And then, IWM, GDX looking pretty good. That's the ratio spread that we put on just yesterday. So that's pretty solid. Let's go into, I want to do one new trade today. So let's do, and then I want to see where you guys are at, man. Look at you guys. Man, Ron Vashar is here. Rodrigo is here. Man, Theta Trader is here. Man, look at you. Griffin Jones is here. Man, this is crazy stuff, man. The All-Stars came out to the show today. Ramsey's here. Man, Superstar is here. Man, look at Viggy Zags in the house, man. I see you guys getting into some NFT discussions. That's some fun stuff. Let's go to SLV. You guys remember SLV? I kind of got a hankering. Just a little bitty hankering to light a nice little stack of cash on fire. So I thought the perfect stock for that is, of course, going to be SLV. So SLV is up big today. The metals are rallying, silver's up, gold is up, everything is looking really, really good. Let's go to SLV. The IV rank is still 55. It's not the 120 that it was a couple of months ago, or the 109 that it was even just 6 weeks ago, but it's a little something. I mean, this is obviously something that's kind of nice. And we are getting into April. April is historically, kind of earnings season for the individual names. It's going to be a bit more challenging to sell premium in individual stocks right now. In fact, here I'll even show you. We'll come back to SLV in a second. But if I look at, if I sort by IV rank for the individual names, you're going to see, you see a bunch of indexes show up. Like these are all indexes or futures, right? And then you've got like the individual names that show up. Take a look. You got IBM, right? April 22nd. You got Cisco, right? Sipping on a little scissor, May 13th. And then you've got GS, Goldman Sachs, from April 13th, and so on and so forth. If we went down the list, it would be kind of the same song and dance for all the stocks. April and then into early May, those are going to be your heavy hitters for earnings. So for us to be able to avoid that by doing SLV right now, I think that's good. We'll do plenty of earnings trades when the time comes, but I don't think that we're ripe for earnings just yet. So let's go to SLV. If I go to a May, let's go to the May cycle, May 15th. I'm kind of thinking, let's not overthink this, man. I don't want to underthink it either. So what if we just do a strangle at the expected move? What if we just do an expected move strangle, classic Betty Crocker recipe? This is a very, very straightforward strategy. We do this all the time. You're selling both sides of the market. You got the premium below, you got the premium above, and what could possibly go wrong, right? What could possibly go wrong on this strategy? I can think of a number of things, but hopefully it'll be fairly straightforward from start to finish. So let's go and let's do like a 53 put. And then we go up to the call side. And maybe we do, I mean, obviously there's a ton of call skew. I mean, you can see when you get to the edge of the expected move, I mean, just look at the premiums, right? They're significantly greater than what we got on the put side. And so that is an evidence of call skew. That's a very common place in the metals and even in the commodity space. So, metals, energy, I can't say that lean hogs has call skew, but I would imagine it probably does have call skew. Some frozen orange juice probably has a little bit of call skew, some sugar, some cocoa. I would imagine that they all have call skew. I don't even think we can trade sugar these days. I'm sure you can trade it somewhere. Some block cheese. I know you can't trade block cheese. I got a friend of mine. The reason why I brought up block cheese. So I got a friend. I've mentioned this guy before, not often, but I've mentioned him before in the past. I got a buddy of mine here in St. Pete. He works for Sargento, the cheese company. And so he's one of their analysts. And it's so fascinating to talk to him because, and I'm not making this up, he actually monitors cheese future prices. He's not trading them. He's not slanging them. He's not in there like, let me scalp this block cheese for, 8 or 10 cents on the bushel or the bushel. It could be a box. It could be a crate. I have no idea how they're shipping and delivering and transporting cheese, but they're monitoring cheese all the time because it factors into their pricing strategy. And that's kind of one of the main things that he does as Sargento. And I'm like, man, that is totally fascinating to me because we're in the futures market. I'm in the futures market. You're in the futures market, whatever. And we're doing it for actually like trading reasons and whatnot. My man is in there watching block cheese day to day to help to kind of influence his marketing strategy or pricing strategy and product strategy. It's pretty fascinating stuff. But anyway, block cheese may have some call skew. I don't know. I may ask my boy Clinton. He may actually know the answer to that. But for us here, we can see the call skew on the chain. I'm thinking let's sell. We'll do like a 53.80 maybe. We'll be a little bit bearish on a little silver, but we'll pick up $3.82 for it. So that's not too bad. I mean, it's been worse in the past. Of course, when it comes to an undefined risk strategy, you can see the buying power is only $650. And so that's pretty nice from a buying power standpoint, from a capital allocation standpoint. That is obviously very, very favorable. So let's go ahead and let's do our short strangle in SLV for 383. And that looks pretty good. Let's do market's a little weaker now. I mean, it's down about 5 or 6 points, which is a huge move on a day like today. Let's try like 380. I think we'll probably get filled. All right, so we got filled. So there's your SLV short strangle for 380, and there you go. So, all right, let's go ahead now. Man, we're right about the halfway mark of the show. It's almost like I've done this before. Man, I'm gonna go to you guys. Let me see where you guys are at. So Josh hand-delivered a surprise and delight to my doorstep. They're in my team's chat. And so thank you there, Josh. And then I'll choose a surprise and delight myself, and we'll kind of go from there and see where the wind blows us. Rex Kramer says, how do you feel about a put spread in in Microsoft? May 355, May 355, 345. Let's see here. Let's go to MSFT. I mean, the IV rank is 32, so that's not bad. The earnings are not until April 29th, so that's not bad. So I don't know there, Rex. It's an interesting strategy, but I'm thinking, I don't want to do May. I don't want to do May because the earnings on April 29th is going to be a real stick in the mud. It's going to be a stick in the mud on April 29th, but it's even going to be a bit of a stick in the mud before that. Excuse me. It's even going to be a bit of a stick in the mud as you get a couple of weeks heading into earnings. So I actually think let's try to beat the system, Rex. Let's try to see if we can cheat death on this strategy. Let's go to the 23-day cycle. Let's try, you said 355, 345. I may need to bring it in a little bit because you may be thinking May, and that would make sense, of course. But let me just see, the 355, 345. Yeah, only $1.85. That's not nearly enough. What if I did a 365, 355? 282. That's not really enough either. What if I do a 370, 360? Is that going to be enough? 347. Man, that is like barely enough. 10 cent. Well, hold on. 10 cents wide. Let me try the weekly. Is that 30-day weekly going to work? I don't love that either, but yeah, those markets are a lot wider. Yeah, I'm going to do what I originally thought I might do. I'm going to go to the April cycle. But instead of doing the 370, 360, I'm going to do a 370, 365 because that's just going to control my risk a little bit more effectively. Now I'm risking $1.50 to make $1. It's actually risking $3 to make $2, but that's kind of the proportions that I'm working with. And so I like this strategy. It's a version of what you proposed. I don't want to do May because I don't want to run into the earnings date that I think is going to prove to be a bit of an uphill battle for this put spread. But other than that, it's a solid strategy. So I like it. The IV rank is there. And so let's go ahead and see if we can push it out and get filled here. All right, so no takers on this guy. I still have the Disney trade on. I meant to cancel that. I still have it on, and they still haven't given it to me. Look at that. All right, so we got $1.90 on that. Let me cancel this Disney trade and just kind of stick it to him. And by that I mean I'll be sticking it to myself when it's over. But Microsoft. So we're in Microsoft and we canceled Disney. All right, so there you go. So let's go ahead. Let me see if I can surprise and delight somebody else. Man, I see you guys in the house. I see eMedia's here. Man, Robert Darcy is here. Look at Base 8 in the house, man. Good stuff. Let's see here. Let me see if I can find somebody in the middle. I see there's the Rex Kramer. I appreciate you there, Rex Kramer. Let's see if I can find something. Let me try to find a Oh, here's a great question. And this question has nothing to do with trade. Oh, look, the market's taking a bit of a dive. Okay, maybe we got a little bit of action. Maybe we got a little something going on here. So here's a great question. It has nothing to do with finance, but it has a lot to do with my other love in life, which is fitness and bodybuilding and all those things. So Superstar says, Dr. Jim, there is a raging debate on social media on peptides. Are you for or against them? Obviously, I am all in on steroids. A little vitamin S for you there, Superstar. Good stuff, my man. So as a competitive natural bodybuilder, I take it very seriously, and I have to adhere to certain guidelines. And so most of the peptides are actually on the banned substance list, and so I can't take any of them, even if I wanted to. 3 or 4 years ago, so BPC 157 and TB 500 are two of the more popular healing peptides and peptide combinations that are out there. So 3 or 4 years ago, I really wanted to try these, but they were on the banned substance list. But sometimes you can file for an exemption at some of the organizations. So I actually did that. I actually filed for exemptions, and I got accepted at a couple of organizations that, yeah, you can do a cycle of these peptides. So I did try BPC 157 and TB 500. It was maybe 4 years ago. I would say it wasn't as amazing as I was hoping it would be, but it wasn't worth nothing either. It wasn't a complete placebo effect. And so I am generally, I think that they can be helpful for some people. I do kind of like the fact that I don't take peptides. I've never taken steroids. And so I am lifetime natty, maybe half natty, since I did do, one cycle of peptides. And so that's where I stand on that, mostly out of necessity, because I do want to keep competing as I keep getting older and I can beat up on all the old guys out there, which will be super fun. But yeah, those are my thoughts on peptides. But I know they're really popular, and a lot of people love them. And so, man, let's go back to the beginning. Although, see, iPod Touch says, Dr. Jim, can you remind us how you became the president of the Vanilla Ice fan club back in the 90s? I'm not sure what you're referring to there, but no, definitely. I mean, obviously, if you're a kid of the 90s, there was no better moment than catching MTV. It was either at 4 o'clock or 4:30, catching MTV for like TRL, I think it was called TRL or TRL Live, or with Carson Daly. And they would do like the main videos, and Ice Ice Baby was in the top slot for like weeks, like months. And that was like the song. Like, Josh knows what I'm saying. Anybody that's around my age or around Josh's age, Josh knows. And so Josh says I know way too much about this. He knows more than I do. He's just not willing to share it publicly. It was an amazing moment in your life as an 8-year-old, 9-year-old, 10-year-old, whatever. It was like, man, this is unbelievable. I caught the moment. Ice Ice Baby. I get to see the video again for the 1900th time this month, and it's amazing. And so anyway, I digress. Let's go back to the beginning, man. Look at you guys, man. Wow, look at you guys. Seriously, man, this is some serious business. Man, I appreciate you guys so much. Let's go all the way back to the beginning. Where am I at on the beginning? Man, you guys are really doing some work. This is really wild stuff. I appreciate you guys so much. So if I go back to the very beginning, actually see PopZap dropped one in before I dropped my comment in that kind of demarcates my show from Chris's show, just so I know kind of where the comments begin and what to go back to. But PopZap, what's going on, my friend? PopZap says, Dr. Jim, XOP December Butterfly I buy a 170, 150, 145 for $5. So it's very skewed to make $15 on a retracement this year. Yeah, I mean, let's take a look at this. I don't do too many skewed butterflies like that. But, okay, you've got 181. Let's see here. Did you say what cycle you're in? December. Yeah, interesting. I don't do too many skewed butterflies, and I definitely don't do too many long-term butterflies like this. And so I'm going to bring it up here, and then I'll have a few comments. So a 170, 150, right, you said? And then a 145? 1 by 2 by 1, I'm guessing? Let me bring up a curve view on this. We're doing the curve view? Man, look at this. And y'all say I don't use it, man. Look at that. It's right there. Look at that. All right, so obviously, you know, the way that this trade sets up, you make the most money when you pin the short strike. That's very common for butterfly. You have no risk to the downside. All your risk is to the upside. So if it stays above, 165, which is where it is right now, you're going to lose the premium that you pay for it. So in this case, it looks like it's a few $100, $500. So it's a risk 1 to make 3 type of scenario, which that's typically how butterfly is set up. Okay, couple of things. So, I mean, I like to trade from a directional standpoint. As long as you get downward movement and it sticks, then you're going to be in a good spot. Here's what I don't really love about the trade. The thing I don't really mind the directional component. That's fine. What I don't really like is the fact that it's in December. So butterflies, I mean, it's very hard to get near maximum profit on a butterfly because you have to nail the short strike near expiration. There's a long time between now and December, obviously. Right. And so, you're putting yourself in a situation. Now, the way that this is skewed, it's nice because if you miss at all to the downside, it's going to be fine. Like it's going to be great. But if you miss to the upside, it's obviously going to be not so great. So I don't love the longer term nature of the butterflies, but that could just be my not really using butterflies in this fashion. If I really thought through the gimmies and the gotchas and kind of looked inside the nooks and the crannies for kind of how this guy sets up, and especially the way that you've skewed it, this could be a really, really good long-term strategy. It doesn't jive with me the way I typically look at butterflies, but I don't know their Pops app. This is really interesting, and you may have kind of opened my eyes to considering something that maybe I'm kind of missing an opportunity to use butterflies in a very different way from how I typically use them. But, I like the risk 1 to make 3. It's a very nice way to diversify exposure away from our more traditional kind of risk 3 to make 1 or risk, 2 to make, $1.25 or what have you. So hopefully that helps their Pops app. Orgdenu's in the house. What's going on there, Orgdenu? Hello, Doc. When are you taking the show on the road or overseas? Italy would be nice, man. I don't know. I do not know. That is all in limbo. That is all up in the air at this point. But I've been to Italy just one time in my life. It was in 2003. Went to Florence, went to Rome. Did I make it over to Venice? I think we wanted to go. I was studying abroad in Nice, France for a semester. I think we wanted to go, and I don't think I went. I think some of my friends went, and I didn't join them because I think I was running out of money or whatever. And so, which is kind of important, of course. But I made it to Rome and I made it to Florence, and it was amazing. Like I really, really thoroughly enjoyed the country. And so I don't know the Orgdenu. We may have to make a return visit there sometime soon. But thank you there, my friend, very, very much. Daniel Perkins in the house. Dr. Jim, any chance we can get gold up another 200 or so? Give Pete a call and see what he can do. Yeah, we got to give somebody a call. Because, gold, it's really fading now. Gold only up 128. What's silver doing? Silver is still probably hanging in there. Yeah, silver down to 72. And so, it's still a strong day. Don't get me wrong. You got silver up 3.5%. You got gold up, over 2.5%, 3% or whatever. And so still a decent day by any calculation. But man, what could have been? Look at silver overnight. Silver was over 74, I think, right? Yeah. That's a daily chart. Yeah. Silver was up to almost 75. Yeah. 74.80 on silver. And then gold was all the way up to 46.34. And so both gold and silver were looking pretty good last night. And then they have since faded coming into today. And so Ramsey, Doc should have a green portfolio today. Good day to party. That's right, my friend. Right. Banana natties for everyone. They're on the house. And so Wolf in the house. Doc, I'm a rule follower. But in a volatile market, does it make sense to adjust return expectations? If the strategy normally calls for 50% of max profit, do we maybe move, to 35%, or am I overthinking? Okay. I think it depends on the strategy. And so if you're talking about like short premium, if you're talking about like a traditional short premium, you're selling puts, you're selling strangles, things like that. I think you stick with your profit targets. I don't know that you necessarily take them off as early. I think you stick with your profit targets if the position sizing is in check and all of those things. I think you could make a case that maybe I manage more early, manage more quickly, I should say, and I deploy more quickly and get capital working in new positions. I think that could potentially work, but you have to be mindful that, when you take your profit targets down, you are going to need higher probabilities on the back end to make that work, right? Which again, we're set up for that. We're equipped for that. Like we can be ready for that. It's not necessarily the problem, but you just have to understand. You just have to be aware that that is the road that you are on. Like you are going to need higher probabilities if your winners aren't at 50%, if they're now routinely at 35%, like that's just a very, very different makeup from kind of, what you have with 50%. If you're scalping or doing things that are more directional, that's when I do think maybe going for, well, you could argue it both ways. Yeah, I don't know. That one's a little bit trickier. That one you could argue both ways. Maybe I pare down my profit targets. Maybe I go for slightly more. I've done both myself. I've seen both done myself. I think you could go either way with that. When it comes to short premium, though, I think sticking with the profit targets probably makes more sense. But I've seen both done in both types of products, with premium and then with outright directional plays. And so I would maybe test and trial on your own. You can this is kind of one of those things where you can build a list of gimmies and gotchas for both. Like this is one of those things where I really don't think that there's an optimal answer. I actually think in trading, there's rarely an optimal answer. I think it's gimmies and gotchas. I think it's, okay, these are the pros, these are the cons, and this is what I want to go after, and this is what I'm willing to take on to get there, and let's go. Like, let's make it happen. Like you just have to understand what the gimmies and the gotchas are. And so I know that that's not really an answer. It's kind of a non-answer there, Wolf, but maybe still it gives you a little something. I hope that it does. Jared Kramer is in the house. What's going on there, Jared Kramer? For the algo, all split up into different comments. That's some good stuff, my friend. That is some good stuff. N1C is in the house. What's up there, N1C? I appreciate you, my friend. Superstar is here. I trust this rally as far as I can throw Dr. Jim, which I don't know, man. The ooey and gooiness as of late, you probably can't throw me too far. Like we are hunkering down in a given spot and we're going to be pretty tough to move off of that spot. And so that means the rally might fade. And as you have it, EMI S&P is only up 28.29. And so there you go. Daniel Perkins for the algo, my man. I appreciate you. Ramsey is here. Doc, do nothing strategy has proven itself to be the best. Theta beats all. Yes. It is the default setting for a reason, right? The old DNS, it is right there in the default setting position for a reason. And very, very good to hear there, Ramsey. Point B is in the house. Welcome, Doc. Today, it feels like gotcha and gimmies are neutral today. They might be. Again, the market's picking up now. So now we've got a little bit of action. Like now we got a little bit of downside movement. But basically for, the last 2 to 3 hours, it's been very, very quiet on the home front. Steve Aguilera pouring one out for the algo. There you go, my man. N1C, the DNS. There it is. There it is. Daniel Perkins, I'm taking risk off. Admin is too unpredictable. I don't disagree. I don't disagree at all. But, this is one of those things where, I feel like as of the last maybe week or 9 days, the market reactions to the different things that have come out have been to be expected, let's say. So something would come out from, the Trump side or the Iran side, and then the market reaction the initial reaction would seem to make some sense. I think we are now due for some reactions that don't really make any sense. So I think potentially we are due for, something that appears to slow the war down, let's say, which I think we've already won this war like 7 times, but assuming it's still going on, which I'm pretty sure it is, if something were to come out to slow it down, I wouldn't be surprised if, the market actually dumps on that. If the market actually dives on that, or something comes out to kind of escalate some things, and the next thing you know, the market is rallying. And so I think that we're maybe to the stage where the market's going to begin to look through these things, and it's going to start to surprise some people. Those are just my own personal thoughts. But let's see. Sam L. Doc, I'm posting from the beach today. iPod Touch is not here. He's already retired on his island, as he should be, as he 100% should be. And so, Griffin Jones, a comment on theta to net lick. What is too high? Greater than 0.2%? No. So, the general range is 0.1% to 0.5%. And so 0.2% is right there in the middle of the road. And so, with the VIX higher right now, 25, 26, and maybe picking up now that the market has sold off a little bit. I mean, the VIX is, okay, it's back to up to almost 26. This is a situation where having more capital deployed makes sense. This is certainly a situation where, kind of having a little bit more capital working for you is going to be strategic from the standpoint of taking advantage of elevated volatility. And so this is probably not the time to be at 0.1%. That doesn't mean you have to be at 0.5% either, but somewhere between 0.2 and 0.3 for a lot of traders at these levels, it's probably going to make sense. And then if the VIX goes even higher, 28, 29, 30 again, you've got a little bit of capital left on the sidelines to maybe sell some premium then. And, that's how I would maybe begin to think about, your theta levels relative to your net lick, but no, 0.2% is definitely not too high. And so, let's see, point B, finally on the TT platform, got my first trade in. I'm waiting for my second through theory to practice show with Dr. J. What's going on there, my friend? I hope I gave you a couple of ideas to fade, of course. And thank you for being here very, very much. Let's see, Robert Darcy's here. ES sold 6. 66.54, short 30. 66.54, ooh, nice. Robert Darcy, if you sold some 66.54s, man, you got 20 points in your back pocket right now. So nice trade there, my friend. That is a very, very nice trade. Thanks for being here, Robert Darcy. I appreciate you. Ramsey's in the house. Griffin Jones is here. Slinging some CL. There you go. Joel James for the algo. Man, look at you. Point B. Bro, I got to say, Jim always shows up with that vibe. Give me that energy, man. I appreciate you. I appreciate you guys so much. It's, sponsored by Ghost, of course, which I'm still waiting for my sponsorship. Like, I've reached out. I mean, I've emailed, I've called, I've even stopped by the property. I've even gone to Ghost HQ. I'm not exactly sure where it is, but I feel like I should go. I feel like I need to be there and show up and kind of cold walk it. Like, forget about cold calling and cold emailing. We got to cold walk it, man. We just got to show up and be like, hey, have you seen From Theory to Practice? I know you probably don't miss an episode. Bring it on the show on a pretty regular basis. And so let's see what we can get done here. But yeah, Ghost, sour pink lemonade. That's the secret. And so, although Autumn doesn't let me get it anymore because we're reining in the budget pretty tight. And so no LMNTs, no Ghosts. I have to sneak them. I have to take cash out of the sock drawer and then go buy it on the black market. So there's no paper trail. There's no credit card transactions. There's no receipts. I'm like, listen, man, I'm going to give you $6. You give me 2 Ghosts and you never saw me. That's the deal that we're about to make right now. And so, but I haven't been able to do it. It's been a couple of weeks. And so Patrick is here. Oh my gosh, I can't believe I'm done with the show. Wow, that's crazy. I see you guys. Emmett Morrison is here. RML's here. Away from the numbers, and Chuck Bono is here. Man, look at you guys. Man, I see you guys. Man, Viggy is here. Man, I appreciate you guys, but I got to go and get you guys over to Tim Knight. Man, thank you guys so much for being a part of the show. I really, really appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Hello, everybody. Tim Knight here, and it is another wacky war day. Let's review a little bit because it's only Wednesday. It's not even over, and we've had quite a adventure over the past 54 hours or so. Here's the thing. We have had two spikes this week, two upward spikes. The monster spike, of course, was Monday, about 2.5 hours before the market opened. And that was the winding things down spike. We won, and we're just gonna wrap this up. And so that was an explosive move. And about almost 70% of that was erased at the low yesterday. Then we had another spike, a much smaller spike, but a spike nonetheless, yesterday just after the close. They timed these things just right. And that spike was based on, hey, we're going to get a 30-day ceasefire. What do you think about that? And so it spiked, although quite modestly, considering the magnitude of the news. But I suppose the veracity of that is understandably in doubt. And that spike has largely been undone too. Where we're at right this moment, if you think of the spike as like a continuum from like 0 at the bottom to 100 at the top, we're at about 55 right now. So, and I'm speaking of the big spike on Monday. So even though both of those declarations have been proven to be just false figments of someone's imagination, the majority, the slight majority of the benefit is still intact, which I find odd, because we're dealing with contradiction after contradiction after contradiction. It's hard to know who knows anything, who's telling the truth, etc. And I think today people just got exhausted from the whole exercise, and for a long time today the market was just kind of grinding around, going absolutely nowhere in particular. Grinding like Mishka is right now. So anyway, we are green today, although not massively so. Both the ES and the incur are up about 0.5%. And I'd say about half, maybe a little more than half of my short positions are down. The underlying stocks are down, and about the other half are up. It's better than this morning. We've definitely seen some more red pop up on the screen versus this morning. But it's kind of a weirdly fascinating market we're in right now, because we're all at the mercy of the next tweet. I refuse to call them truths. Tweet, just a shorthand for some little social media missive going out. So as always, I'm depending upon the charts to do the thinking for me, as opposed to trying to tease out what's good. It's impossible. No one can figure out, as I said, what's the truth and what's real and what's not real and what's just a figment of the decaying brain. You just don't know. As it stands now, there's a lot of positivity being uttered about ceasefires and the end of the military operation, etc. But the reality seems a little different, and the prospective reality seems very mysterious. Like, is this going to ramp up again big time this weekend once they kind of get their ducks in a row? So in any case, charts are our friend and help us have an objective framework to use to look for possibilities of appealing risk to reward ratios, and importantly, as I said yesterday and we'll demonstrate today, levels that we decide that our postulate, our thesis is invalid, and thus we dispatch with it. So let's jump in to the charts, and we start with the diamonds, and they're doing okay in as much as we've been in a downtrend for some weeks now. On the whole, we have been fighting back since Friday of last week. Friday was kind of the low. We had our big jump on Monday, a drop yesterday, and then another jump today. The highs today were higher than the highs on Monday, egged on by the aforementioned second smaller spike with the whole ceasefire business. EEM, the emerging markets, are still sort of grinding away down here. There's been two big gaps. The most substantial one is here. And for weeks, we've been trading beneath that. Not a lot to go on there. There's a lot of very, very interesting charts out there to trade. This isn't particularly one of them. I find the domestic markets to be a little more appealing right now. IWM, the small caps, are strong today. The RTY is up 1.11%, but keep an eye on that overhead supply. That rectangle has defined, I don't know if circumscribed is the right word, but that block of overhead activity, which represents a meaningful chunk of ownership at higher prices, whose owners would, to some degree, like to get out. And so that's going to slow down any buying. The small caps are higher today than they've been in a couple of weeks. And for a bear, the scary thing is that there hasn't been really any definitive news yet. In fact, when I saw just after the close the news about 30-day ceasefire, dummy that I am, I thought it was real, and so I assumed this is great. And I say again, it would be great. I would love to see some honest to goodness good news. If side A says yep, side B says yep. There's no lies, there's no trickiness. It's just like, this is 30 days ceasefire, pinky swear. Because at that point, we don't have to worry about any more good news showing up for a month at least. That'd be a nice exorcism of that uncertainty, but we don't have that. It's still like, we have a ceasefire. The other side's like, what? No, you don't. We've been negotiating. No, you haven't. And so all of us are over here just like, what? Kind of wondering what on earth is happening to us. Here's SMH. Semiconductors remain strong. They're up almost as much as small caps now. SMH is up just over 1%. And these lines have moved, so I'm just going to dispatch with them. Go away, people. The rectangle hasn't moved, though, so that's still our friend. And so we're about at the halfway part of this incomplete top, right around in the middle. And it's a pretty thin reed to hang anything on, but this line here is the only resistance I'm going to point out because that's the multi-week high so far. But we're still just kind of grinding it out here on SMH. XLP, which I'd mentioned a couple of weeks back as an appealing short idea, that continues to do okay. We're up a little bit right now, but we've got, as with so many other things, we've got just a whole series. Sometimes there's 3, 4, 5 gaps over the past month with some of these items. And I would also point out something I wanted to mention yesterday, but didn't. Bonds. TLT, we've got 3 gaps here, 1, 2, 3. The reason it's interesting that this is breaking down is bonds getting weaker like this is a really big deal because the United States has never been more in debt. I think it's $39 trillion now. And you've already heard that the country's expenditure on interest alone is bigger than the military. I assume it's still bigger. The military's been growing, but it's an enormous expense. And as those rates go up, that will get more expensive. So it's not a great trade or anything, I don't think. It's as you can see, it's just been a meat grinder for months and months, years actually. But it is interesting to me that this is slipping lower, like so, broadly speaking. XME, the mining ETF, also has a nice little gap down. I shorted this morning, very tight stop on this. I've got this stop set just above that price gap on XME. As for us, crude oil, which has become of paramount importance, probably the most important future out there with respect to equity movement, it's down, although pretty stable compared to what it's been like. You can see we had these just incredible swings, this being the monster of them all, this absolute whirlwind of activity. And the size of the real body in candlestick terms has been getting more and more modest lately, even just over this week. So huge one here, smaller here, even smaller here. It's kind of settling down to around 90-ish really for lack of news. There's no real meaty new information that it can process. Even so, even though crude oil is weak, energy stocks just keep rocking the free world. XOP, another multi-year high. And XLE, another, well, we're pennies away, but could be another lifetime high. We're very, very close. Yesterday was a lifetime high. We might have another one today. So they're just not even bothering to check their breath. Bitcoin is 2.29%. Sounds like a big change. It's not in Bitcoin terms. Pretty small motion right here. I chickened out of my BITI again because the next really hardy resistance on this is way up here around 81,000. I just don't want to stick around for that. If we crack below Monday's low here, well, I'll be furious with myself, but also means that we've broken the prospect of that kind of uptrend. As it is now, the jury is very much out on that. But back to metals, it was really interesting. Yesterday, I can't remember if I mentioned here, I showed you the gold chart. I don't know if I mentioned that I bought gold yesterday for the first time in a very long time, but it was a quick trade. I bought GLD yesterday at a good price, and I sold just after the opening today. It's not because it's near a particularly important resistance. That doesn't even occur till way up here. It's just that I saw it as kind of an opportunistic trade, because if assets, broadly speaking, Bitcoin, equities, start to fall hard again, I think gold, weirdly, is going to come right along for the ride. The other thing which compelled me to just take my profits and run was looking at the mining stocks like XME, like GDX, like GDXJ. They didn't seem to have too much safe upside potential either. And so you can see here, like with gold, it opened pretty strong and it's currently trading relatively weak, even though they all have a day-over-day positive change. You know what? I don't have much time left, so let me just make one broad point. We won't even bother with the other charts. And that has to do with my point I made yesterday and today about knowing when you're wrong and the importance of recognizing that. And there's a couple of charts that speak to that really well. One is ARM, and this has been a pretty sloppy chart, but this is something I had enjoyed trading for a while. But once it started moving higher toward this pattern, I decided to dispatch a nice short on this. And good thing too, it's up today almost 17%. It was up like 20% earlier today. But it's a very messy chart, and it got more messy once it pierced into what should have been a pretty solid wall of resistance. And so there are times when you can become fixated on something and it starts to spoil, and it's like, well, off you go. I'll check with you later. An even more extreme example can be had with Dell. It wasn't that long ago that Dell was the most fantastic chart I was following. Absolutely dynamite around here. That didn't persist though, because it didn't break down. Not only did it not break down, it seemed relatively robust. It kind of pushing back into the pattern. And again, I just threw my arms up and said, I'm not going to trade this now. It's not doing what it's supposed to do. And I'd stopped kind of watching it day to day, and I glanced at it yesterday and was shocked because this thing has just roared higher. I think it's at lifetime highs right now. So good for Dell. Whatever they're doing right. But as a chartist, it's just a good example of not to become infatuated with one particular instrument just because it looks right at a certain time. The picture can change. And when it does change, it's time to say sayonara. And that's what I got to say to you. It's a little over time here, so I'm going to say goodbye. Hope you're doing all right. Crazy market we're in right now, but really, really interesting day to day. So I'll see you here tomorrow. Thanks for swinging by. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back, my friend, and it's been kind of a nothing day here. We've got E-mini S&P 500 futures up 32, about 0.5% here. You got the NASDAQ up about 0.5%, 129. You've got the Dow up 283 and the Russell up 23. Oil bid from this morning, it got as low as 86. 86.46 was the low of the session. You have us back up here, only down $1.50 at 90.85. You got volatility futures down 50 cents, about 2%, 24.42. Bonds having a big rally today, up almost a full point here, 113.19. A couple ticks off the highs here. Didn't get 114, but very close. You got gold up $110. We are saved 4,544. You have silver up $2.23, about 3.25%. Bitcoin as well having a nice little session here, up about 1,500 on the futures. Spot unchanged. I was talking about it with Mikey this morning. Both rallies that we've had, Monday and today, they don't give me the warm and fuzzy feelings.
Much to be desired. Nick, yesterday at 4:15, the 4:15 5-minute candle closes at 91.31. And then at 4:20 Eastern, we get the news that sends oil lower and stocks higher.
Yeah.
That was the low for oil the rest of the trading session and through today. And now we're back to 90.91 right now. So we are far closer to the pre-headline high than we are to the low right now. I suppose for stocks, I mean, they're holding on to some gains here, and there's a sense of resiliency. But oil is very much signaling, thanks for the stories. This isn't over. Stay strapped in.
Yeah, I agree with that that assessment here. One of the things we were looking at this morning, oil volatility, basically unchanged on the session. We're sitting here at 89. When you look at the oil futures, when you just look at the curve here, it's gotten pretty flat going out the next 100-ish days. So it certainly does seem like it doesn't seem like any of the news headlines are really sticking. The typical taco 2%, 3% face ripper, those haven't been the story. It's been kind of a sell into rallies.
And there was a really interesting tweet from the Speaker of the Iranian Parliament. He said, "We are aware what's happening in the paper oil market, including the firms hired to influence oil futures. We also see the broader jawboning campaign. But let's see if they could turn that into actual fuel at the pump, or maybe even print gas molecules." So
the meme game, did you think it would be a war of memes?
yes, we've gotten very stupid.
That's true. That's fair. That's fair. It's definitely not out of the realm of possibilities. I should have expected that. I will say,
Nick, you're talking to people who are buying JPEGs of rocks a few years ago.
That's true. That's true. That's us. That's our generation here.
Americana.
Yes, there we go. We got you lock us inside for too long, and all of a sudden we're buying JPEGs for millions of dollars. Makes complete sense.
Don't right click and save that, please.
No. No, it's not the same because mine's on the blockchain.
Oh, my mistake.
Yes. Yes.
Sorry.
I will say, I don't know if you watched Trump yesterday. It does feel like the rhetoric has kind of come in. I think we're, Trump is stuck in a little bit of a hard place. He's got to kind of, if you want stocks to continue going higher, I think you got to have, some sort of resolution here soon.
Look, there are some olive branches being extended, right? Yes. I retweeted this into my feed a little while ago. If you don't follow me at CVecchioFX, we see here that Trump was talking about a present from Iran yesterday, right? And in like a war sense, it's like, ooh, is this a bomb?
Yeah.
No, it's actually a present here. Apparently, the United States requested that Iran make some sort of gesture of goodwill to show that like they're sincere about finding an off-ramp. And in response to that, Iran allowed a number of fuel tankers that weren't tied to the U.S. or Israel to pass through the Strait of Hormuz in order to help calm global markets, this Arab official says. And while the Arab official acknowledges that the safe passage of a number of these tankers is not likely to have a significant or long-term impact on global oil prices, it is still something that is being discussed, right? A concession that Iran's not yet prepared to offer while the U.S. and Israeli strikes continue, but this present was delivered. A limited number of tankers were allowed to make their way through. And I think just from my interpretation of that, it means if the U.S. and Israeli strikes stop, then maybe the tankers will start going through and rather rapidly. It is something to keep in the back of our minds here. That came out about 2 hours ago. And I don't know, see the market not really reacting to it. But gestures of goodwill apparently are being made and achieved.
What would you need from... See, I look at that and I hear that, and I think with just the overall, my feel from what I've seen out of Trump and just tweets and the stuff that's going on, feels like there's, the off-ramp is being looked for in some regard. And I think, just for the good of humanity, everybody would love this to be over at some point. What would you need to see in markets for you to feel that way? Because I feel like the market's going to be there first. I feel like this is still indecisive market. I feel like, 30 points to the upside. Yeah, that's nice. It's a nice little bounce. Volatility's still just under 25 and is actually near the higher end of the session right now. Oil hasn't really moved. I guess you're seeing a little bit of a move in bonds, gold, silver, like those. That's kind of seeming risk on, as in like, rates coming down, gold and silver kind of getting bid up a little bit as kind of a newfound risk asset in place of like a Bitcoin, something like that. What would you have to see from markets to feel a little bit more good again? Wait, how do I get my bullish Vecchio back? What are the signs? What are the things that we see? We got your 6,600. You told me in the middle of last week, you said 6,600. It's a spot where I start to get interested. Are you interested?
I'm trying to be interested. I'm interested adjacent right now. One of the stats we pointed out on Futures Power Hour today was that you look at the number of stocks that are trading above their 20-day moving average, 1 month moving average, for example. And you see that we fell to 10.13% earlier this week. So not quite 10%, but I use 10% as a threshold because, as we highlighted on the show, the times in which you've seen that, measure reached are typically near local lows in the stock market. Last time we had a reading of that sort was April of last year. And if you bought the lows in April when the market was this oversold, you did pretty well over the next month, over the next 3 months, 6 months. Heck, the market's still higher almost a year later, so you'd still be doing well in that regard as well. So maybe we've hit washout points, and the stock market is trying to show signs of resiliency right now. Right, it's not underperforming, even though oil has basically closed the gap to where it was before the announcement yesterday. So hope springs eternal. Ultimately, Nick, what really we need to see is that like corporate profit margins can't collapse as a result of this, and so inflation's bad, recession's worse. An off ramp this week, should it be achieved, would just mean a bunch of crummy inflation over the next 6 to 9 months, maybe a little bit longer, but the economy wouldn't fall into recession. At least the U.S. economy wouldn't fall into recession.
Yeah, we got some people in the chat saying, that it'll, once it is over, that's the ultimate sell the news event. You buy the rumor, sell the news kind of thing.
I mean, look at the 7,100, 7,200 calls in ES that are trading around like 30, 40, 50 days out to expiration. At face value right now, they don't offer a great risk to reward. I mean, the 70% odd probability of profit, but when you're risking 7, 8 for one, I don't think that's a great deal. But you think about the problems that were persisting prior to this war, layering that on top of the AI apocalypse fears and the private credit issues that were preventing us from punching through 7,100 already. We don't even have a Fed that's going to cut rates this time around. Whereas like a month and a half ago, we had that supporting us, and the Fed's not going to cut rates even if this thing ends today, if you followed how they operate. So I think if we get a rally, it's going to be sell the rip in stocks, at least sell call spreads in stocks, and you probably have a little bit of time where the theta decay can work in our favor, even if the market doesn't pull back meaningfully. Just chopping that wood is going to take a while.
Yeah, I hear you on that. I think that's the play here of just trading on both sides here, being short volatility. I have taken steps today to reduce some of my directional exposure, my long delta. I took off some of my gold, my micro gold contracts, micro silver. I sold a call spread against my NASDAQ position, my long NASDAQ, sold some wide call spreads against my leftover long gold positions. I think that's going to continue to be the trade here, at least in the short term. Speaking of gold and silver, and really bonds too, I'm going to loop them in together because I feel like they are kind of the cause and effect, so to speak here. This moving gold, silver / bonds, are you buying it, selling it? Are you happy with it? Is it enough? Do you expect more? What do you think?
February 10th, a pipe burst in my home, Nick.
I remember.
I'm going somewhere with this. The Indian burial ground upon which my home has been built, between trees and other sorts of leaks, strikes again. Because of all the problems in the Northeast, this was one of the coldest and worst winters that we've had in generations, like 1961, I think, in terms of the scale of snow and coldness. Lots of people's pipes burst, so it wasn't just me. And so finding someone who would come out here and do the work to actually reroute all the piping away from the electricals, I couldn't get them out there until a few days ago. Really nice guy who came to look at my AC system as well in the attic. Russian guy was complaining to me about silver, about how weak it got so quickly. So I don't know if that's the taxi cab driver talking about a stock price, but like when the average person who's been engaged in the market looks on the outside, because he saw the camera set up in my office when he had to go up to the attic, and he goes, "What do you do?" And I talked a little bit. He goes, "Oh yeah, okay. Oh, it's a silver man. It's killing me." That to me is one thing that stands out. The other thing that stands out, Nick, though, is that gold and silver during these crises historically should do very, very well. Maybe the cash crunch and liquidity reach, like you're going to have to pay for more energy at some point in time. How do you do that? How do you make up the difference? We've run through it. You could do more QE to just print the money and monetize debt. You could raise taxes on your citizens, or you could just sell assets, say treasuries and gold, to cover the cost differential so your citizens are at least insulated. And that's the point of these safe havens, after all, for a rainy day, which it is. Why do we think that cash crunch is going away anytime soon? So I see real headwinds right now in the short term, but if the cash crunch ends, the dollar falls, oil comes back, yields come back in, they'll find their footing. I just want to see vol rise right now. And I think that's the most disappointing part of this rebound, is that we had vol initially rallying yesterday, and then today it started pulling back, and that just hasn't been, accretive for significant gains.
Yeah, oil or gold volatility up about 5% in the last 5 days, which isn't a ton, but it was kind of increasing into the downside move. Silver volatility actually down about 5%. So you've net on balance, no change in volatility on gold or silver. The gold silver ratio has been sitting around the 62, 63 handle, despite the movement that we've seen to the downside, specifically in gold more so than silver. I hear you on that. I think gold and silver are interesting here. You've had a little bit of a bounce. It looks like you had a washout. I have not been getting the same sort of taxi driver tips as you have. I do have some people in the chat saying that they're. I'm gonna call out who this was. Was this Ranch or Robert? Somebody said, yeah, Austin in the chat saying my wife's cousin told them that they lost money on silver. So that's
Nick, we're so close.
Yeah, I feel like you're so close. Like that seems to be a capitulation type thing, right? Like assuming you lost money, you probably closed the position. Yeah, you get angry. That's sort of it.
Not me. I've been very fortunate to because I've tried every day. Trust me. When the silver had the big pullback and I was long that 117, 118 call spread, like, let me get out of this. No one's been willing to buy it from me. So
you might have to wait for a little bit more. I will say.
Yeah, well, it's been at max loss for 5 weeks, so whatever.
I will say it's some of the bigger movers of the day here. Just when I look at my watch list, the S&P 500, I mean, the SMH had a nice little bounce today. That's, I feel like, is a nice sign. Some of the software names kind of taking another leg lower. IGV is one you can look at just for a proxy. It is mostly weighted in Microsoft, which is sitting at fresh new lows. I mean, we're going back to April lows. You had Meta below 600. Still below 600. It had a little bit of a bid in the middle of the day today. NVIDIA was kind of having a little bit of a bounce to the upside. You got, on the other side of that coin, some of the memory names getting whacked a little bit. I saw some stuff coming out of Google, taking some of their lunch. Seems like a little bit more of that kind of rotation, choppiness underneath the surface. Are you interested in any of those things, names, anything? I feel like they've lost the momentum trade has kind of lost its luster here. I feel like there's a lot of pain. I get my text from one of my buddies that, has been trading the IRINs and the NBIS and, like stuff like that, where he's like, I loved trading and now I hate it. Nothing goes anywhere. Nothing happens. I just lose money. And then it pissed me off. And, the momentum's not there anymore. The Momo.
No, and there is a momentum factor ETF, MTUM. I believe it's Invesco's. They as a proxy for this, so to speak. The shares haven't done that well recently. They're up about 0.6% today here. Mm-hmm. But it's been flat and it's been mostly down since the peak at the end of January. And you can see that the day that precious metals peak is the day that we see the momentum ETF peak, which coincidence? I don't think so. You're chasing things. Yeah, we're going to turn the corner at some point. It's just a function of when. You got to be open-minded in this market because things are evolving on a day-to-day, minute-to-minute basis.
I mean, everything moves at light speed now. It's a little crazy. Hard to wrap your brain around everything.
It really, but it has provoked a change in behavior, and I think that is something that's worth noting. There's a chart that's been going around from Citigroup about how retail trading activity across the board has come in. And to that point, the way that retail traders are operating now is slightly different in this environment, stepping back from single stock names and like the zero DTE activity and moving more into ETFs and trade and just like kind of buying and holding a little bit more. And so, folks are trying to look through this crisis. That's what it tells me, right? There's no reason to play like the day-to-day. Why look at the zero DTEs and ES when a single tweet or something after hours like it did yesterday could upend the best laid plans of mice and men? Might as well look out 6 weeks, 8 weeks, typical Tasty style stuff, and kind of try to ride it out a little bit before getting super bared up or throwing in the towel entirely. I mean, that's probably the prudent thing to do. Stay risk defined. Portfolio preservation is the name of the game. Ride it out.
Yeah, I would like to see them applying a little more strategy than just buying ETFs, but I do think it's probably a good thing that we're not YOLOing call options every day because the market can't go down. I think that's probably there's probably a happy medium between those two, which is probably along the lines of like selling puts or selling put spreads or selling iron condor or something like that, where we float in the middle. I think that's probably the right play here.
Nick, I can tell you my short-term stuff that I've been trying to do, like that's the stuff that's been chopping me up and eating me alive.
Yeah.
But when we had, but like those widespread short iron condor trades, like at the 7,100, 7,200 strike, the 61, 62 that I have on the follow page, Nick, like those are the things that are working out the best for me because I don't need this thing to go up or down. Who cares if it swings wildly throughout the day? We're just riding out the clock.
Yeah.
And if we get the all clear, then the positions come off. But right now, I'm not worried about 7,100 or 6,200 being reached before I have a chance to make that move.
What would you think? So if you had a moment where, you had complete certainty that everything was over in Iran, it was going to it was done, just all of a sudden, what do you think the market's reaction is? First move.
Stocks up, bonds up, gold up,
How
oil
much?
down.
How much?
Stocks up. Where are we right now in ES?
66.50. We'll just say
6,800.
Okay, so a big move, but not like a face ripper. 100, 150 points.
Yeah, and think about where we were at the lows in February. The low for February was 68.07, right? So you get back to a place where effectively you're thinking about the percolating AI concerns and software concerns, private credit issues, and so you get a reset. We wipe Iran off the board. We basically return to where we were last month prior to everything flaring up, and we can proceed from there.
So you're not worried of we got some people calling 4% in the chat. I like that. I think that's, so here's what I'm getting at. Right tail risk. You've got right now, let's call it a 10 to 5, what is it, a 10% move in the E-minis? Are we close to that? 7% down in the market as a whole? 5 to 7, whatever. You got a 25% haircut in a lot of the big name stocks that have been momentum trades that people have been trading. So there's been some pain. We'll just say there's been some pain. You've had sustained volatility throughout this pretty much this whole year. We'll call it, 20 to 25, which means that everybody that was hedging is paying a pretty penny for those hedges, right? And over the last couple weeks, even onto these one-day down moves, if you didn't close that hedge, you probably lost money within 48 hours, and it just bleeds out every day, okay? So you got a lot of downside protection on. That protection's real expensive. It's losing money basically every day, despite the small choppy down move. If this was to all be done, do you see any right tail risk? It doesn't seem like you do. Like you're not afraid of that. Everybody gets back on board. Oil's going down. There's no inflation. Back to the AI trade. I'm buying Microsoft and Meta at 2-year lows.
Inflation's coming, my friend. Get ready.
Oh, they'll fudge the numbers. They'll fudge the numbers. Come on, it'll be nothing, 0.1%, 0.2%, whatever. We'll know. We'll know. We'll feel it. But the numbers will come.
The gas prices are $6 a gallon, but like CPI was 0.1% month over month.
Yeah, okay. What? That's not different than the last 5 years. It's the same thing. Come on.
So positioning to me is one of the bigger tells here, right? CTAs are net short the market right now. They've been chasing it lower. And if there's a snapback, they could help drive a short covering rally on one hand. But I look to the CFTC COT report, for example, for this. The all-time high in terms of net short positioning in the S&P 500 futures contract comes in May 2023, the last week of May 2023, just over net short of 400,000 contracts between large and short speculators. For those that don't look at this COT report, there's a difference between speculators and hedgers. Hedgers are people who are bona fide economic participants, like airline companies hedging fuel costs, or grain producers like farmers trying to hedge off the cost of their wheat or corn so they can lock in their prices. But the speculators are folks more like us, the people who are trying to make a buck in the market. We are assuming the risk while the hedgers are offloading the risk. And there's different behaviors here, right? Speculators tend to chase.
Yeah.
And so when you're really net short a market, that's when everyone says there's a lot of fuel to burn for a short covering rally. The point I am getting at, though, is that the net short position in May 23 that sparks that rally after the government's funding issues are wound up over the summer months, you get like 4,400 to 4,800 in ES over 6 weeks. We're nowhere near close to that right now. When you net out the shorts, the small speculators and the large speculators, the net short position is like minus 20,000 contracts. The fuel is just not in the tank to the degree that it has been in the past when we've seen sizable short covering moves. And to that point, Nick, over the last 5 years, the current positioning in the futures market is in the 55th percentile. That's a nothing.
Yeah, it's
That's
right
not
in the
extreme
middle.
at all. It's right in the middle. So yeah, there could be a bounce, but it's not like this market is sitting on a world of people who are short, who are been short, selling in the hole, scared, panic, fearful. Not yet. So that's part of the reason why I don't think this thing has legs to run like substantially higher very, very quickly.
Yeah. Okay. All right. I hear that. I feel like there's the single name pain has been more felt than the market pain, but I feel like that's where I feel like those have gotten, those stocks are, I feel like that's where you're getting the fuel for the upside fire. Like I don't know what the positioning is in some of those software stocks, a Microsoft, a Meta. I mean, you're net long, obviously, but it feels like there's a lot of downside speculation across the board. But
it may be appropriate that we start looking at, if we really want to play that game, we start taking a look at what companies that have meaningful liquidity, right, also have sizable short floats. Because if we think that there's going to be, and how many times have we seen this after a crisis, Nick, where Goldman Sachs's most shorted basket is up like 8% one day. And it's because everyone is covering and trying to move capital around. If that's really like we want high convexity in stocks, it's not necessarily at the index level, in my view. You're going to have to be more of a stock picker. And that just speaks to the dispersion environment that we've been in since early February.
100%. 100%. I totally am on board with that. I agree with that. I could see a world where we're both right, where we get the 150-point move in ES, but you got something like a Microsoft or a CrowdStrike or a Snowflake that's up like 50%, just randomly on a crazy move. As we go into the close here, you've got E-mini S&P 500 futures are up 35. We've been floating right around the 66.50 mark. 1.5 million contracts traded today. You got the NASDAQ up 160. You got the Dow up 300 and change. The Russell up 30. The Russell being the strongest of the group. Everything else up about 0.5% to 0.2%. Oil sitting at 91. Volatility futures stubbornly bid at 24.28 here. Bonds up a full point. They rallied into the close along with gold and silver. Gold up 127. Silver up $2.64, and Bitcoin staying strong above 70K. Mr. Vecchio, that was great, man. We're going to take a quick little 90-second break. You're going to stay on and join Ilya for overtime here, so stay tuned for that. We got more Tasty Live coming at you coming up next. We'll see you tomorrow morning. Peace. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is. And learning that the market is not always going to move in your direction, you have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Chris, you're back.
Hope springs eternal. Do we buy it? Oil doesn't. It is Wednesday, hump day, as we turn our way through the middle of the week. Wednesday, March 25th, 2026. This is Overtime. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. We're here to take you through the next 27 minutes as we wind down the trading day. A day that was really decided yesterday on the show, Ilya, when oil prices around 4:20 Eastern didn't get higher. They decided to go quite lower on the back of news that we were trying to negotiate with Iran. 91.31 there as we found the announcement reached. We sold off quite quickly over the course of a few minutes' time, and oil prices found themselves falling to a low down near, we'll call it 86.30 on the show yesterday. And then that was the low for the last 24 hours. Well, 24 hours and 26 minutes, I guess, because we're back to 91.25. We're only off 6 cents from when that announcement was made. There were a few points of interest to that. We do see that ultimately stocks are trading higher today, despite oil having effectively closed that gap and erased those losses. We likewise.
But are they though?
Well, bonds also jumped.
We have
here
that.
too.
We have a gap that was sustained through those moments when oil was falling. The futures gapped. They then went nowhere for the rest of the day.
They went nowhere the rest of the day, which is a fair assessment, but you look around and some things did hold on to their gains, right?
And this is the most fascinating part of it all. I think you've hit the nail on the head here for what is the most interesting thing happening here. There has been a bit of bifurcation. The single marching band way that this thing has been working out since the start of this war started to kind of peel apart last week with everything going but crude oil. Now more things are peeling off.
More things are peeling off, and you're starting to see second order effects come into play right now.
Yeah.
Maybe moving away from the energy part of the crisis, which I know there's a lot of propaganda and misreporting going on.
My God, is there.
From both sides, to be clear.
I mean, it's a war. Information war is part of it.
Yes. No, that is a time immemorial. What we do see, though, is that there is a pretty decent signal within the efforts being made here, because whether or not are we talking to them? well, did we submit a peace plan? Well, Iran said they reject our proposal. For them to have rejected a proposal, they would have had to have seen the proposal, which means someone delivered it to them, either us directly or through a mediator.
Pakistan,
so clearly,
I'm looking at you.
There are clearly efforts here to de-escalate this. Whether or not they're earnest is another story. But Ilya, I think we just need to be honest about where the market is still here. It's a nice, decent day, I guess, where we hold on to the gains that were built mainly after hours yesterday, although we're off the highs and we're still not through the key levels that defined swing lows back in November in ES. To that end, the downtrend that's been in place over the past few weeks is still very much in place, but we're sitting on that threshold, just like we are in the NASDAQ here, sitting on that threshold, and for good measure, the Russell sitting right below that threshold. So you can see that the market, you can see at least stocks are trying to get the all clear signal to squeeze higher, even if oil
and failing.
They're not able to do it yet, though. So this is a really, I say for the rest of this week, as we head into a weekend where we pass the 5-day window and more reporting, we're meeting in Pakistan on Saturday with Iran. Sounds like the 5-day window is going to be extended. We're going to start bombing while we're meeting with them.
I mean, we were kind enough to wait for a period of hours last time.
Choppiness is probably still ahead, is my point. Nick and
There's
I were
an
talking
interesting
about,
thing, though,
that
you point out about some of these assets peeling away, right? So oil doesn't make the concerted move today. Neither do stocks. And them two still seem to be tied at the hip. You get these headlines. Israel's Channel 12 News comes out, says maybe we'll get a month-long ceasefire while we hash this out. The FUD comes fast and hard. And you get a situation where stocks react and then don't go anywhere. Oil reacts, then doesn't go anywhere. But then you look over at the bonds, you look over at gold, you look over at the dollar, and you go, these things seem to be doing something else. And there you start to see the second round effects of what all of this means. We said last week, look at how crude oil is standing, even though bonds are still hurling lower, even though the dollar is reacting, even though gold is reacting, even though stocks are reacting. This thing is moving away from saying this depends on near-term oil moves, because at this point, the shock is there, it's baked in. Now we have to deal with its consequences. Something else happening now might be the next kind of phase of that, where we got a whole string of central banks last week, and all of them were hawkish. And then we got a string of PMI data this week saying, in what world are these central banks hawkish? Because growth has slowed aggressively in Europe, in Australia, in the US. At least in the US, the Fed is expected to stand still, which is reasonable for the environment. They can come out and dance and say, our objectives are intention. Yeah, we know. Okay. In what world is the ECB now expected to hike by 50 odd basis points this year when their economy, as of the March PMIs, is at a standstill? That doesn't make any sense. And so it seems like what's starting to happen here is maybe a rethink of the policy angle part of this that happened last week. And we talked a little bit about this on Macro Money yesterday. The idea here being, after last week's moves, the dollar ended up being the dirtiest shirt in the basket, despite the fact that there was risk aversion. The dollar was actually down. And it's because every other central bank suddenly looked more hawkish. Well, maybe that's wrong. And so today, you don't so much get the dollar responding negatively to lower US yields. You get the dollar responding positively because it seems like spreads are narrowing. because some of that hysterical hiking that got baked in maybe is indeed hysterical, because central banks aren't going to fight this kind of inflation by crushing an already weak economy. And maybe that explains gold, and maybe that explains bonds, and maybe that explains the dollar, and why they're doing something completely different from what stocks and oil are up to.
Right. In 2022 and 2023, the idea was like, okay, the Fed can't fix oil supply issues, energy supply issues that are happening in Europe, which is bidding up our market. So what they're effectively doing is they're going to try to engineer a slowdown so that they kick out the legs from demand so that the economy doesn't need as much energy.
Well, and the Fed had a happy coincidence, right? Already by the middle of 2021, before the Russia invasion, the Fed was telling us, look, guys, the transitory thing isn't how this looks. This thing is getting sticky. We're going to have to hike rates. You got 6 months. They said it at Jackson Hole. They said it again toward the end of 2021. The Fed was going to hike a bunch. Maybe they wouldn't have hiked in 75 basis point clips back to back if Russia didn't light the fire even hotter. But they were going to do that. So what the Fed was doing was only in part the response to Russia, and probably not in a very significant part. They were paving the runway for that since the middle of the previous year. It was really just a difference in pace.
Treasury yields do come back in today. 10-year yield, 4.329%, but not exactly getting below 4.3. Ilya, you could see there that it's still not turning the corner, so to speak. I do find it interesting that you say that, we can't hike our way or, hike our way out of these issues, because it's true. We can't hike our way out of these issues.
Well, I mean, do you crush an economy that's already weak because inflation's up? I mean,
not that I.
Lots of luck to you. I mean, you'll solve the inflation issue.
Yeah,
you will.
You'll just problems.
You'll just crush the economy in the process. Now, it's not like we haven't seen that, right? Volcker did that, but he did it many years after the reverberating effects of the 70s oil crisis, which was inadequately dealt with at the time, but because it was allowed to linger, Volcker later had to crush the economy. But is that anybody's first choice?
No, I don't think so.
Right.
It doesn't.
I wonder if this whole thing with talks in Pakistan is in some ways a bluff.
He's done this how many times before where we're going to talk, we're about to talk, we're meeting to talk. It was in Oman in February. And then we strike right while we were in the middle of speaking. Right. So, not for nothing.
I wonder if the off-ramp here, though, is... I read an Economist article today as a preface where they enumerated all of the many difficulties of trying to open Hormuz by force and basically painted a picture that, but just by the numbers, looks like an absolute nightmare. Not insurmountable, but a nightmare. And one wonders.
Well, yeah, these people are saying we've done Iwo Jima. Iwo Jima, 7,000 Americans died taking Iwo Jima, and Kharg Island is 50% bigger.
And we got
than Iwo Jima.
And we've got all the capacity for Iran to say, you know what? The range for our Shahed drones is such we could shoot them from anywhere in the country.
Yeah.
And reach Hormuz, and they're dirt cheap, and we have a gazillion of them. So, congratulations. We can do this whack-a-mole basically in longer than you can on almost any set of circumstances. So, when you look at that, then you go, okay, what's the out? And one thing that has worked really well here has been Israel's ability to know where the key targets are, especially human targets, to have great surveillance and great penetration of Iranian intelligence services and the inner kind of workings of Iranian power to know where to strike and to do it with precision. I mean, the entire upper echelon of leadership is gone. So you look at this and you go, well, maybe what these talks are is just misdirection. And really the thing that happens here is the kind of pause that results in a flashy decapitation. If the regime won't play ball, maybe it's the wrong regime.
I keep talking about extending the timeline for when forces could be in the region to continue bombing if this doesn't work out. So
seems like they're buying. They're trying to buy time. I wonder what they're doing with their other hand.
That's kind of my inclination here too, because troops continue to move in the region. But that's neither here nor there, Ilya. Does volatility come in today? It does. It comes in for equity markets where you had IVRs that were about 5 points higher. 50 for Russell. Today it's 45. S&P was closer to 40, 42. Now it's down to 34. That's not inconsistent anywhere, as we've seen. But the market, again, is rejected for the third consecutive day, trying to climb through 66, 60 or so. It's staying in the downtrend. We do get north of the 1 week moving average, which I suppose is a benefit. Same thing for the NASDAQ, churning, not quite. The Dow, the Russell, both similar stories here, although the Russell does have its 1.22% gain or 2.8% gain inside day, technically speaking. We're going to need more. This is the market's pricing in peace without any proof to a large degree. It's exceedingly hopeful right now. The one thing that I'm doing, you talk about second order effects. One of the things that I did today is start to build into a position that I intend on deploying more capital into wheat. Because even if this crisis ends today, looking at the reports from various agriculture authorities around the world and seeing how the fertilizer companies are behaving, this isn't exactly that something going to go away, even if the Straits of Hormuz reopen fully tomorrow. So to that point, Ilya, thinking about this ticker agnostic, and again, because it's a commodity, it is in that Ouroboros circle where if prices rise too high, it then becomes the petard upon which it hoists itself.
Yes.
Right? So where are we right now? We may have just turned a corner. 55.75 perhaps here is an area of interest. Resistance, flip over, become support. In the trend that we've been following in wheat prices over the past few weeks, we've noticed that our 1 month moving average, the yellow line, has been holding up as support. And in the past few sessions, we've bounced off of it. To that end, today we close above yesterday's high after moving below yesterday's low. So we have a bullish engulfing bar or a key reversal down here as we return back to trend support and make a pivot of a higher low above that 575 region. So I'm in looking for a move up to 650 here in wheat futures. I'm going to build into a bigger position at 58 days to expiration, but the risk to reward, it's something I'm interested in. Risking 1 to make 4. And all it is calling for a return at some point in the next 2 months to a high that we saw earlier in this crisis. So I like the technical setup. And like you said yesterday, it is a second order effects trade.
Yeah.
Given what else is happening in the supply chain that is off ramp tomorrow, how quickly are countries moving through the straits? I'll take the under that this is going to be resolved in short order, given what we just saw in 2022.
Yeah. I mean, I would agree. I think if you really wanted to look at the kind of very long form effects, something you might look at is ICLN, ICLN. And that's the Global Clean Energy ETF. Why here? Well, because what we're learning is how much of a choke point oil is.
Oh, geez, that's a pretty nice looking chart.
It is. And there was a lot of consternation about the sort of effects that the Trump administration would have on this, because obviously they're renewable skeptic and drill baby drill and yada, yada, yada. Obviously, the market thought otherwise. because whatever voracious appetite for AI we've had, clearly all energy is energy we need. So
yes.
iClean is an interesting thing here. I'm watching this congestion that it's in very closely because this doesn't need necessarily for there to be a resolution either to the AI situation or to the oil situation. And it seems unlikely that there's going to be not a resolution to either. But whichever way this works out, it probably works out better for renewables because we do have a voracious appetite for energy and because renewables aren't transited through the Strait of Hormuz and various sort of other choke points like that. So I'm watching it closely for when eventually that becomes a thing.
I'm just looking through some of the individual names here in the portfolio. Bloom Energy Core is a significant holding. Overall, Ilya, I mean, that's a pretty nice looking chart. Bottom left to top right. What are the things that are holding up in this tape? I think that's one of the questions you got to be asking yourself. If they're holding up in this tape, is it a defensive reason or is it because of this, new world order that we're in? I don't know about you, Ilya. I think that we're in the new world order. I think everyone's talking about like, oh, we're moving to a multipolar world.
We've been talking about it. You and I have been saying we're in the new world order for a few years now.
We're in it, and like
this is the new world order. One might say it started with the 2016 election.
Probably before, Brexit.
Sure. Yeah, but I mean, all of these are symptoms.
They're symptoms of the financial system being wrecked in 2008 and no one being held accountable.
That's certainly part of it. I mean, if you want to get philosophical, I look at this thing as essentially a cycle type of a development, and not cycle in the sense that we go sideways, but in the sense that the way higher is a corkscrew. Sometimes there are ups and sometimes there are downs. And
so is this your fourth turning?
That's one idea. There's a similar idea that George Friedman put out there, the geopolitical strategist, very adjacent to a fourth turning type of an idea. Dalio talks about this kind of stuff, Howard Marks. All of them have a different kind of way to describe it, but it's a very analog idea. And it's really that the problems in any given kind of cycle turn arise from whatever the solution was to the previous cycle turn. So if the problem in the 80s was inflation, overregulation, and government that was too big and therefore inflationary, the solution was Reagan and everything that followed. Liberalization, globalization, everybody all of a sudden was on that kind of time. And it worked. Interest rates fell for 40 years. Inflation fell for 40 years. Well, we're transitioning because now it seems like the problem that created was, of course, income inequality and lots of paper wealth and the sort of when people talk about a K-shaped economy, in a large sense, in a longer term sense, this is what they're talking about. And now we have to resolve that issue. And inflation is higher, the world is less safe, and we're seeing this kind of a return to the bad old days.
Well, we're in it, Ilya.
We very much are. One wonders, though, the convulsions, all of these cyclical theorist types point out the convulsions don't take a long time. The convulsions occur at the regime transition, and then the new regime emerges, and normalcy ensues. New normalcy, whatever that is, but the thing finds a new steady state, as it were.
Steve Mirren The Fed's Mirren is out here right now saying that I raised the headline inflation projection this year to 2.7% on the oil shock. He expects AI and deregulation to be disinflationary, which is going to help keep inflation down. But the oil shock may push unemployment rate higher. The Fed is 1% above neutral and should cut over the course of this year.
Okay.
So not a problem for Governor Mirren.
No.
Ilya, we turn our attention to the last few trading days of the week. We're going over the middle portion of this week right now. We have this deadline on Friday. I can't see the market finding any sort of direction. I'd be surprised without a headline. It's going to be very much like yesterday, very much like today, where you get a lot of chop, a lot of two-way bouncing around, knee-jerking to this tweet, to that tweet, to what are the Iranian parliament speakers saying and what Trump's saying at a press conference, or where's JD Vance these days? We need to...
Maybe in Islamabad?
Maybe. That's possible. There were reports that an envoy from one of the two countries arrived in Pakistan today, but it wasn't pointed out which of the two countries it was. I would think it would be Iran, if only because it's closer.
It seems like the Iranians want more so to talk to Vance than they do to Jared and Steve Witkoff, because that's who left them at the altar last time.
Yes. So JD Vance,
and then they got bombed.
But then JD Vance getting involved would, again, one of those signals that this de-escalation effort is real, and second order effects, like oil doesn't become the trade anymore, Ilya.
Yeah,
it becomes the next domino to fall, and I'm getting ready. I'm looking at the soft ags now. That's my main point of focus. The second half of this week, I still like the directionally neutral things in stocks for the time being. If we get another flush in stocks, maybe it's a buy, but if we do get a rip, I'm looking to sell it because those 7,100, 7,200 calls in the S still look pretty juicy.
To me, the most interesting thing on the board is the US dollar. Because
color me shocked that you think that.
Yeah. It's right at support. And the story, at least today, seems to be that the parts that are peeling away from the narrative are the parts that go, the dollar is not at the disadvantage yield-wise that you thought it was last week. And these central banks aren't going to be as tight because that's just not feasible because their economies can't endure. At least in the US, the Fed can stand still because the economy is going to get a boost from the prior cuts. It's going to get a boost from the big, beautiful bill's tax incentives. There's stuff here to support the US economy. There's not for the Eurozone. There's not for the UK. There's not for Australia. How in the world are they supposed to hike like this? And so in response to this, it seems like the yield differential story that hurt the dollar last week is unraveling. And that's what you see in gold. And that's what you see in the bonds. Global credit is not feeling as tight.
Yeah, we'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. Overtime's out of time. Stick around. Macro Money's up next. Ilya Spivak, he'll be here. You're watching Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The markets are changing their view of this war, apparently. Now the question becomes, as they start to disagree, which one is wrong? This is Macro Money. Amelia Spivak, head of Global Macro here at Tasty Live. And we're going to try to figure out what's going on here, because the way that this market is interpreting what's going on with events on the ground in Iran and the read-through for the markets seems to be evolving even as the situation is. It isn't just the news here that seems to be moving. It's the actual response and the way that the reaction function works that is also in flux. So what we're going to do here is look at the price action, see what that is saying, and then try to figure out which signal in the markets. Because at this point, it's not a unified kind of thing. Which is the one that makes sense to follow? So let's begin here with a look at baseline sentiment. Of course, yesterday, toward the end of the trading day, we had those comments from President Trump saying there are conversations underway with Iran to maybe find an off-ramp to this war. And of course, in the same kind of window of time, we got reports from Israeli media that the conversation is going to lead to the announcement of a 1-month ceasefire basically to hash out some kind of an understanding. Iran, of course, promptly denied that any of this was going on. But as we've discussed here, that certainly wouldn't be the only time or the first time that the president says something, his counterparts deny it, and then some weeks later, it turns out that's what it is. We saw him impose the ceasefire in Gaza on Israel and Hamas, basically unilaterally. We saw him announce an imminent trade deal with China, which China loudly talked down last year around the issue with his dialing up of tariffs and them cutting off rare earths. The president off-ramped it himself, it seemed, and that seemed to appear in a period of weeks, despite Chinese denial. So this wouldn't be the first time that this kind of a dynamic has occurred. And so despite the fact that there's been loud comments from Iran basically saying that this is not what's going on, the markets took it at least somewhat at face value at first. And so we have this gap higher on the S&P 500. And what's interesting is that the follow-through just never happens. And so the markets get the bounce. They go, hey, maybe, and then no. And the read-through here seems to be, well, this is too flimsy. The markets are not sufficiently strong. Sentiment is not sufficiently bottomed for there to be a meaningful recovery. We get held back at this former support turned resistance and ultimately can't make headway. It's a similar story in crude oil where there's an initial gap higher around the fading out of this sort of sweep at the start of the week. We don't go anywhere. Then yesterday we get those news that maybe there's the ceasefire conversation, maybe there's something underway that negotiators are making progress on, and we get a gap lower. And then we come back and we get an even narrower bar. So crude oil, for its part, isn't buying it either. And of course, that's been the crux of this whole thing since the war began. Of course, as soon as it began, there was a disruption to oil. And we can see here, the markets have basically been operating on the kind of framework that we laid out here, saying it seems like the delay between when oil moves and when those effects appear in inflation is only about a month. So here we have CPI, the year-on-year rate, lagged 1 month. Overlaid with oil, and we can see that there's quite a bit of symmetry, especially at the turning points. And so with that, markets understandably looked at this and said, well, we have a surge in oil prices. We know how this works. This means inflation. And indeed, if you look at the way that bond markets have responded to kind of get a sense of a higher frequency view, as it were, we have these break-even rates, which are essentially the bond market's implied inflation expectations that is arrived at when you take the difference between nominal, that is regular treasury yields, and TIPS yields, the sort of real yields, the inflation-adjusted yields. And when you take that difference, you end up with the magnitude of the inflation adjustment. So you get these break-even rates, which are essentially how much inflation is being implied in bond prices. And the 5 and 10 year are here. They're the most liquid. And you can see that when crude oil spikes, inflation runs up with it. Moreover, you can see that this has been happening since the beginning of the year. This isn't just the war. And this goes back to the idea that crude oil was already marching higher and was already approaching a gain of double digits before this war began for the year. And it's because the markets were already seeing that the combination of factors in play was creating an environment where most importantly, China's oil supply started to look shaky, and China is the world's largest importer by a long mile, too. So already by December, going into January, the markets were looking at a situation where Venezuela was toppled and Russian oil tankers, the shadow fleet tankers, were being increasingly harassed at sea and captured. And, of course, Iran was already starting to teeter because popular protests broke out with people in their millions out in the street against the regime. And the regime had to go so far as to kill, by some estimates, 30,000 of these protesters basically over a weekend just to get them to get back in the house. So you look at this and you go, okay, well, Iran, Venezuela, Russia, this is all of what China buys at below market rate prices because it is the buyer of last resort for sanctioned crude. So this was already a story underway. Inflation was already starting to get bid up, and so was crude oil, of course, before the war. And since then, it's only become more intense. Now, this is an instructive chart for why the markets read it the way they did. As we get into the start of this year, we've spent the lion's share of the preceding sort of year and a half watching inflation rebound across the major economies. This is a chart from the OECD club of mostly rich countries, and you can see inflation there was peaking out, not surprisingly, in 2022. That's the combination of the post-COVID run-up, which the Fed thought was transitory, and then it wasn't. And then, of course, Russia's invasion of Ukraine and that oil shock, that energy shock. That followed an aggressive round of rate hikes pretty much across all the major central banks, and so inflation came down. Over the course of the past, let's call it about a year and a half, maybe a little bit more, we're looking at a situation where now 50% of these countries have rising inflation rates. So when the market looked at this Iran shock and said, okay, so the read through here seems to be inflation, well, then let's react accordingly. Because if 50% of these major economies already have inflation rising as of January, how much worse is that going to be? All of these central banks are going to have to aggressively pivot into inflation fighting mode. And so what is the response that we see across markets? Well, stocks come down, bonds come down. And so, not surprisingly, when you look at then the implied policy expectations, what you end up with is an aggressively hawkish shift. Before this war, the RBA was on course to do about 50 basis points this year and would have been done by now because they just did the second half of that 50 basis points earlier this month. The ECB and the Bank of Canada were on the menu to do nothing, while the Fed and the Bank of England were going to cut by 50 basis points. Well, what do we have now? The Fed is at standstill. The Bank of England looks like it might hike by at least 25 basis points. The ECB is on the menu to hike by 50. And the RBA, the Reserve Bank of Australia, is on course to deliver at least 2 more rate hikes this year. But the only kind of pillar of stability has been the Bank of Japan, which is ignoring all of this and seems to be operating on its own time. So what seems to be occurring here is fairly clear. Inflation shock, interest rate knock-on, policy expectations, all of that seems clear, except for one little tidbit. Not all inflation is created equal. There is demand pull inflation, the kind of increase in prices that comes because the economy is ripping so fast and growth is so robust that there's not enough stuff to go around to satisfy demand. So the prices for the stuff go up. And that's the kind of thing you, in a textbook way, address with rate hikes. You say, well, prices are getting out of control. All of you are too exuberant. Let's put the lid on this whole thing. Let's make borrowing more expensive. That'll make people consume less. It'll make people invest less. It'll take some of the pressure that exuberant demand is exerting on prices, and it will lower the heat. And that makes sense. Well, that is not the environment in which we find ourselves. This is not that kind of inflation. This looks more like cost push inflation, where some kind of jump in the price of a critical input, say energy, starts to reverberate over the economy because everybody needs the input and they just have to pay more. And that makes the price of whatever they use the input for higher. Of course, energy is a textbook example. Everything needs energy. But also other things that move through the Strait of Hormuz, which has now been closed off as part of this war, like fertilizer, like petrochemicals, like helium, like the precursors to aluminum, and frankly, the aluminum itself, because so much of the smelting has been tactically located near the big energy sources in the Middle East. So there's all kinds of things that are critical inputs that go into the making of other things here. And because the inputs become more expensive, the end things become more expensive. And there you have your inflation. Well, that's not the kind of inflation that comes with buoyant economic activity. It's the kind of inflation that comes with supply scarcity and expense. And so this is not something you cool by making consumers and investors less enthusiastic. They're not particularly enthusiastic at all. So what exactly are you going to do with rate hikes to solve this issue? Now, the Fed's perspective, that they can basically stand still here, that seems to be perhaps the most reasonable. And let's be clear, this is what the markets expect. The Fed didn't endorse this. This is what is now priced into the futures. But at least that part makes sense. The Fed can afford perhaps to stand still because they've got a bunch of rate cuts already in the pipeline from late 2024 to 2025's 75 basis points. Takes about 12 to 18 months for all of that to work its way through the economy when it happens. So the 2024 cuts should be starting to bear fruit right around now. The 2025 cuts are still in the pipeline. We still have the fiscal stimulus from the big, beautiful bill by way of lower taxes. That's a tailwind. And so maybe the U.S. economy is not in such dire need, and the Fed can basically sit on its hands and wait for the inflation shock to deliver more data and to show how much of an issue it really needs to be for policy aiming at the medium term. Some of these other economies don't have that luxury. And so what starts to perhaps occur here is this knee-jerk reaction in policy response, for example, for the ECB, for the Bank of England, it's probably something of an overextension. And so against that backdrop, all of a sudden, you look at the situation in stocks, defensive, the situation in oil, unsure. We saw that here. Stocks can't make the break. Oil is still holding up. But the read-through to bonds, the dollar, and to gold seems to be changing. Here's the bonds. They're higher today. So yields are a little bit in. Now, does that mean that there's been some sort of a change in Fed policy expectations? Well, not really. But it does seem when you start looking across the landscape that maybe some of what happened in the wake of last weeks sort of run of central bank announcements may be starting to unravel as the feasibility of some of these rate hikes and what they mean for the overall cost of credit globally starts to filter out because it starts to look implausible. So you get this move in yields that doesn't really seem to have a catalyst from oil. And then you get a dollar that, despite a pullback in yields, is edging up, suggesting that maybe this pullback in yields isn't about the US as such, but about the global cost of money. And maybe the markets overcooked that to the extent that the 10-year note is a kind of benchmark for the global cost of capital and kind of the baseline for the cost of borrowing at the 10-year maturity, because, of course, all things notwithstanding, the U.S. is still the most eligible borrower in the world, the U.S. sovereign, because it is simply the most able to pay back its debts. Its collateral is the greatest. You have a situation where perhaps what it's showing isn't so much a change in domestic U.S. monetary expectations as a change in the global cost of credit, whereby some of this tightening being expected starts to look fanciful. And so things back up. The dollar would be higher in this environment, of course, because as we just saw, based on these most recent expectations, the Fed is the most dovish of the bunch. And all of these other central banks have opened up gaps of between, let's call it about 25 or 125 basis points from the Fed outward. But maybe these things aren't sensible, even though this might be. And so if these were to turn lower, the overall cost of global credit would come in, but also the dollar would be at less of a yield disadvantage versus last week. And so some of what drove this pullback might well be fading. We can see that start to perk up here at trend support. Gold, for that matter, seems to confirm the story. So a lot of conversation about, oh, why isn't gold rallying? Isn't it a safe haven in times of war? Well, apparently the markets care much more about the fact that gold doesn't yield anything and the fact that it isn't as liquid as the dollar is. And so when you get a crisis here that seems to be a cost push inflation crisis that the markets initially judge will send central banks scrambling to hike rates, well, an asset that yields nothing doesn't look very attractive in that environment. All those forms of cash where you now get greater rate hike potential, they yield more than nothing. And the spreads are widening as of last week to gold's detriment. So it's really no surprise that it falls here. But what happens when you get this pull up in the bonds and a pull up in the dollar today? It's not usual for the dollar and gold to go up at the same time. But nevertheless, there we have it. It bounces today. And perhaps what that is about is, again, this idea that the tightening of global credit that got implied with these expectations last week maybe was a bit overdone. And of course, with that in mind, we get how the impetus for such a thing has come together. There's been, of course, a lot of focus on the headlines here and what will negotiate with whom, and whether J.D. Vance is going to Islamabad or Iran is reading President Trump's 15-point plan or some such thing. But in the background, economic data continues to come out. And so what you end up with then is a situation where all of a sudden these rate hike expectations start to look more than a little fanciful just because they come in contact with economic reality. And what we see on the screen here are the composite S&P Global PMI numbers, Purchasing Managers Index numbers, for the big economies that we just saw come out this week. And of course, what you find here is slowdown across the board and weaker numbers for the lot. So in the US, things still growing. As ever, the PMI numbers have a logic where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so what you see here is in the US, things have been slowing. In fact, they've been slowing since the middle of last year and now are at their weakest since April of last year. We see that for the euro area, we've come down to near standstill. How in the world are they supposed to hike by 50 basis points when the economy is basically stopped? Then you have the UK, where, again, still growth, but certainly a very sharp slowdown in it. You have the weakest performance here since September of last year. And when you look at what's going on in Australia, you get what is perhaps the most interesting signal of all. Because in Australia, the economy actually stops growing altogether. The reading is 47, and that, of course, is sub 50. So what you're looking at here is a contraction in economic activity. It is, in fact, the first contraction in 18 months. So what is particularly interesting, of course, about this is Australia as a commodities exporter is at the front line of the global business cycle. And also its number one trading partner is China, where it ships coal and iron ore and various other inputs into the production engine in the world's leading value add node. So if this is the kind of slowdown that you see in Australia, ostensibly, this is something that starts to look like it might begin to ripple out over time across the rest of the supply chain. So the weakness that you see in end demand markets, the UK, Eurozone, the US, those markets at the very end of the supply chain where the consumers are that buy the stuff, it may well start to look even weaker as whatever is happening in Australia moves down the supply chain and you start to see that loss of demand appear there. So how in the world are these central banks supposed to hike like this? They'll crush their economies. They'll solve the inflation issue, but I don't think anybody is really trying to solve it that way, certainly not as a first option. And so short of the kind of nuke everything and then there's no inflation kind of a response, this seems to be somewhat overdone, again, other than the Fed, which can in fact sit at standstill reasonably without the economy being as hamstrung as some of these others because there are other tailwinds to growth. And so what this ends up looking like is just a contraction in yield spreads. And while it may not necessarily have a lasting effect on the bonds and a lasting effect on gold, depending on what else is going on, it does seem like it's a prime driver for a lasting effect on the dollar, where even if risk aversion resumes and gives the dollar another haven nudge, this becomes an amplifier. And so through all of this noise, perhaps the one thing that is right is the greenback. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.